Testing. Are we live? Wait for it. Oh, wow. I already hear it. Who is that talking? Wait, why is there audio? Oh, man. Ladies and gentlemen, boys and girls, hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you subscribe. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up and support the channel. But I hope you're ready for another day of Powell. We got day 2 coming up here in about like 30 minutes after the bell, so you got a little bit more time. But today, a little bit of bad news is good news. So people are worried about recession again, but bonds are going up, and people are kind of talking about now the peak of the rate cycle. So pretty interesting. We got some jobless claims data. It didn't get worse. It didn't get better, kind of within the same range that we've been for the last couple months. So not too big of a reaction. Couple things overseas. Again, Europe and energy. Even, what's it called? Lithuania. It's pretty interesting there. I think Lithuania president even spoke this morning. So got a couple of things. It's going to have a couple of impacts, but I'm sure Powell and then a day like yesterday will be interesting. And then we got the bank stress test, and then you got FedEx earnings, baby. So I hope you're ready. But, excuse me. Sorry for talking so long. I was trying to give you the rundown. Good morning. Oh, look at the Chad. Oh, the Chad woke up like they got the spirit. Uh-huh. Oh, look at the chat. Look at the Twitch. Look at the YouTube. Oh, what's up, Scotty? What's up, Eddie? Slow motion. Good morning. Good morning, Dennis. Good morning, Carissa with the berries. Hey, man. What's up, Jake O'Connor? Zuraz, Lorraine, Justin, Leo, Casey Race. What's up, Bots? Miss J. What's up, Kingsley? Sneaky Tacos. Oh, good morning. What's up, Caesar Ray? How you living? How you living, baby? It's a beautiful day to have a good day. You know what I'm saying? What's up, Sitis, H Portis? I got tacos on both channels. We got Taco Grande on both channels. I don't know about that life. What's up, Dan Kingsley? How you living? Oh, what's up? Good morning, Kevin Rojas. Kevin Rojas coming in with negativity, but I still say good morning, baby. We love you. Good morning. Oh, because I got the spirit. They don't feel me. What's up, Teddy? How you living, Usha, Adam Law, Gene? Oh, Lucky, Dean, Derek, Amari, Suraj, Sungrown. Good morning, baby. Oh, good morning. So, Chad, I hope you're living good. I hope you're feeling good as well, too. I love to see the Chad in the morning. What's up, Hassan? Hassan, good morning. I read one of your chats in the morning, Hassan. You said, khalas. Khalas, that's it, khalas. I started giggling. I said, I like it. You made a decision in the chat. I forgot what you said. Something about a stock. And then you said, khalas. Oh, I said, oh, Habibi. Skorak, Habibi. Skorak. So, God bless America. God bless the Chad. Let's see what we got. Global bonds, they advanced after Jerome Powell spooked traders with his recession talks, and with the 10-year sliding to the lowest level in almost 2 weeks. Longtime bull Stephen Major at HSBC said investors may already be pricing in the peak of U.S. rate cycle. Futures rose while European stocks dipped. The dollar advanced amongst all major peers except the yen. Oil slipped and Bitcoin rebounded. Powell appears in Congress again today. Get ready for it. PMIs fed into the economic fears. Euro area composite PMI fell to 16-month low of 51.9 in June. Far worse than expected as manufacturing and services were both below consensus. Growth in Germany and France also slowed. By contrast, UK and Australian gauges were steady. Japan's composite reading edged up. US figures are due later. Aggressive tightening remains the theme for major central banks. Mexico will probably match the Fed hiking rates by 75 today to 7.75. Norway surprised with a larger than expected increase of 50 basis points and signaled another leg up in August. One glaring outlier, Turkey, they left their benchmark at 14%. Don't they have like 70% inflation or something like that? I think is wild. U.S. gasoline supply may have gotten a much-needed boost. Stockpiles rose 1.2 million barrels last week, the API said to have reported, in what would have been the first increase since March if confirmed. Those figures may still be a while, though. The EIA delayed several reports, including oil stats due today amid system issues. No update on when they'll come. Oh, I need to retweet that for you. Pretty much, though, the EIA, they are not releasing their oil inventories today, and that really hasn't happened in a while. So it's pretty wild to think about. So people are talking about that just because usually it's like it could be delayed by like an hour or two, but it's never really been delayed by a full day. Yeah, system issues, but very, very rare. Rare and unique, especially after seeing a build on the API. It's crazy, man. It's crazy, I tell you. It's crazy. So, be careful for that. We'll see what happens. Tesla, they're readying their Shanghai factory for greater volumes. It'll partially suspend manufacturing at various points through early August to upgrade production lines as it aims for more than double its original planned annual target to 1 million EVs. People familiar said Model Y output will go to 14,000 units a week and Model 3 to 7,700. Rite Aid, they jumped pre-market after boosting revenue forecasts. Uber explored options for Indian ride-hailing business, including a sale, but suspended discussions after tech startup valuations cratered. JP Morgan is doubling down on China tech stocks as bullish calls grows. Its flagship China fund snapped up shares of Alibaba and JD this year. FedEx is leaning on higher prices amid the easing of disruptions related to labor shortage to drive a profit to a record, where it reports post-market. Germany warned Russia moves to slash Europe's natural gas may spark a collapse in energy markets and raise the country's gas risk level to the second highest alarm phase. Russia said it paid an equivalent of $235 million in coupon payments for 2027 and 2047 Euro bonds. Crypto bad actors are in the sights of regulators, and for Binance boss Changpeng Zhao, that's setting up to be a confrontation of potentially epic proportions. Depending on who's talking, he is either pioneering a revolutionary system or running the world's largest unlicensed casino. When it's all over, Zhao may wind up under criminal indictment, or he may be the richest man in the world. Hot dog. U.S. and European banks are bracing for losses on big-ticket leverage buyouts as they struggle to offload risky corporate debt. They're sitting on an estimated $80 billion of commitments backing buyouts that'll be hard to sell in a market of junk debt. Two borrowers are considering new U investment-grade bonds today. Underwriters are looking to sell about $10.35 billion. Wall Street giants are posed to return $80 billion to investors as the release of Fed stress tests clears the way for unlevying of capital plans. Big banks expected to pass with ease are seen moderating returns as they deal with inflation, policy tightening, and the war. Results are due at 4:30 p.m. So I think Citi, they should be able to release about like $5 to $10 billion. Wells Fargo will be able to release up to $15 billion, and then Goldman Sachs will benefit the least. So, yeah, Citi and Wells Fargo, those are the ones we're watching. Shout out the bank stress test, baby. 9:45 U.S. June manufacturing PMI. 10 a.m. Powell testifies before the House. 10:30 ECB, Nigel and Villeroy speak. 11:30 $35 billion of 4-week and 8-week bonds. U.S. to sell $15 billion of 5-year tips at 1 p.m. 2 p.m. for Bank of Mexico rate decision. 2 p.m. ECB Villeroy. 3 p.m. Argentina GDP. And then 4:30 p.m. Fed releases the stress tests. My voice is clap. Yes, I think you guys are new, though, if you are on the voice. We're just in warm-up mode. You know, when you got to heat up the car? Back in the days, we had to heat up the Honda Prelude. I don't think they know about that life. It's okay. Don't worry. We're getting there. U.S. jobless claims, they inched lower to 229,000 last week from a revised 231. Continuing claims rose a tad. The composite PMI for June may ease to 52.9 with manufacturing gauges both edging down. The White House called an emergency meeting with top U.S. refiners today to discuss ways to bring down gasoline prices. Reuters reported oil refiners will try to convince the administration not to ban exports of U.S. fuel to combat record gasoline increases. U.S. plans to start testing for monkeypox at 5 large commercial laboratories, broadening the effort for government facilities as cases climbs. There have now been 142 confirmed infections. UK commuters can expect a repeat of Tuesday's widespread rail stoppage. The National Union of Rail, Maritime and Transport said a nationwide strike would proceed after deal talks broke down. The ECB still hasn't activated the bond purchasing firepower signed off more than a week ago. People familiar said some officials worry that until a decision to apply flexibility from its pandemic becomes operational, debt markets remain vulnerable to speculation that could spiral out of control. More central banks. The Philippines raised key rate by 25 to 2.5%. Indonesia held at 3.5. Most economists expect Beijing will miss GDP growth target of around 5.5 this year. Singapore's headline inflation rate accelerated to 5.6 in May, ahead of estimates for 5.5, and core picked up to 3.6, the fastest pace in 14 years. Libya's oil production has fallen to less than 600,000 barrels a day. Bloomberg estimated after Waha Oil was forced to completely shut down operations because of protests, it was around 800,000 barrels a day earlier this week. U.S. crude stockpiles rose for a third week by 5.6 million barrels. API figures are said to have shown stockpiles at Cushing dropped, as did nation distillate supply. Bloomberg Commodity Index fell to the lowest in almost 3 months as crude and most base metals declined. Copper slumped to a 16-month low, and tin was particularly a standout decliner, sinking as much as 11. Wheat and corn and soybeans also slid. The pace of IPOs has been slowing in the UK, while continent exchanges are claiming a bigger slice of the pie. Toyota sold out about half of its Uber shares after the mobility company carved out its self-driving division. The company reported holdings valued at 22 billion yen, 165 million, down from 61 billion a year earlier. Citi's Mexican retail unit is still up for grabs. Ricardo Salinas decided against buying it, saying he'd prefer to invest in Banco Azteca and compete with whoever buys Citi Bancomex. The end of easy money is raising the risk of deals dying in Europe. Banks are less willing to lend, even with the likes of JP Morgan cutting exposure to leverage loans. SoftBank's Mayoshi-san will face shareholders shaken by the company's loss of $34 billion in market value. KB Home climbed after the home builder reported EPS and revenue that beat. eBay declined as Morgan Stanley assumed coverage with a recommendation of underweight and price target of 36. Nike is leaving the Russian market entirely after suspending operations in March. Apollo launched its first private credit strategy focused on Asia Pacific region with $1.25 billion. Legal Force raises 13 billion yen from SoftBank. Nike price target cut to 130 from 165 at Credit Suisse. Price target cut 152 from 175 at Deutsche Bank. Again, Nike, 2 big price target cuts today. Ghislaine Maxwell faces spending the rest of her life in jail. 60-year-old socialite is convicted of engaging in 10-year sex trafficking scheme with Jeffrey Epstein. She's looking at 30 to 55 years behind bars. Time is money. Pre-owned luxury watches, including Rolex, Patek, and Audemars, returned 32% in the past 12 months, according to Subdial Index 50, which tracks global market prices for 50 most traded luxury watches by value. That puts the segment ahead of the slew of other alternative investments, including vintage cars, gold, and certainly crypto tokens. What? They comparing crypto to Rolexes? What? Oh, that's crazy. That's crazy. Mother Nature knows best. Golf courses around the world are for finding sustainability. Can be a winning formula as awareness grows, not only as the playing surface, but also as the environment around the course. Local communities and younger players are nudging club superintendents to adhere to better practices. Riches to rag. Terraform Labs co-founder Do Kwon, whose crypto ecosystem collapsed $40 billion in May, told the Wall Street Journal he lost almost all his net worth in the crash. "This doesn't bother me," he said in an interview. "I live a fairly frugal life." Kwon said he was probably a billionaire when the Terraform backed hit 100. That coin is now worth close to zero. So, wow. Losing a $40, that's kind of like, what's his name? Bill Kwon? Is it Do Kwon or no? What's his name? Billy Huang. Vienna made a comeback as the world's most livable city in 2022, edging out Copenhagen. European continues to rule the list, boasting 6 of the top 10 cities on the Economist Intelligence Global Livability Index. Business creation in the U.S. got a boost from female entrepreneurs. Almost half of last year's new entrepreneurs were women, a significant uptick from 28% in 2019. On this day in history, Anna Akhmatova was born in Odessa in 1889. The Russian's poet works ranges from short lyrics to intricate cycles, such as Requiem, her masterpiece about the Stalinist terror. Her work was condemned and censored by authorities, but she chose to remain in the Soviet Union. Akhmatov's first husband was executed by the secret police, and her son in common law spent many years in the Gulag, where they later died. She was shortlisted for the Nobel Prize in 1965 and nominated in 1966, the year that she died. Wow, Akhmatova. Good morning, Chad. Good morning. I hope you're living good. So there's that. We got a little bit of time. Couple of moves. Google, they got price target lower. Shares declined 0.4. Accenture, they had earnings. They didn't do good. They're down 4. Cryptocurrency stocks are surprisingly up. Funko, they're up 5.5. They got a unique upgrade. Who was it? It was Megan Alexander. I forgot what bank it was, but they said that Funko is both cheap and defensive. KB Homes up 3. Their earnings actually ended up being good, and they raised everything. Mara shares are downgraded, but every crypto stock is up right now. eBay got a low price target and coverage by Morgan Stanley. They're down 3. Snowflake upgraded to overweight at JP Morgan. Stock is up 5. And then U.S.-listed China stocks are killing it. And then Xenon Pharmaceuticals is down 12% after they did a 7 million share bond offering, or stock offering, not bond. Bloop. But ladies and gentlemen, boys and girls, I hope you're feeling good. I hope you're feeling blessed. I hope you got the spirit. But here at the Cult, before we do anything, before we try to chase the dollar, before we try to enrich ourselves, we must pay homage to the people who have sacrificed more than most of us ever have and ever will. And that is the veterans of the United States of America, ladies and gentlemen. So on behalf of the Cult, the people here, the people not here, we just want to give a huge and special shout out all the active servicemen, past servicemen, anybody who has served this country. God bless you. Thank you for your service, and shout out to the vets, baby. And don't forget about the police officers, the firefighters, the doctors, the nurses, teachers, any of the other public servants out there as well, too. We want to give you guys a shout out and say thank you for your service as well. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senator the Jets! Oh, it's game time, baby. Or nah. Oh, it feels good. It feels good, baby. It feels good. Oh, good morning, Chattadonia. We got a good day. You got Powell on the way. The bond market chilling out. People are talking peaking rate hikes. They're talking about oil and inventories and legislation. Oh, man, they don't want to hear it. I'll tell you, it's crazy. It's crazy. They're talking EIA. You got more issues in Europe. Again, in energy, Lithuania, Russia. It gets, oh, man. So it's going to be an exciting one, Chad. We got a lot. We got just about a minute and a half. Okay, and I got a couple of plays. FedEx and Wells Fargo and Citi. Like we said, all of those are going to be happening today after hours, so we'll see where Powell takes us in the meantime. Right off the bat with KB Homes, again, a lot of doom and gloom on real estate, but KB Homes, new home builder, they reported they did good, and the numbers are looking great, even the prices, margins, and everything. Google, again, they got an upgrade, but somehow they went down there. And then Netflix with that ad news, if we get a little bit of a follow-up, I would love to see that. Funko, I think that could be an interesting one now that they got the analyst, and it's kind of a meme play, but we'll see what happens. Again, I know we got Chads who like it. Then SPIR, what was it with SPIR? Hold on, I had something with them. Spur, where is Spur? Oh, what was it? There was something on Spur. I have it on my list. Oh, there it is. They've been awarded a $6 million 12-month contract extension by NASA. So Spur is already up on that. Space-based data analytics. And then ConocoPhillips for oil. Just because if oil goes any lower today, I think it could be an opportunity. Oh, there it is. Round 1. Fight. So where'd we open? 0.03? 0.5, 0.32 on the Dow. Oh, excuse me. Okay. All right. Sorry. I had to get that sneeze out there. 0.7 on the NASDAQ. We'll check where things are. Again, KB Homes right off the bat with some of the builders. You got a couple of upgrades and downgrades. Kind of moving things. It looks like bank stocks are down leading into this. FedEx's might go negative. Again, watch out there with anything earnings related. Crypto companies are doing good today. KBH. Tiger up 2. Yeah, KB Homes is up 5 right now. Again, with all of the real estate doom and gloom, people are liking that. NVIDIA up 1. Roku plus 2. This is good. This is good. Again, watch the Netflix. Again, that Netflix news yesterday I thought was interesting. But it's been 2 times you haven't seen a reaction. So we'll see. My KB option chain hasn't loaded. Uber. Again, Baba sold out of Uber, or somebody did. Uber's up 1.7. Travel's kind of doing decent today. Airlines are down. Let's see. Actually, booking's down too, so maybe Airbnb will flip. Baba's up 4. Yeah, Baba is actually killing it. They are killing it. Yeah, Snow got to upgrade in the morning. Warren Buffett increased huge position with Oxy. Did he really? I saw a couple people say that in the morning. I'll have to go look through and confirm it. I feel like that would have hit some of the top news, but we'll double check. But that could be big. Again, I think we have a little bit more, depending on what oil does. I'm like I said yesterday on the watch list, I would be considering going a little bit back into it. Apple and Amazon going. FedEx on the low. Apple and Amazon still 1.2. SPY up 0.48. NASDAQ 0.6. Dow 0.3. GGPI up 4.8. It's like 10 million, 16% of Oxy now. Good guy. Yeah, Rite Aid, they've been a winner. I don't know if there was another upgrade or they had good earnings. Nail up 5. That's probably because of KB. KB on the low. Let's go. FedEx 228, break even. XLU. XLU looks nice. Watch XLV as well, too. Again, that would be kind of your safe haven rotations, but they're both up the same amount. Banks are dropping. Yes, Wells Fargo's down 1%. Where is the FedEx? So we're up on the FedEx. Wells Fargo, you're up a little bit too. Neo, massive dump. Starbucks, Uber. KB Homes is holding. ACAD's up too. Be careful with ACAD. They got like, remember they had that update and then a couple days later they had another negative update or something like that. I forgot what it was, but they have something with like a little bit of back and forth. City's down 1.2. Boyle 2.9. Again, you got the refinery gas meeting with the White House today. Microsoft and big tech, they seem to be holding on. Netflix is down. Google, they're not up as much as Amazon and all that. KB Homes option chain finally opened up. Maybe it starts moving now, actually. I don't know if it's going to film me. Peta. XLU. No, there's up like a decent amount. No, I'll back out. It's not filling me. EWG 23.6. ASON up 5. Labu up 5. JPAL at 10. Yeah, JPAL is coming on 30 minutes. In 30 minutes. Yeah, it didn't film me on that. Grab Meta. August. Where is Meta, actually? And then watch the banks. They've made a big move already. Right off the open, see where they come from there. Meta's up 0.3. Remember, they were up like 3% yesterday and then came back down. Disney price target cut at Bank of America, 122 from 140. Apple's on the low. SPY is coming down. TLT fairly stable. Dollar's up today. except against the yen. So, again, that's been a little bit weirder. Stress test results come out at 4:30, so 30 minutes after the bell. NVIDIA is on the low. So is AMD. Netflix has been kind of a little bit weaker here today relative to the bigger tech. AMC, even they're dropping. Wells Fargo kind of coming back up. FedEx starting to move to the high. Semiconductors, they have been slowing down. Just at the end of the day, that deflationary wave being, the top commodity to now, people calming down. I think that's it for now. And that's why people are waiting on the next level, because where it goes from there, it'll get crazy. KB Homes is coming up still. So KB Homes up 6%. They were 4% after it. Japan ready to raise taxes. My auntie is a hawk now. Get ready. You got Powell. FedEx moving up. KB Homes again. Oh, no. Which is the other one? Wells Fargo. Citi. All the banks still down. China EV was up. Like Li Auto was up 9 today. Still doing decent. Baba sold off a little bit. Tesla's red. That one's a little surprising. PEV going. KB Homes still going crazy. MO's up 2. Well, that's good from yesterday. Pepsi, Coca-Cola, they're all positive. XLV, healthcare still killing it. Same thing. XLU, they're doing great. Airbnb flipped again. The travel names, I don't know. They just were not holding this morning. Roku just flipped. Netflix. So kind of a weird mix today. Consumer staples, real estate, utilities. Actually, all the safe havens are up right now. Discretionaries in tech are kind of in the middle. And then materials and finances are down. So right now looks a little bit more safe haven. Just right off on the first step. So we'll see how this plays. Powell's going to come on in 30 minutes. You will have Jerome Powell here in 13 minutes. I think in like 10 or 20. Maybe 9:50. FedEx is literally staying pinned. LNG on the high. Conoco, Oxy. Oxy's still up 3. So, again, I'd assume that's the Warren Buffett effect. Wally World. Walmart's up 1.6. Doing very good. And, again, in line with the theme today of some of the values and consumer staples holding up. XOM pinned. SPY's at the low, 375. So, again, 379. That's that range we're trying to break out of. Not occurred. Is not occurred yet, just yet. Kirkland up 10. FedEx put premium higher than yesterday. The call premium is even up now too, though. A little bit. Let's see again. I think it's going to be an interesting earnings for them. Yeah, the spreads are just wide. The stress test is coming out after hours. So you're already even getting some movements. Wells Fargo's climbing up. JP Morgan. Wally World, yeah, it's universal. I love Wally. We got Wally World, Quali World. But Wally World is a fan favorite. Qualcomm's on the low. AMD. Again, FedEx, we went both ways on it. Obviously, we would make easier money on the downside. But the thing about FedEx is, like I said yesterday, it is just at a multi-year low. So it is just at such a key level over the last couple years that I just really think wherever it goes from this earnings, it'll probably be big. Yeah, XLUs are up over 100% now. So that one's nice. And then those have till July 15th. UNH still rocketing. Test for VWAP then drop. Well, you got a nice candle there. Bonds are dropping. Again, the dollar's up today, but the yen is down. It's been a weird back and forth, so let's see. TNXP getting traction. Next monkeypox play. CODX monkeypox. So 2 monkeypox plays posted in the chat. I think I've been seeing a lot of monkeypox plays this morning. Alcoa is down. Apple, nice little candle there. Back to VWAP after that little green shoot, but we're really right where we just opened. Only about 10, 11 minutes in. Apple's at the low, but they're still green. Facebook is negative. Netflix is negative. Google is now negative. Amazon is negative now. Yeah, KB, the plays doubled. I was going to go for one. I didn't execute it, but the plays have already went up a decent amount. Pinduoduo up 3. Coca-Cola up 3. Haven't they rebranded monkeypox? I think they're going to. Baba, Vertex, VRTX on the high. Kohl's is on the high again. Baba's going up now. Coin sold off a little bit. Drink more water. Don't worry, we're still warming up, man. It's been 12 minutes of market. You know what I'm saying? Tesla's on the low. It was rebanded to MPX. Now Harambe Pox. Okay, there you go. PMI's in 3 minutes. Yeah, actually. Where is it? Yeah, 9:45. Manufacturing, services, and composite PMIs will be released. So it actually could cause a move. Watch bonds and dollar. Airbnb non-gas. Wow. I don't think I've ever seen you post that. That's insane. I don't know how I feel about that. It's kind of concerning. Yeah, booking, dude, travel just clapped. Again, it's interesting because you're watching the dollar kind of chill out and you're watching oil, but all the travel names, again, we found out news, Baba cut their stake in Uber, but surprisingly, they're up there. Microsoft bouncing. SPY's going up. Minute and a half till PMIs. Baba's still gassing. KB's still going up too. That one is a slow mover, but it's holding. And again, keep this in mind for the real estate stuff. But 7% is pretty big. Oh, yeah, Toyota. Excuse me. Yeah, thank you. Thank you. You're right. Toyota. I really thought it was Baba, but I remember it was just some Asia company. But yeah, it was Toyota who cut their stake by like 60%. JD's coming back up. See, HD's killing it again. Anything consumer staple or even on the middle doing very good. That trend today of the staples in real estate, utilities leading, healthcare, they are leading by like 4 times. So pretty much tech is like 50-50, whereas all those other industries that are staples are just, they're killing it. Yeah, XLU looks great. That's 100% in 2 days. So actually going higher than that. I wish we got the XLVs, but I'll take one over the other. But that's good. Oh, whoa, bonds. PMIs came in. Global manufacturing PMIs came in 52.4. Estimate was 56. So that was negative. Services came in 51.6. Estimate was 53. And then global U.S. composite came in 51.2. Estimate was 53. All of them were bad. I don't think they were too big of a miss, but I believe 52 or near 50 is around a contraction, but all of those came in below estimates. Now, we might go a little lower. Bonds are shooting up. Remember, the big worry this morning was recession talks. So if all of your PMIs are kind of near contraction, it just does not look good right there. Where's the dollar? Is it shooting up? It's already up. The yen is just strengthening today, which, again, giving us a weird movement. But bonds are reacting to that. PMIs were negative. We weren't doing much. This might unlock a little bit more of downside. We'll see how it plays with yesterday's range. Yeah, but today is more, again, like we said yesterday on the watch list, every other day, if there's no data or Powell or even before, after Powell, everybody is going to just argue, are we worried about inflation today or are we worried about recession? Today was recession. Again, you had European PMIs this morning that were not good. Our PMIs just came in. We just sold off that little mini bounce, hit a new low, but we'll see how long this lasts. And just keep an eye out for the dollar and bonds. Toyota cut their stake in Uber. So they had about, I think, like, how many won? I don't know what it was. I will find. They have it pretty much. They cut it down to like 20 or 130 million, and they had a lot more. So yeah, they had 100. They only own 165 million, where they used to own like 300 or 400 million. And that's Toyota selling off Uber. FXY green. Yes, the yen is strengthening today, surprisingly. So that's what I'm saying. The dollar's been wacky this whole week, all of the global currencies. But pretty much the yen is strengthening today, even though the dollar is strengthening. So that means every other global currency today is getting weaker except for the yen and the dollar. Both of them have more strength. And again, I don't know how to apply that there with some of the more recessionary fears we had, but we'll see. Bank of America cuts Netflix. Financials kind of holding. FedEx just juggling. PLL on the low. Yang calls. JP Morgan was bullish on China today. But I got those other ones. We'll see. No, you could sell the XLU if you want to make them free. I'm still holding them. But they are up over 100%. No, they did sell. It had to do with the self-driving unit, but they sold Uber shares. So literally, Toyota sold half of Uber shares after the mobility company carved out its self-driving division. So their total holdings of Uber itself have dropped. Market green. Apple, did you vote? There you go. 2,000 voters today, Chad. You think it's going to be green or red day? Make sure you like the video and get ready for Powell. Powell should be coming on in a couple minutes. Is it possible a car manufacturer buys Uber? I don't know if they're allowed to. I feel like you might eventually get a antitrust to a degree, but we'll see. Citi, Wells Fargo, JD and Baba killing it. So is YY. Baozun, a lot of China names on the high right now. C-Web, literally like 10 tall. There's like 10 different China names, all just hitting a high right now. Pinduoduo. Baba. And then TLT is up. We're back to the same level before the PMI release. We're going to get the Powell pop. I don't know. I think it might be like yesterday. People are going to be focused on it, but we'll see what happens. It's just really, I think it'll be long eventually. I mean, I think Powell isn't going to give too much, but we'll see what happens. If he comes out with the bombshell, if he uses the word unconditional, then you will get your answer. DraftKings new high. Jeez. Everything except like travel and then a couple of the tech names. They're just not playing along the same way. But tech is only up 0.37. NASDAQ's doing the worst. Dow Jones is up 0.52. S&P up 0.45. Net, Microsoft, Cloudflare integrates with Microsoft. Airbnb keeps dropping. Yeah, travel stocks are slumped right now today. Very interesting, especially with oil. And then yen keeps strengthening right now. Yeah, crude is barely down. Today is so weird. Today, again, if anything, today sparked an attitude of bad news is good news. So again, most of the Europe stuff, recession fears, everything, people were reacting to bad news, but you got to realize now, why is bad news starting to be interpreted as good? Because rate hike odds are starting to change. So now as we talk more and more about recession, we're kind of watching the bond market change over the last 2 days. And again, I brought this up yesterday on the watch list. I'm telling you, this is going to be huge. Watch the Fed futures. Go watch the investing rate monitor tool. But literally, the long-term expectations of rate hikes after November, they are already starting to drop. Pretty much, people are expecting Powell to, believe it or not, slow down the rate hiking as we get into November. So that right there could be getting the bonds to start catching a bid, as people are assuming, well, maybe the cycle of the Fed being aggressive might come to an end around election time, which makes a lot of sense. Again, we've even talked about this a couple months ago, if you remember. So you don't know. You don't need to know. That's the beauty of it. This has nothing to do with opinion. Just go look at the Fed futures and you'll notice rate hike odds over the last 72 hours for anything after November has all started to decline by a pretty decent amount. Let's see. Coming down 375. Yeah, airlines, they have a lot of strikes right now. Net is on the low. Yeah, Voyager, thank you on that one. It's up 18%. Tesla's hitting a new low. I've only held one deposit for now. Again, we got our deposit in June. Our last purchase was in May. So I'm going to wait up here and we'll see. I got like a couple days to react if I want to purchase JP Morgan before ex-dividend. But I guess today we will be waiting for, what's it called? We will be waiting for the stress test. Link for Powell. When he comes on, we'll have it here. I think you could just search it anywhere. So they're piling into the room right now. But SPY, again, watch these candles as we hit the low. Bigger tech is just not holding on today. Again, more defensive industries are doing their thing. There you go. We're waiting. And then bonds keep going up on any of these moves. Again, keep that in mind with recession expectations, rate hike odds, all of that, because that has been a big driver. Okay, get ready. Wait, I think he comes on in give him 10 more minutes. Am I buying Airbnb? I will. I'm going to wait for it. Again, I think if it gets to 90, I've pretty much bought a leap every $10. So we'll see as it gets there. But yeah, I mean, I'm not against Airbnb. I think it's going to have to deal with high expectations. I think everybody's going to react a certain way, but I'm still fully all about that life. What is this? How about Amazon? Amazon's just clapped today. Comparatively. All the experience Airbnb matters on the owner. I've been seeing a lot of people laugh at it lately. They're like, Airbnbs are getting ridiculous. They're like, I went to an Airbnb and they had a list of chores for me to do. They're like, why am I going to spend more than a hotel to go to a house and have someone make me do chores? It's not for everybody, but then sometimes it is. Lithuania accuses Moscow of propaganda battle. I think Airbnb is sick. I do too. Again, we talked about it. The biggest thing right now with like a travel name is that the travel names are coming down, whereas the guidance has been good. So this quarter here, I mean, I really think it could rocket if they do beat high expectations. But like I said, it's going to be tough comps to beat. And I don't know if the market is going to reward them. That's even if they do good. Again, that has been the case for Booking, Expedia, Airbnb. People are expecting them to do good. Even if they did do good, prices didn't hold up. So we're going to see what happens. But I'm still in the market for Airbnb for sure. Germany's 5 years set for the biggest daily fall since 1998. Yeah. Again, Europe, and that's where some people are saying bad news is good news today, because as the recession talks and other data fails, people are saying maybe we're closer to recession than not. If we're closer to recession than not, that means the Fed will stop raising rates, and that means TLT will start climbing again. Are bond and shy plays in play? Yeah. It's going back and forth. Again, these are, like I'm saying, this is where all the moves are really happening and explaining kind of what we're seeing here. But, I mean, are they producing big plays? Not necessarily, because when it stays in the range and doesn't really move much, you're only going to make so much. You lost your sub tag. Maybe you did, or maybe take a look. You'll realize you're on another channel right now. So make sure you like the video and make sure you subscribe to this channel. We love you and God bless America. XLU, SPY, TLT, everything's making a rip right now. FedEx is on the low, but some of the other value or the tech plays are starting to make a little comeback here. Microsoft's at the high. They were not on the high earlier. Will the euro be able to get out? We'll see. Baba Strong. All the China stocks are on fire today. Snagged a great Airbnb in Cape Cod for my wife's 40th. Amen, baby. Amen. That's the Airbnb, again, it's hit or miss, but sometimes that's why that's what literally created Airbnbs, because, like, you're like, what, bro? I just got this house for this price, and then it's, like, really dope. So that's good. I hope it's a nice one. We have not dropped below VWAP really all week. Today was kind of the first time. We're kind of just stuck in the range. If you think about it, last 3 days, we've just really been up here. So that's why we're saying watch for 379 for a break. When it does break, it'll start to go crazy. So we'll find out. Shy puts rocked. Those are till August, but yeah, I think they did end up getting clapped. But that play, like I said, I wouldn't be surprised if we see something, but definitely if it makes another move, it'll be like the EWGs where they clap us. But I still like all of the rate plays. Again, like we're saying, this as an indicator, it's telling us a lot. Jay Powell's going to start speaking any minute now. Odds of a recession, I mean, they've slightly increased a little bit, but nothing really too crazy. Again, it's one thing about odds of a recession versus odds of rates coming down. Uh-oh, there's Powell. Look at it. That's him walking out. That's new pictures. This is always going to lead to new pictures. Dude, look at all these. I wish I could be a Powell photographer. Oh, that guy's short. He always looks so much taller with his outfits. He looks like me. Like, he looks tall when he sits down, but that's like, nah. What just pumped the market? Nothing. I think maybe Powell sitting down was very exciting for people. Other than that, bad PMI data. We hit a low, then kind of bounced there. We were kind of near the lows of the last couple of days and where we closed on Tuesday. I've not made XLU free yet. Not yet. It's the anticipation. It could be. I mean, watch that 379. I mean, SPY's up 0.71. NASDAQ back up to 0.75. Yeah, tech came up a little bit. Tech and communication and discretionaries. Financials are now positive, but it's now tech getting a little bit of a boost and then just being led by all of the defensive names that held up today. YY, more China moves. IBB is on the high. MDB too. Baba going again. YY and a lot of other China names too. Now, FedEx, we just did the share play again. If you watched yesterday's watch list, you could see the play that we made on it.
The chair is authorized to declare recess of the committee at any time. Before we get started with today's hearing, I would also like to ask unanimous request to adopt this resolution that was made available to all members that names our newest committee member, Mr. Norman, to his subcommittee assignments.
PEV? Wasn't this on the high earlier? Yeah, this thing was up like 50%. Now it's only up 24%. Tesla's staying down. XLU's getting some red candles. Tesla's down a decent amount, but it got to bounce with everything else.
I now recognize myself for 4 minutes to give an opening statement. Welcome back, Chair Powell.
Get ready for Powell. Have some fun. I don't know if we'll listen to this one as long. We'll see how it goes. I'll give you any updates in the meantime. And have fun. God bless you. The cult loves you, and the cult is here. I will be here. So don't you worry.
Housing, gas, and groceries have skyrocketed. While it is important for the Fed to fight inflation, I would caution against any approach that ignores the Fed's maximum employment mandate and results in a recession with millions of people losing their homes and jobs. I hope you will also note that you should have noted that last week the House passed my bill, H.R. 2543, the Financial Services Racial Equity, Inclusion, and Economic Justice Act, which directs the Federal Reserve to consider the impact of all of its decisions, including setting interest rates on communities of color and underserved communities. Congress has a role in fighting inflation also. Housing is one of the largest contributors to inflation, and the housing shortage has allowed corporate landlords to hike up rents, forcing families to make difficult cuts elsewhere in their budgets. The Fed's interest rate hikes will make borrowing more expensive and thereby could help reduce out-of-control housing prices. But without action by Congress, inflationary pressures will remain because there is simply not enough affordable housing being built, and there won't be until Congress makes necessary investments. That's why it's so important that we pass the housing title of the Build Back Better Act, which provides over $150 billion towards new housing construction, modernizing existing structures for the long term, and providing supports to people can be stably housed. We're also facing corporate consolidation and greed. Without healthy competition to drive down prices, mega corporations driven by profit are exploiting their economic power to squeeze Americans to the breaking point. Democrats in Congress put forth solutions to tackle inflation, but my colleagues across the aisle have consistently voted against every solution. Let me go over some examples. Democrats passed a bill with $28 million in funding to address the baby formula shortage, but Republicans voted no. We passed legislation to crack down on price gouging from oil, gas companies, and Republicans voted no. Last week, Democrats passed my Racial Equity, Inclusion, and Economic Justice Act, and you guessed it, Republicans voted no. Republicans can talk about problems, but they have zero solutions. Let's also not forget that the Federal Reserve has more duties beyond monetary policy. Bank mergers and banking deserts are affecting access to credit for low-income consumers and communities of color. And working families who turn to cryptocurrency to generate wealth are now seeing their hard-earned savings disappear. Now more than ever, the Federal Reserve must work with other regulators to properly oversee the cryptocurrency market and provide guidance on a more stable alternative to volatile cryptocurrencies. Lastly, the confirmations of Lisa Cook, Susan Collins, and Philip Jefferson are historic, but more must be done to ensure diversity at the Federal Reserve. So, Chair Powell, I look forward to hearing your testimony this morning, and I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes to give an opening statement. And for those who may have, please get muted
No, she
so
mad,
that
bro.
Mr.
Maxine,
McHenry
bro.
can give his statement.
Bro, don't get
Thank you, Madam
Maxine.
Chair, and thank you, Chairman Powell, for being back with us. A year ago, President Biden tried to buy support by signing into law a $2 trillion stimulus bill. What he did was sell out ordinary Americans who are now repaying all that quote-unquote free money. Inflation is the worst it's been in 40 years. American families are rethinking their long-awaited summer vacations because they can't afford a $5 a gallon price at the pumps. Costs are spiraling out of control for everything from housing and food to airfare, cars, medical care, and clothing. Democrats are still on the hunt for the scapegoat. They blamed oil companies, the war in Ukraine, and supply chain issues in Asia. But let's be clear. It's the Democrats' trillions in wasteful spending that resulted in higher grocery bills and soaring gas prices. President Biden continues to deny that the so-called American Rescue Plan contributed to inflation, recently calling that idea, quote, bizarre. Well, economists across the ideological spectrum, from former Clinton Treasury Secretary Larry Summers to Jason Furman to Michael Strahan, don't think it's bizarre. Even the left-leaning San Francisco Fed found that the American Rescue Plan contributed to price increases. So now millions of Americans need to be rescued from the Democrats' American Rescue Plan. I'm confident Chair Powell is taking this emergency seriously. And as I've said many times before, I think he's the right man for the job, and he is. But how the Fed manages the next few months will be as critical as any other period during the last 4 decades. No one at the central bank was prepared for prices rising at a clip of 8%, with even core inflation rising and running at 6% now. Republicans have long warned about the size of the Fed's balance sheet, but it grew by nearly $1 trillion over the last 12 months alone. And now it seems the previous predictions by the Open Markets Committee about economic projections are wrong, and they are altering course. Simply put, the Fed has its work cut out for it. Lastly, I want to address the left's ongoing efforts to expand the Fed's dual mandate. Republicans have been on the record opposing this, and I hope that the skyrocketing inflation unleashed under the Biden administration puts an end to these discussions. The Fed should be focused on price stability. That should be their single-minded focus at this moment in time. It's out of touch for Democrats to keep pushing mission creep at the Fed when American families are struggling to feed themselves and to get work. The Fed is a serious place with serious business to attend to. It needs to focus on the middle class, not the chirping political class. This was true before inflation broke out. It's all the more obvious to today. I hope that Chair Powell will deliver that message to his colleagues throughout the institution. And again, I want to thank Chair Powell for his testimony. Thanks for his willingness to engage with policymakers on the Hill. And thank you for his openness in what has been a more closed-off institution. We have a mess to clean up. And we know that you're taking your job seriously. I'm glad you're taking your job seriously. And with that, Madam Chair, I yield back.
Thank you, Ranking Member McHenry. I now recognize the Chair of the Subcommittee on National Security, International Development, and Monetary Policy, the gentleman from Connecticut, Mr. Himes, for 1 minute to give an opening statement.
Thank you, Madam Chair, and welcome, Chairman Powell. Congratulations on your confirmation. I don't remember a moment as consequential as this one for the Federal Reserve, or as potentially testing of its leadership. I think I have to go back to the end of 2008 and the first quarter of 2009 to think of a moment that was quite as important as Americans watched the economy collapse around their ears and their jobs and assets being lost. There is a very real possibility that Americans will be caught in a vice, an economic vice, not of their own making, between inflation, which makes their everyday lives unaffordable, and the possibility, much contemplated by economists, of a recession. Simply put, as one of the last members of Congress to get out of the chamber when it was under attack on January 6, 2021, I don't believe that our democracy can sustain either runaway inflation or another recession. And despite the rhetoric you'll hear all day today here, there's not a lot that we can or will do. Much of this rests on your shoulders. So, Chairman Powell, I just ask that as you make your decisions, you think not just of the numbers and the economics, but of the importance of sustaining this nation's democracy.
Thank you, Mr. Himes. I now recognize the Ranking Member of the Subcommittee on National Security, International Development, and Monetary Policy, the gentleman from Kentucky, Mr. Barr, for 1 minute to give an opening statement.
As we face the worst inflation the country has seen in 4 decades, I am encouraged to have Mr. Powell leading our central bank, and I'm hopeful the Fed will rise to the occasion. At the same time, it's important to remember the following. Just last year, Democrats were ignoring inflation warnings to pass a $2 trillion stimulus bill. They were pushing the Fed to solve climate change and social ills, and they flirted with unconventional monetary tools like yield curve control. Today, as gas prices top $5 a gallon, these left-wing ideas seem like a fever dream from an alternative universe. But many Democrats fell for them at the time, and they'll likely pursue them again if inflation subsides. The lesson for the Fed is clear. It needs to focus on doing a limited number of jobs well and not get distracted by those who want it to be all things to all people. Specifically, the Fed should be laser focused on its price stability mandate. And even as you acknowledge the risk of recession and as everyone desires a soft landing, I encourage the Fed to have fortitude to prioritize defeating this inflation scourge. Chair Powell, I hope you are hammering this message home at the Fed as ordinary Americans see their paychecks eaten away under Democrat mismanagement of our economy.
I want to welcome today's distinguished witness, the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Without objection, your written statement will be made part of the record. Chair Powell, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. And I'll begin with one overarching message. At the Fed, we understand the hardship that high inflation is causing. We are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability.
See if he says the word unconditional. That will be the key.
It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.9%. The available data for May suggests that the core measure likely held at that pace or eased slightly last month. Aggregate demand is strong, supply constraints have been larger and longer lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and fuel and is creating additional upward pressure on inflation. And COVID-19 related lockdowns in China are likely to exacerbate ongoing supply chain disruptions. Over the past year, inflation has also increased rapidly in many foreign economies, as discussed in a box in the June Monetary Policy Report. Overall, economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The tightening in financial conditions that we have seen in recent months should continue to temper growth and help bring demand into better balance with supply. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historic highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. A box in the June Monetary Policy Report discusses developments in employment and earnings across all major demographic groups. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and price stability for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials, like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. With inflation well above our longer-run goal of 2% and an extremely tight labor market, we raised the target range for the federal funds rate at each of our past 3 meetings, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. In May, we announced plans for reducing the size of our balance sheet and shortly thereafter began the process of significantly reducing our securities holdings. Financial conditions have been tightening since last fall and have now tightened significantly, reflecting both policy actions that we have already taken and anticipated actions. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. We will make our decisions meeting by meeting, and we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We're highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well-positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you very much, Chairman Powell. Chair Powell, at your Senate confirmation hearing, you were asked about the possibility that inflation is being driven by corporations in concentrated sectors of the economy. You said, and I quote, "That could be right. It could also just be, though, the demand is incredibly strong and that, they're raising prices because they can." quote unquote. We're all seeing and feeling the effects of inflation on consumer pocketbooks, but corporate profit margins are not hurting. In 2021, the profit margins of the S&P 500 index surpassed 12%, the highest profit margin on record, and is expected to be even higher in 2020. Corporate greed and consolidation are driving higher and higher prices for consumers above and beyond any inflationary pressures. Just last quarter, Tyson Foods, which sells 1 out of every 5 pounds of meat sold in the United States, claimed that their higher prices are due to rising labor and freight costs. Yet, they still managed to net an additional $500 million in quarterly profits. When it comes to rents, a corporate landlord recently remarked, and I quote, "We have an unprecedented opportunity to really press rents on renewals because the country is highly occupied. And so, where are people going to go? They can't go anywhere. We have a tremendous opportunity to press both on renewing leases for existing residents and to reset market rates, which we've reset numerous times, even this year," end of quote. This kind of blatant profiteering on the backs of hardworking families is simply outrageous. Could you elaborate on the role that corporations play in setting prices and how that is affecting inflationary pressures today? Would you also elaborate on what you meant when you said perhaps corporations are raising prices, quote, because they can?
Sure. So matters of concentration in the economy represent a series of interesting questions that are largely not settled. For one thing, it is clear that our economy has become more concentrated, largely due to lower levels of formation of smaller businesses. That has happened. It is not at all clear that there's a connection between a more concentrated economy and, for example, inflation. And of course, matters of corporate concentration are outside the jurisdiction of the Fed. Those are for the competition authorities and really not for us to discuss. In terms of why prices are going up, I think a lot of it has been, a lot of the places where prices have gone up quite a bit have been situations where supply is constrained and demand is very strong. And so take cars, for example. The demand for cars went up a great deal. During the pandemic, people wanted to ride in cars rather than public transportation, and they wanted to move to the suburbs and things like that. Rates were low. The economy was stronger than people expected. But the companies couldn't really make more cars because they couldn't raise their output because of the lack of semiconductors. So when demand hits fixed supply, what happens is prices go up and margins went up. And so I think as the economy returns to normal, we would expect those profit margins to return to more normal levels.
Well, Chairman Powell, the example that I gave of Tyson, who said their prices were rising because of labor and freight costs, and yet they managed to net an additional $500 million quarterly profits.
I apologize. I'm having a hard time hearing your words. I'm sorry.
Okay. The example that I gave of Tyson Foods and the fact that they said that their prices were rising due to labor and freight costs, yet they managed to net an additional $500 million in quarterly profits. How do you explain that?
I'm not familiar with their profit and loss statement, but I will say, and again, there may be particular industries where there are competition issues. I don't know that. It's really not our focus or our authority.
Well, do you have the opportunity to look at rising costs and identify corporations where they are gaining substantial profits, yet they keep raising their prices? Do you have a way of examining that?
I think we can see that, but I think, our job is to keep, maximum employment and price stability. So we're not in the business of regulating individual companies or determining whether their actions, for example, are anti-competitive or that sort of thing. That's more for elected people and also for the competition authorities. So we do look at that, But again, I think a great deal of the price increases that you saw were a matter of supply being unable to meet demand, and the result was prices moving up. In many cases, that was the story.
Thank you very much. The gentleman from North Carolina, Mr. McHenry, who is the ranking member of the committee, is now recognized for 5 minutes.
Thank you, Madam Chair. I would, on this debate about corporate profits, I would commend to the committee Secretary Yellen's statement where she rejects the idea of corporate greed is to blame for inflation. And I concur. We have a complex set of issues. The fiscal house was certainly different than monetary policy. And the extraordinary nature of the partisan American Rescue Plan, $2 trillion injected into a recovering economy, and Democrat policies to keep people out of the workforce for longer than the rest of the Western world also contributed to inflation. So that is a political debate here on Capitol Hill, Chairman Powell, and that is on the political side. What I want to ask you about are the policy tools that you are using. Now, certainly you, as chair of the Fed and the Open Markets Committee, took extraordinary measures in the midst of the pandemic to ensure that we didn't have further contagion, and including extraordinary lending facilities, purchasing securities, keeping the federal funds rate at zero. These were the right tools at the right time. On the fiscal side, you had to partner with bipartisan bills to keep our economy afloat during government shutdowns. But like all the good firefighting measures, we should put them away when times change. I want to talk to you as you put these measures away, how you expect the economy to respond. So let's start here. What is your level of commitment to fight inflation?
Well, so it's unconditional, our commitment is, and the reason is that we need to, in a particular situation, we have
he said it.
Labor market that's sort of unsustainably high.
Let's see how that goes. He said the
We're very far
word.
from our inflation target. We really need to restore price stability, get inflation back down to 2%, because without that, we're not going to be able to have a sustained period of maximum employment, where the benefits are spread very widely and where people's wages aren't being eaten up by inflation. Really, it's something that we need to do, we must do, in order to have that kind of a labor market. We'll need to do it.
So as you pull back these emergency measures from COVID and you normalize rates to what they look like sort of in the long run, how do you expect the economy to respond?
So when we raise interest rates, and also to a lesser extent when the balance sheet shrinks, what happens is rates go up across the economy and financial conditions generally tighten. And you can think of it as in interest-sensitive spending is an important place that'll be affected, and that's things like automobiles and other durable goods. If rates are higher, then demand for cars will moderate, will decline a bit. The second channel would be asset prices generally. We don't target any particular asset prices, but higher interest rates tend to bring them down broadly. That tends to mean a little bit less spending because people's wealth has perhaps declined a little bit. And the third channel can be the exchange rate, where that also has disinflation effects. So overall, we have these effects on the economy. Our intent, of course, is to bring inflation down to 2% while preserving a strong labor market. As I've mentioned, that has become significantly more challenging with the events of the past few months, particularly the war, which is driving gas prices up and raising energy prices and also food prices and disrupting supply chains further.
So at the same time, you have a massive balance sheet. First begin with mortgage-backed securities. As we have a roll-off of the Fed's balance sheet of mortgage-backed securities, what are expectations for how that affects housing?
So I think what will affect housing is the rate. The housing industry and market are slowing down from a very, very hot pace, and that's partially because of higher mortgage rates. The effects of shrinking the balance sheet will be marginal compared to the effects that we're seeing and expect to continue to see from rates rising mortgage rates.
But what are your expectations and any further announcements? Can we expect further announcements on the assets you hold and the securities you hold? Or are there going to be balance sheet announcements in the coming weeks?
No, I would say this. We have a plan. We've articulated it. The markets are forward-looking. They see it. And the markets are in a good place, I think, understanding what we're going to do. And that's, we're going to be allowing these securities to mature and run off our balance sheet at a pace that we've said. And it'll be 90 or 95 billion, I guess, by September. Now it's about half of that. So that's what we've done, and we expect, the idea is that that'll just be on an ongoing basis in the background, and we think the markets can handle that. Treasury issuance is way down, so we think there will be demand for these securities. The Treasury will then reissue them in whatever form they think is appropriate when it relates to Treasuries. So,
Thank you.
The gentleman from New York, Mr. Meeks, who is also the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Madam Chair. Mr. Chair, it's good to see you, and I know you'll hear a lot of probably political stuff going back and forth, but the American public is trying to understand the language of which we're talking today so that we can really understand what inflation is. Fact of the matter is, I just recently was over
Gun
in Europe.
stocks are popping out of nowhere.
There's inflation in
SWBI
Europe,
and Ruger.
just like there's inflation here. Although, as I
then
talked
again,
to
we got the
Christine Lagarde and
unconditional
others,
statement.
they say the
So
cause
we'll
of the
see.
inflation
No
may be
reaction
different.
so far.
So if the causes are different, they said that maybe demand here, but not a case of demand there, is to resolve inflation in Europe. For example, I was in Moldova, 30% inflation rate, gas $15 a gallon, Turkey 80% inflation rate, gas $13 a gallon, and I could name places in Europe from Europe to the United States. Is it that we had, whether it's the supply chains, the China shutdown, complete shutdown, the zero COVID policy, Russia's war in Ukraine, COVID period? Isn't just a massive storm of everything is what contributes to inflation and causes it all over the world?
pretty much. Yeah, that's a pretty good description.
It's a little bit of everything, right?
But
So
it's-
if I'm
it's
talking to my
different.
constituents, trying to explain to them what inflation is and what causes it, I would not single out any one thing. I would probably have to talk about the conglomerate of things, because if you take away 2 or 3 of those things, we might not be in the situation here. All of it unprecedented, all of it really out of the control of anyone, out of control of Democrats, out of control of Republicans, out of control of the president, out of control of other governments. Is that not correct?
So some of it is out of our control. For example, the price of oil and most of the price of food. And to your point, Europe has much more. It's much more about energy and food prices. Very difficult problems. And also, they of course have the European Central Bank has different countries, which and so they have to worry about the difference, the spreads between different countries, and that's a different challenge that we don't have here. We have the difference here for us is we actually have a very strong economy and well-recovered economy, and so more of
that's
our,
the news right now. New
inflation
York
is from demand. And we do
voids
have
gun
tools to
limits
deal with
and
demand.
establishes
That is
right
that
to
is the
carry.
place where we actually can work, and that's what we're using
So
our
gun
tools.
stocks,
And some of that was because
positive
during
legislation
the
from New York,
crisis
surprisingly.
that we had to do certain things, stimulus and other things to make sure that we kept our economy stable. I mean, if without doing those things, we would have been in trouble. So the things that we did going through COVID, the stimulus, trying to make sure people kept their jobs or kept money coming in at the time was what we had to do. Otherwise, we would have been in worse shape or not have as strong economy as we have now compared to other countries. Is that not correct?
Yes, I would say it this way, that our inflation is a consequence of very strong demand, in part driven by supply, by what Congress did to support activity, in part driven by what we did, but also...
But that helped stabilize our economy at that time, right?
It did.
And if we did not do those things, our economy may not be as strong as it is right now.
I think that's right.
That's
So
correct.
Our economy is strong.
And let me jump to something else real quick, because the one other thing, I know you testified before the Senate yesterday, and what concerned a number of my constituents that I talked to was the question about can we resolve inflation without increasing unemployment? Because our folks are concerned about losing their jobs and not being able to, it'd be worse if they were unemployed. So my question to you is, can you speak to what the Fed has seen during the last few years with respect to the relationship between unemployment and inflation? And is it possible that we can continue to have a strong labor market while also curbing inflation?
It's certainly possible that we can. And there is a relationship between unemployment and inflation. The challenge now is that inflation is at a 4-decade high, and some of it we can deal with, some of it is really going to be dealt with on global markets, the price of oil and that kind of thing, and we can't affect those. But the challenge is we're tightening monetary policy, and that's designed to drive growth down to a level that's more sustainable and lower, give the supply side a chance to catch up, and give inflation a chance to come down and bring inflation down. That's what we're trying to do. We don't have precision tools, and we raise and lower interest rates. It affects the whole economy through many channels, and so there is a risk that unemployment would move up from what is a historically low level. Though a labor market with 4.1% or 4.3% unemployment is still a very strong labor market. Today's rate is 3.6%, and there are 2 vacancies for every unemployed person. So that's a labor market that's kind of overheated.
The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Chair Powell, thank you for joining us again today. I just want to start by saying how sick and tired I am of the president's inflation blame game. One day it's Putin's fault, another it's the oil companies and the meat packers, or perhaps it's corporate greed. Now we're blaming other countries like Estonia, Turkey, Europe. I give you my avid assurance that no one in Missouri's 2nd Congressional District gives a rip what the price of gas and groceries are in Europe. They care about what they are at the corner of Manchester Road and Weidman. No one in this administration is willing to accept responsibility for the dismal economic situation America is in today. Inflation, sir, more than tripled in 2021, from 1.4 to 7%. And from June to the end of September 2021, inflation hovered, I think, around 5.4%. And then began a steady increase until reaching an historic 8.6% that is now crippling Americans' spending power today. Chair Powell, when inflation remains steady at 5.4% during that period in 2021, what factors played into the Fed's decision to keep rates at nearly 0 during each FOMC meeting in June, in July, and in September of 2021, sir?
So during the summer of 2021, just giving us hindsight, inflation was coming down month by month. If you look at monthly readings for CPI or PCE, they were coming down month on month through September. And so that I think, told us that our thesis that this was going to be a passing inflation shock was at least plausible. I think that the data turned pretty hard in October and November, and we very much changed our position, and since then have tightened financial conditions quite significantly. So it was a matter of a few months when we were really looking at this and thinking it's going to be passing. Most macroeconomists thought that it would be a passing thing. It turned out to not have been so far, and so.
But we saw it move from 1.4% to 5.4%. So I don't, we did have a steady period of time. I wouldn't say that it was declining, but I'm just surprised that we weren't moving more quickly at the Fed. I mean, I want to be honest, sir, that the Fed, I think, underestimated actual inflation. What do you think you missed?
Well, we did underestimate it. With the benefit of hindsight, clearly we did. So it comes down to this judgment that we had to make. It has really nothing to do with our framework or anything like that. And every central bank had to make this same judgment, which was looking at the supply chain problems and the shock to labor force participation, millions of people out of the labor force. We had to decide whether that was going to be a lasting thing or whether it would kind of turn around quickly. We had very high levels of labor force participation. Suddenly they're much lower. The thought was people will come back. As soon as COVID is over, we have these new vaccines. Every American is going to get vaccinated. we'll be done with COVID by the end of the year. So basically, these supply side issues, broadly speaking, just didn't get better. There were recurring waves, and that was the judgment we had to make. We knew it could be wrong, and I think when it started to look pretty wrong, we pivoted. And
Now,
we
President
pivoted
Biden
pretty hardly, like
continues.
7 months ago.
President Biden continues to say that a recession is not inevitable, as his government agencies, and Dems in Congress continue to spend billions and trillions of taxpayer dollars, burden businesses with costly rules and regulations, and on top of it, the president refuses to unleash American energy independence. The president's policies continue to take inflation taming options, I think, off the table and hamstring the Fed's ability to focus on price stability. President Biden not only limits the energy production here in America and spends trillions of our taxpayers' money, but he also threatens tax increases and promises to cancel billions in debt. How can you still say, sir, that the Fed has a pathway to a soft landing for the economy?
Well, that's our intention is to achieve inflation getting back to 2%, and
with all I've laid out,
a strong labor market. I'm sorry?
With all I've laid out, and the increases you're going to have to take.
So as I mentioned, I think that path has gotten more and more challenging, thanks to the effects on oil prices and food prices, really, and also the supply chains from the war in Ukraine. It was never going. We never said it was going to be easy.
Not just the war in Ukraine, sir.
Well, it's the rise in energy prices and the rise in, which has been, began in February, the latest rise from February.
The latest rise. This has been going on for a year and a half. I appreciate the chair's indulgence. I will yield back the balance of my time. Thank you, Chairman Powell.
The gentleman from Texas, Mr. Green, who is also the chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you for being here, Chair Powell. I greatly appreciate the opportunity to have a few thoughts with you, share some thoughts. In February of 2021, you indicated that millions of people were out of the labor force, which is what you've said today, millions. And with millions of people out of the labor force, the Biden administration and persons on my side of the aisle sought to do something about that, to help those who were unemployed. The inflation that my colleagues speak of has to do with unemployment, the help that we gave people who were unemployed at the time. Persons who are unemployed, Mr. Chair, they need help. They can't feed their families. Small businesses were screaming for help. We helped small businesses to get through a turbulent time. This was a pandemic. The vaccines had to be distributed and developed. That's a part of that inflation that they're speaking of. People needed rental assistance. People were literally going to be evicted by the millions, but for the assistance from the Biden administration and Congress. We wanted people to go to work. We provided some child care. If you want people to go to work, schools are closed. You got to help people through these turbulent times. They never talk about what the inflationary costs that they speak of really did, how it benefited American people who were suffering. They overlooked that. They weren't going to help, and now, since they didn't help, they're going to say everything that they can to demean the help that was given. No, they didn't vote for it. They don't extend the hand of friendship to people in times of need. So when they don't do that, they have to find a way to denounce the help that was given. It's really shameful. It's painful, and it's sinful to hear people use a term, inflation, to indicate that people who were unemployed shouldn't have received help. The small businesses that were begging for help shouldn't have been helped. Vaccines shouldn't have been distributed. People shouldn't have gotten rental assistance. They shouldn't get child care. Now, I would respect them if they would say these things, that these are things that they opposed. But they're not going to do that. They use one word, inflation. And unfortunately, our messaging to all of the American people has been somewhat lacking. But I want the people that I serve, who pay attention to the supermarket more so than the stock market, to know that when they needed this help, we were there for them. And Mr. Powell, you indicated that there were millions of people out of work in February of last year, just prior to this help being accorded people. I welcome your commentary.
I'm sorry.
I welcome your commentary.
You welcome my commentary. Sorry, I didn't catch the last part. So, you know, our job is maximum employment and price stability. We did what we did during the pandemic, acute phase and response, and you did what you did, and now we are where we are. And so we have a job to do, and it's very important that we do it, not least because of the people you talk about. The people you talk about are really suffering from inflation now at the grocery store. And the only way we can get back to that, get back to a place where inflation is low again, get inflation back down to 2% and help those people, is by trying to get demand and supply back in balance.
Let me intercede and say this. You said something that I find favor with. You said, we did what we had to do. We did what we had to do. We did what we had to do. We were the adults in the room who did what had to be done. Others who declined to do can now be critical. I yield back.
Thank you very much. The gentleman from Minnesota, Mr. Emmer, is now recognized for 5 minutes.
Thank you, Chairwoman Waters. Thank you for holding this hearing, and thank you, Chair Powell, for your testimony and your time here today. Financial freedom is American freedom, and frankly, Americans do not have the financial and economic freedom they need to invest in themselves, their businesses, and their families. Unfortunately, Americans are too busy making ends meet to focus on anything else. Inflation is running rampant across the United States, with consumer prices rising 8.6% in the past year, the largest price increase since 1981. From fuel to meat to housing, my constituents and all Americans are suffering at the hands of this hidden tax, except it's not so hidden anymore. It's punching Americans in the face, as my friend Mr. Stile put it yesterday. So how did we get here? It's pretty simple. We gave up American energy independence. We locked down our citizens and businesses for nearly 2 years, pumped the economy with well over $5 trillion in what's called stimulus funds. And now, as we recover from the pandemic, we simply do not have the energy resources necessary to meet the increased consumer demand. There's a history of Democrat policies we can point to that put us in this position. From refusing to adopt an all-of-the-above energy strategy to recklessly passing $2 trillion in partisan spending through the American Rescue Plan, despite the fact that nearly $1 trillion of bipartisan relief was unspent. But the bottom line is we need solutions now because inflation is beating up the American people. We have to wake up and realize that we cannot continue these spend-your-way-to-prosperity policies. Every day, inflation threatens the financial security of American families, of our constituents. We need solutions. Let me just return to my point about the spending. In December 2020, we'd authorized nearly $4 trillion in bipartisan COVID relief. Yet just 3 months later, Democrats pushed through another $1.9 trillion with hardly any oversight mechanism included, even though a quarter of all COVID relief remained unspent. When President Biden was recently asked if the $1.9 trillion spending bill caused inflation, he said he didn't think the bill had even a minor impact and called the idea, quote, bizarre. Chair Powell, do you agree with the President's conclusion that the $1.9 trillion that was included in the American so-called rescue plan had not even a minor impact on the inflation we're seeing today?
I'm sorry, I wouldn't comment on what any elected official said, and it's really not up to us to score fiscal interventions.
Again, sir, if you would, respectfully, I'm not asking you to comment on what the President said. I'm asking you personally, do you believe that the $1.9 trillion American Rescue Plan did not even have a minor impact on the inflation we're seeing today?
We didn't comment on the Tax Cuts and Jobs Act. We didn't comment on the CARES Act, and we won't comment on that act. And from that,
it's interesting, sir. Reclaiming. It's interesting, sir, that you won't comment on this, but you were more than willing a year ago to talk about inflation as some transitory something that everyone has acknowledged now. It's going to be here for a while. Even though it seems like the President's Build Back Better package, this massive spending package, is dead on arrival, certain elements might not be dead. Chair Powell, do you have concerns that if Congress injects a new round of stimulus into the current economy, it could, and in fact will, add to the inflation we're seeing today?
Again, really, it's not our role to give you advice on what to do. You know, we report to Congress, not the other way around. We're sticking to our mandate and our mission, and we have a lot of work to do on that front, and not really giving you advice on what you should be doing. We take fiscal policy as something that comes to us, and we deal with it as part of everything else.
I'm very disappointed, sir. I mean, you are supposed to be in charge of the monetary policy of this country. You're now embarking on raising interest rates because that's the only tool you think you have left. This is not just a dog chasing its tail anymore, sir. This is a dog that's starting to devour its tail and its back end because of the debt that we are carrying. I want to thank you. You acknowledged we're in a bad spot. We're knowingly walking toward an even worse inflation, a recession, and God forbid, food shortages. Yet we're relying on old monetary policy tools to keep us from falling off a cliff. Sure, we can raise interest rates over and over, but the only way to curb in a disaster this bad is to raise interest rates to a catastrophic level, or as like Larry Summers suggested, we allow unemployment to go to historical highs. It's not feasible. We need to put ourselves on a strict spending diet, and we have to have strict oversight on the funds that Congress has already allocated to make sure not even one single dollar is going to waste. And we need to put control back in the hands of small businesses on Main Street. Thank you.
The gentleman from Connecticut, Mr. Himes, who is also the chair of the Subcommittee on National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Chairman, if you'll indulge me 1 minute. It's important for the American people to understand what's being said here today, because it's being said in other rooms in this building.
Bro, why are they all yelling?
What the American people are seeing today is something that my Republican Party friends have given over to recently all too often. And that is rank dishonesty in the service of acquiring and retaining power. A party without any resilient or discernible principle has stumbled upon inflation. There's inflation all over the world. Germany, Japan, Africa, South America, the United Kingdom. There's inflation all over the world.
I've been watching the Watchlist. He talks.
But the Republican Party has decided that inflation is Joe Biden's fault, or the American Recovery Plan's fault. I've read the monetary policy report from start to finish. It gives the Russian invasion of Ukraine, supply chain bottlenecks, high fuel costs, high wage growth.
Bro,
it does not mention Joe Biden or the American Recovery Plan. By the way, the American Recovery Plan is a particularly rank piece of dishonesty. Set aside the fact that it cut childhood poverty in half. As Mr. Green pointed out, if that isn't something to celebrate and to perhaps have the slightest bit of humility as you attack it, I don't know what I can do for you. The American Recovery Plan, as Mr. Emmer pointed out, was about 1/3 to 1/4 of the fiscal efforts that this Congress made on a largely bipartisan effort to lift our economy to the point where it is today. The chairman said strong and well recovered. Unemployment at 3.6%. So many jobs out there that many of them are going unfilled. Did we overshoot? Maybe we did. But the American Recovery Plan, this thing that cut childhood poverty in this country in half, was about a quarter to a third of the fiscal efforts. The other money was supported by President Trump. But by the way, it's not those dollars that are still sitting in Americans' bank accounts. It's not CARES dollars. No, that was supported by the Republican Party. It's only those dollars in the American Recovery Plan that cut childhood poverty in half. Energy prices. I read the Monetary Policy Report. I'll quote it. Because of the Russian invasion of Ukraine, oil prices rose sharply. I've been around here long enough to know that putting facts and truth out is like spitting into a hurricane, but it's important for the American people to understand that. Mr. Powell, I released yesterday, I hope you got a copy, a white paper on a central bank digital currency. It's offered with humility because we have a lot of issues to work out, but I hope you've had a chance to take at least a quick look at it. I wonder if you have any reflections, or importantly, what are the next steps now that you've gotten commentary from lots of people? What's the next steps with respect to the Federal Reserve thinking about a CBDC?
So I did have it. I printed it out. I have it here. I have not had a chance to read it carefully, obviously, given all that's going on. But no, so I think generally we're doing a great deal of work. The President signed an executive order, and administration, parts of the administration are working on this. I think it's something we really need to explore as a country. It should not be a partisan thing. It's a very important potential financial innovation that will affect all Americans. And our plan is to work on both the policy side and the technological side in coming years, and come to Congress with a recommendation at some point. And we don't prejudge what that would be. I know your views are very positive on it. But I think one thing I did see in your report was the beginnings of thinking about how Congress might authorize it. And I do think that's a very, very important aspect of this, and it's great to have Congress starting to think about that.
Thank you. Thank you. I think I agree with that, and I think that has bipartisan support. In my remaining minute, I'm going to ask you a question I ask you a lot, Mr. Chairman. We're obviously seeing pretty dramatic swings in the financial markets. Money is no longer free. We're seeing that in the SPAC market, the high-yield market, the equity markets, cryptocurrency. In my very short remaining time, Mr. Chairman, what should we be focused on? What is concerning you with respect to systemic risk that may develop in the face of rising rates and rising inflation?
So, basically the financial markets have been functioning well, and the banking system in particular is very strong, well capitalized, lots of liquidity, better understanding and management of its risks. The place where there have been issues, and we don't see them elevated at this point, has been illiquidity in some markets relative to where it had been historically. But
any markets in particular where you worry about illiquidity?
No, I wouldn't say that we're seeing anything that's particularly concerning. But I think sort of systematically, liquidity in the Treasury market has come down from where it was, and we've been looking for some time at ways to address that. But the markets are clearly functioning reasonably well.
Thank you. Thank you. My time has expired.
Thank you. The gentleman from North Carolina, Mr. Budd, is now recognized for 5 minutes.
I thank the chair. Chairman, thank you again for being here. According to the Congressional Budget Office, the federal government will spend an average of $545 billion per year, which was the estimate before rates went up. And these are on interest payments on the $31 trillion of national debt. So that's $545 billion is more than we spend on the Department of Veterans Affairs. So given that the national debt is currently at about 125% of GDP, with the Fed's commitment to tackle inflation, would that be limited by rising interest rates, making the servicing of the national debt even more expensive?
No, absolutely not.
Explain that.
No, we're not in a situation where we need to consider fiscal questions like that. The U.S. is on an unsustainable fiscal path, meaning that debt is growing faster than the economy, but it's not in an unsustainable position. We can service our debt, and the markets understand that, and we can conduct our policy without thinking about questions of fiscal sustainability, and we do.
When your colleague, Secretary Yellen, was before this committee, she told me that federal debt, which was then about 105% of GDP.
Fed Bowman,
she
also
said, quote,
another Fed
that's
speaker,
not a
made
number
comments
that I
right
think
now.
is fiscally
They're saying
irresponsible.
they back raising 75 in
she also
July,
went on to say,
and that it's
quote,
appropriate to
if
lower
interest
after
rates
that.
are zero, we could substantially have a higher debt burden. And in the formula in the following question, she alluded to Japan and the fact that it could be about double of where we are now, meaning about $60 trillion of debt if you use her math. So do you agree with Secretary Yellen that having a national debt of over 100% of GDP is fiscally responsible, given that interest rates can change and that historically low interest rates can't always be expected?
I guess I would say it this way. We're not on a sustainable path, and we haven't been for some time. And that means that simply that debt's growing faster than the economy. By definition, that is unsustainable. There will be a point at which it becomes a problem of servicing the debt. We're not at that point. We're not close to that point. But we will need to get back where revenues and spending are better aligned. We don't need to pay the debt down. We just need to have the economy growing as fast or faster than the economy over a long period of time. And we must do that. I wouldn't say any particular level. There is no level that I can point to where there's a lot of science behind it being a problem. But we know that the path is not sustainable.
It's interesting that you allude to growth being part of the solution. I want to talk about regulation for a minute, particularly since the Biden administration delayed oil and gas lease sales again this week due to environmental protests. So if we pursued policies to increase American energy production by approving more leases and building more pipelines to transfer that energy and cut down on regulatory barriers to make it easier for folks to produce energy and produce anything, wouldn't that make a real impact on energy prices and inflation in general without us needing to use the Fed to slow the economy with monetary policy to deal with inflation?
So these questions of the whole set of questions around energy are really questions for elected people. We don't have a mandate there. Obviously, the more supply there is, the price of something can go down. But these are trade-offs that you really have to weigh as elected officials, rather than.
I'll narrow it just for a minute. Do you believe that the vast amount of regulation is an impediment to economic growth?
I will say this, we try hard at the Fed to weigh the costs and benefits of regulation, and we do think it's important to think about it that way, because there are benefits to regulation, but there are costs, and we don't want the costs to be any higher than they need to be, because that does weigh on economic activity. Yes.
I mean, when you talk about somebody trying to buy a home and now they're questioning it because of the rise in mortgage rates, and then I hear for years that the 25% of the cost of a new home is due to regulation at some level. So that's the point I'm trying to make, is that we need to be very cautious with our regulations, because a lot of it's constraining our growth, and the growth ultimately which solves this fiscal problem. So the point I'm trying to make is that we have much better tools like deregulation, which can free up supply, rather than just monetary policy. And freeing up supply could largely solve the inflation problem for hardworking Americans and not send us into a recession. So again, I thank you for being here, and Chairwoman, I yield back.
Thank you. The gentlewoman from Iowa, Mrs. Axney, who is also the Vice Chair of the Subcommittee on Housing, Community Development, and Insurance, is now recognized for 5 minutes.
Thank you, Chairwoman, and thank you, Chair Powell, for being here. It's good to see you. We've been talking inflation, of course. We know it's hurting Iowa families and families across the country, and all of us here have an absolute responsibility to address this. And I appreciate the comments of my colleague, Representative Himes, because I've sure heard a lot of talk about how bad inflation is from my colleagues over there on the other side of the aisle, but I sure haven't heard much about the solutions that they want to provide. So I'm here to work on those solutions, and I'm glad to have you here to talk with us about that. We actually need to reduce inflation, and we've got to figure out what's driving it. So the San Francisco Federal Reserve Bank just put out some research yesterday looking at how much inflation was driven by supply versus demand. What they found was that supply factors are responsible for more than half of the current level of inflation. And of course, I don't need to tell you that while prices increasing are hurting people across a heck of a lot of sectors, gas prices have really been driven up over the last few months. So, Chair Powell, on gas prices, could you talk about some of the supply constraints that have pushed gas and energy prices higher recently?
Sure. So, two big things would be, just one, the price of oil is set globally, and And so we just take that price. And the second piece of it is the spread that refiners earn. So if refinery is at capacity and spreads are high, then you have a high spread there. And we know that the price of oil went up quite a bit, started going up early in the year, and it's now come down a little bit in the last week or so. But those are the two things that have contributed to the spike in gas prices that we saw. We did see gas prices moving up, but they really moved up quite sharply beginning in the early parts of this year as the war came into focus.
Thank you. So you talked about, a couple of pieces where folks are making more money, and you talked about the refining process and that crack spread, and I think they're around $60 right now. So basically what's happening is they're making more money because supply is down. So would you agree that increasing the supply of gas could meaningfully lower prices?
I'd say it's hard to argue with that. Sure.
Okay. Well, the U.S. hasn't built a major refinery since 1977. So, of course, as we know, this isn't a recent issue. It's a long-term lack of investment. And so with so many parts of our economy, and you actually touched on that earlier. Now, here's the question I'd like to ask you. Will raising interest rates help increase supply here with fuel? And are there other economic tools to do that?
No, we can't have any effect on the price of oil or certainly the supply of energy. And, the tools are in the hands, they're not in our hands.
Okay, thank you for pointing that out. So I know that the Fed absolutely wants to play a role in bringing inflation down, but I want to make sure that we are looking at those solutions and trying to understand what better tools we have. Are there better options out there that you could suggest right here?
Honestly, we're an agency with a narrow but important mandate and a set of tools, and our focus is on using our tools. We think there's a job to do on demand, and I don't see us giving advice to Congress or other agencies on how they might use their tools.
Okay, well, I appreciate that, and hopefully at some other time we can talk a little bit further about that. I want to move on to housing here as well. In the 2010s, we saw less homes built than each of the previous 4 decades, and we're more than 5 million homes short of where we should be. Boy, do I see that all over Iowa, in small towns in particular as well. I've talked to businesses that want to expand, but they can't do so because there are not enough houses there. And so housing is one of the most sensitive areas relative to interest rates. So I want to ask the same thing here. Will raising interest rates help supply there? And are there other tools that we should be looking at to do that?
So I would agree with you. There's a problem with longer-term housing supply and the difficulty of creating adequate housing. What our tools can do is they can, in the near term and medium term, they can restore a better balance between demand and supply in the housing market. You've had extraordinarily high housing price increases really across the country over the last couple of years, and that's because of a lot of demand and very low rates. And you're seeing the housing sector slow down to some extent because of higher mortgage rates now.
And so do you have anything that we should be on our radar or that we could be looking to do to assist with this?
I do think that these are issues for Congress around housing supply. If you talk to builders, and we do talk to builders, we had a group in last week, they will talk about the longer term issues, lack of supply of lots, lack of workers, lack of appropriate zoning and things like that. I mean, these are national issues.
Thank you.
Thank you so much.
The gentleman from Indiana, Mr. Hollingsworth, is now recognized for 5 minutes.
Morning. It's a pleasure to speak with you again. Before we get started on my questions, I just wanted to comment on Representative Axney's testimony or conversation or questions. I love the fact that she's beginning to recognize how heavy the regulatory burden has been in the refining space that has led to an underinvestment, and the Biden war on energy, especially on American-produced energy, continues to bear the fruit that they expected. And that is a deep concern for Americans that are paying more at the pump. We collectively find ourselves in the present situation because we fail to anticipate the future, even if that future is inherently uncertain and probabilistic. You said a few moments ago, we have a job to do on demand. I like that. And in the recent past and present, the policy signals I feel like have been unambiguous for the Fed. Inflation's at a 40-year high. The labor market is robust. Unemployment bouncing along multi-decade lows. Economic growth has been very high. But I worry that that lucidity is a luxury that is fleeting. I believe the future will be more ambiguous as we head into a time where economic growth seems to be approximately zero and labor market weakness is beginning to emerge. I think those policy signals will be less clear going forward. Economic growth in Q1 was negative, albeit for reasons I think you called technical in nature, but still negative nonetheless. Q2 economic growth is currently projected to be approximately zero according to the GDP Now tracker and many economists. Weakness in the labor market, while nascent, is beginning to emerge. Still yet, inflation as a lagging indicator remains, as you put earlier this week, very, very high. I've certainly praised the Fed's tardy yet sudden total focus on price stability, which will come, as you said, at the cost of aggregate demand reduction. Technical reasons or not, America will feel aggregate demand reduction where GDP growth is already zero as a recession. So I am curious to hear your thought process in an environment where inflation is steadying and or coming down, but still yet at multiples of your target, and unemployment is escalating quickly and economic growth is negative. Tell me a little bit about how you'll think about that environment and approach that from a policy and rate setting perspective.
I guess I'd start by saying that that's not the environment we see or expect. We actually do think that growth this year, in the second half of this year, should still be fairly strong. It is coming down from the very high reopening levels of last year, but the first quarter was somewhat anomalous. Private spending was actually at a very healthy
Tell me about how you'll think about that environment. I assume that you could be correct, but there's a chance you could be incorrect about that soft landing prediction.
So the way our tools work, what we're trying to achieve is to have a moderation in demand so that supply can catch up, and so that'll take pressure off of resource utilization, and inflation can come down. That's what we're trying to achieve.
But inflation will come down after that fact. Demand will come down first. Inflation will lag that, where inflation remains multiples of your target, but unemployment, because of that sagging demand, goes up. Economic growth is depressed because of that sagging demand. Tell me how you'll think about that environment.
So the way we think about it from a policy standpoint is we raise interest rates and shrink the balance sheet. That affects broad financial conditions, and that affects the economy. So the question we'll be asking is our policy rate, that's the thing we control, is it at the right level so that it's affecting financial conditions in the economy in the way that we need and intend? And
I want to know how you will intend to affect them where unemployment is going up and economic growth is negative, but inflation remains high.
Well, I think you would,
again, I told the Twitch I'm giving them more commentary since y'all get a little sensitive.
That would be a setting in which inflation could be expected to come down.
That won't move the market, what he just said, but what he just said pretty much explains inflation.
So you could move rates down or steady rate escalations in advance of inflation hitting your target as long as you saw it beginning to come down if economic conditions or your other mandate, full employment, begin to show weakness.
As one of my colleagues used to say, at every meeting it's the same question. Do you raise, leave them the same, or bring them down rates, right? So I think, I think we'd have to see what's happening. We'll try to make good judgments in real time. Right. But the main thing is we can't fail on this. We really have to get inflation down to 2%. So we're going to want to see evidence that it really is coming down before we declare any kind of victory. And so I think we'd be reluctant to cut.
Well, this will have real cost to Americans. So I want to make sure that we're forward thinking about what is going on in the real economy, not just watching a lagging indicator that is inflation. And with that, I'll yield back.
Thank you. The gentleman from New Jersey, Mr. Gottheimer, who's also the Vice Chair of the Subcommittee, National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. Mr. Chairman, the most recent Consumer Price Index report indicated that the largest component of the CPI, shelter owned and rented, has increased 5.5% since last year. Estimates I've seen show apartment rental costs up 15% or more over the last year. Do you believe the CPI measure of shelter costs understates the actual increase in housing costs? And do you have any suggestions for actions Congress can take to lower housing costs for Americans in the short and long term?
There's some sense in which it might understate costs because it's not capturing leases that haven't turned over yet, right? So it's really looking at leases that are turning over.
So probably it's a higher rate.
Overall, we think it's a decent measure. It also remember that in the CPI, housing services has a weight that's double in the measure that we look at personal consumption expenditure inflation. We think that's a better, more sophisticated, a better representation of the inflation that's actually happening in people's lives. So we would tend to look at that.
Thank you, Mr. Chairman. I do want to shift to another issue that's covered in your June report. I've been engaged in discussions on cryptocurrency policy and have long warned that a run on stablecoin has the potential to stabilize financial markets. My concerns were realized in part last month when the so-called stablecoin terror collapsed. Your report highlighted the danger of that event and called for congressional action to protect consumers and financial markets. My draft legislation, the Stablecoin Innovation and Protection Act, would establish a definition and requirements for qualified stablecoin and define as cryptocurrencies redeemable one-to-one for U.S. dollars. This legislation would reduce financial instability in the markets and protect consumers and support innovation in fintech. It would create also a pathway for banks and non-banks to acquire qualified status for the stablecoins they issue. With federal oversight, do you believe non-bank entities can be reliable issuers of qualified stablecoins if they can prove they are fully backed by cash or cash equivalents?
So, as you know, we've recommended that Congress look at this, and there are many approaches, including yours. The President's Working Group did recommend that stablecoins be issued by insured depository institutions. I think it's great that Congress is looking at different approaches and evaluating those questions. What you really want, though, is you want to be sure that those entities are appropriately regulated, and in our view, in some sense, at the federal level. So, but I think that's going to be a question for Congress. You know what the PWG came up with, but I think there are different approaches.
Do you have any views on who the primary regulator should be at all? You think that's all up to Congress? Like, would the OCC would you have a problem with the OCC being a primary regulator?
For national bank charters, yes, but I mean, the thing is, stable coins are used now principally in the capital markets, as you know, around the platforms, the digital finance platforms, and that's more in the bailiwick of the SEC. If there were going to be payment stable coins, we should be involved, and if it's going to be about banks getting involved, it'll be the banking regulator. So I think it's going to be, we're blessed by a plethora of regulatory agencies in the financial sector, so that'll need to be sorted out.
Do you think that's something, given the challenges we've had in the last months, that's something we have to move quickly on? Are you concerned with how long it's taking Congress to actually act there?
I think it's very important. It's no different than any other big technological innovation. Airplanes, for example, there comes a point at which a new regulatory framework is needed to protect the public and create, preserve innovation and competition, foster, support all that, but that time is coming for digital finance, and I think I'm encouraged that there are now a bunch of bills and proposals, and that Congress is working on this. I think it's important that it get done, quickly, because as we've seen, these companies can grow really quickly, and we've also seen that they can have reverses as well.
And you think overall the ideal role of the Fed in overseeing stable coins is what? What ultimately you think long term, what's the role of the Fed?
Well, so the one question is around CBDCs, right? Is do we want a private stablecoin to wind up being the digital dollar? And I think the answer is no. If we're going to have a digital dollar, it should be done by us. We don't know that we need a digital dollar as such yet, but I think that it should be government guaranteed money, not private money that is really created for the benefit of the private issuer. So that's one thing. I think also we're very important in payments. So anything to do with payments that the public is involved in, we should be involved in that too.
Thank you so much. I yield back. Thank you.
Thank you very much. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairwoman Waters and Ranking Member McHenry, for holding the hearing today, and thank you, Chair Powell, for being here with us. A few moments ago, Mr. Himes noted that the American Recovery Plan, I think he meant American Rescue Plan, is not mentioned in the Monetary Policy Report. Chair Powell, is it Federal Reserve practice to comment on bills passed by Congress in the Monetary Policy Report?
No.
Turning to a question that we've obviously talked a lot about today already, you have inflation and rising prices on things like
Yo,
food
I think he
and
just
fuel
called him
are
out for
having
answering
a
that
devastating
last
impact
question.
on people all across Middle Tennessee and indeed across the country. You have told us that you will not comment on fiscal policy, but you have also previously urged Congress to support fiscal spending, some of which caused this inflation, in my view. Democrats are still pushing a reckless spending proposal, although reports are that it will be smaller than the one they tried to ram through Congress late last year. So, Chair Powell, will you commit to pushing back as strongly against reckless spending proposals that would exacerbate the current inflation as much as you push Congress to support more fiscal spending during the pandemic?
So I didn't support any particular bill, but I did say that there was more to be done. And I, by the way, I completely ended that practice at the end of 2020. Was it 20 or 21? Anyway, 2020. I completely stopped talking about that publicly at all. And the reason I did it before was, first of all, I was being encouraged by leadership on both sides of the hill in both parties. They were asking me for ideas. Don't you think we need to do something more? Can you help us? That kind of thing. But that's all done. That's over with. And the Fed should not play or seek to play a role in fiscal policy. We have our own mandate. We sure need to stick to that now.
In light of that statement, would you agree with this statement that the analysis that the Fed had through much of last year and that the administration to some extent continues to advance, with respect to inflation and the policy prescriptions has proven to be far more transitory than the inflation itself?
Well, if I understand your question, we did think that these were going to be passing forces. We thought that these shocks that were hitting, supply side shocks, we thought they would be like oil shocks have been, where they come and go, and other supply side shocks, commodity shocks of various kinds. As the course of 2021 went on, it became increasingly clear, particularly in the fall, that wasn't going to be the case. We weren't going to see that kind of progress, and we pivoted, 7 months ago now. We pivoted to address this with our policy tools. I think our judgment in real time proved to be incorrect, but it was not an irrational judgment, and it was one that was very widely held at the time by other central banks and economists generally. But it wasn't about economics. It was, how long is this going to last? Are these things that are happening to our economy, which are unprecedented, are they going to get better? Like, for example, millions of people dropping out of the labor force, or the problems we have with the global supply chains. There was no model of that. We can't look at the last 20 times it happened. So for sure, in hindsight, it was not transitory.
Thank you. The Committee for a Responsible Federal Budget estimated that canceling federal student loan debt held by Americans could increase the inflation rate as much as 0.5 percentage point and would add $1.6 trillion to the national debt. This estimate notably also did not incorporate the possible effect that student debt cancellation would have on increased college tuition prices. Chair Powell, has the Fed done any analysis on the inflationary impact of these proposals to forgive student loans being actively considered by congressional Democrats in the administration?
Not that I know of. We would look to CBO and legislation. We tend to start to put it in our models of the economy when we think there's really likely going to be legislation.
Generally, though, would you expect forgiving $1.6 trillion in debt, whether it's student loan debt or credit card debt, to have an inflationary impact?
Well, again, I'm going to leave that to CBO to score, and also the Congressional, the Office of Management and Budget. We just routinely do not score congressional proposals. It would get us involved in political things, and why would we be independent then? So to be independent, we need to be out of these very difficult fiscal issues, which are really your job.
Thank you, Chair Powell. I yield back.
Thank you. The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell, without question, the Fed has a role to play in healing our economy. But as with any treatment, the wrong medication can cause even more harm and make the patient more ill. Chairman Powell, at your latest press conference, you stated, quote, wages are not principally responsible for the inflation we are seeing, end quote. I certainly agree with that assessment, as do many economists. Considering that wages are not driving inflation, why is the Fed addressing inflation with tools which primarily impact wages, such as interest rates?
Well, our tools principally impact inflation, not necessarily wage inflation. So our job is price inflation. But I will say on wage inflation, the issue is that over time, wages are really a very important, over time, looking forward, are very important, particularly for service companies where most of the costs are really in wages. And wages, we all love to see big wage increases, but these increases that we have been having, some of them are just substantially bigger than would be consistent with 2% inflation.
Thank you. Well, throughout today's hearing, to that point, you've indicated that the Fed doesn't have more precise tools at your disposal. Chairman, the root causes of the inflation we are seeing are supply chain disruptions outside of the Fed's control, whether it's COVID-19 lockdowns in China or the Russia-Ukraine war, which is why this knee-jerk response to raise interest rates is so alarming. The Fed cannot control the factors causing inflation, but this policy choice would plunge millions of people back into unemployment, dampen wage growth, and tip the economy into a recession. There's an old adage, Chairman Powell, if all you have is a hammer, everything looks like a nail. You've recently said that the Fed's tools, like interest rates and the balance sheet, are famously blunt and lack precision. So in that case, do you agree that the Fed needs new tools that are more precise to better fulfill its statutory mandate of price stability and to maximize employment?
No, I don't think we're looking for new tools. I would just say that a big part of the inflation that's happening is really not going to be affected by tools, but a big part of it is going to be affected by our tools, and that's the part that's related to demand.
Mr. Chairman, but by your own account, you stated on the record that the Fed's
Honestly,
current
I think
tools
the
are
ads only show up when the
ill-suited
chat's
to deal with the inflation
disrespectful.
we're
I don't know what's
seeing.
going on with
so
it,
perhaps
but
now is the
just
time
keep it positive and
to
respectful,
expand the
all right,
Fed's
Chad?
toolkit to meet the unique moment that we find ourselves in. For example, one tool that could help the Fed tailor a more precise response to inflation is direct credit regulation. This would allow the Fed to regulate the availability of credit in the specific sectors of the economy experiencing high inflation without impacting other sectors. Would you support Congress passing legislation to give the Fed more precise tools to tackle inflation, such as this idea?
That's not something we would seek. Of course, it's up to Congress to make those decisions, though.
But at your own admission, your tools are too blunt and not precise enough. So what additional tools do you believe the Fed needs to respond more precisely to inflation?
Well, again, our tools they're blunt, but they are the right tools to deal with broad aggregate demand, and that is a more important determinant of inflation than energy and food prices. As painful as energy and food prices are, the bigger piece of it is related to demand. We can't help with energy and food prices, to your point, but we can help with aggregate demand, and we do that through the tools we have. We're not seeking a deeper involvement in the economy like you're talking about, but again, that's a question for Congress. Congress can change our toolkit or our mandate.
Well, in this moment of overlapping crises, from supply chain disruptions to high inflation, I do believe we need precise policies that respond to the needs of the American people.
And their
the Fed knows
WhatsApp
that raising interest rates will not address the root causes of rising prices, but they will just keep doing so, even at the cost of millions of working class people's livelihoods. We need a more sophisticated toolkit for the era we are in to truly heal our economy and tackle inflation responsibly. Thank you. I yield.
Thank you. The gentleman from Wisconsin, Mr. Stile, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. Thank you for being here, Chair Powell. Appreciate it. Just a point of clarification. You noted that you ended your public statements in support of fiscal stimulus by the end of 2020. Is that correct?
Yes.
And so it'd be after that that the Democrats under one-party control passed $1.9 trillion of additional fiscal stimulus. After it had already stopped making public statements in support of additional fiscal stimulus. I have the timeline correct?
Yeah, I mean, again.
I'm not asking you to opine. I just wanted to make sure I had the timeline correct.
I took no position publicly or privately, and neither should the Fed chair do so.
Understood, but your public statements in support of additional fiscal stimulus ended in 2020.
Yeah,
the Democrats under one-party control passed $1.9 trillion of fiscal stimulus after that period of time. I just want to make sure of the timeline. I understand. Let me cognizant of the time we have, and you've noted that you think the Fed should not play a role in fiscal policy.
Europe is
I have
closing
grave
right now, and
concerns
Europe was
of the
bad
fiscal
today,
policy
so
that we've seen playing
keep an eye on where we go
in
from here.
Washington. Not asking you to opine on that. Looking at 2021, we saw real GDP growth about 5.6% in that year. Is that correct?
Yes.
Over 5%, a reasonably robust rate. At that period of time, in the year of 2021, we saw the Fed's balance sheet increase by about $1.5 trillion. Is that correct?
Sounds about right.
So at the period of time where we were seeing reasonably robust economic growth, the Federal Reserve was continuing to build its balance sheet to a tune of $1.5 trillion. And so during the year 2021, the Federal Reserve ultimately purchased about 54% of all federal debt issued by the Treasury. Is that accurate?
I don't know that. If you have the number in front of you.
I have the number in front of me. I think it's worthwhile. Roughly half of the federal debt that was issued in 2021 was acquired by the Fed and placed on the Federal Reserve's balance sheet. My concern is that hid the real cost of borrowing that was being driven by the Biden administration at that time. And my concern is that the Federal Reserve, by increasing their balance sheet by $1.5 trillion at a period of time when Democrats put forward a gigantic stimulus package, after you had stopped your public calls for requesting additional fiscal stimulus, that's all part of the problem. It's both the fiscal policy and the monetary policy coming together. But let me keep going here for a moment. The federal government paid in debt payments last year $580 billion. Is that correct?
I don't know.
That's the numbers I have. It's about 5.8% of our budget, fiscal side. And the projections of CBO interest over the next decade, one of the CBO projects that it will triple to $1.2 trillion. But that's assuming federal debt remains in a range of 2.4% to 3.8%. That's the CBO's projections to get to debt payments increasing to $1.2 trillion by the end of the decade. But we're sitting here at a period of time when the 10-year Treasury yield has crossed 3%, 3.16%, I believe, as of yesterday. A year ago, that was 1.48%. So we're already approaching the high interest rate threshold that CBO has for interest on the debt to triple. Do you project that interest payments on the debt, the interest payment number that's impacted by the interest rate set by the Fed, will remain in a range of 2.4 to 3.8%, or do you believe that it will dramatically be above that?
We don't publish projections on on Treasury rates.
So as interest rates are moving, as you're doing that, I think appropriately so, to address the inflation environment that we're in, the Federal Reserve doesn't project the cost on the debt moving forward?
So internally, we don't publish, this is what I said, but internally we of course do have a path for the 10-year, for example, and for many, many years it's always showed rates returning to levels even where we are or even higher. Well, that's what goes into our models, because we assume over time, for example, we're reversing, we're going to be shrinking our balance sheet in the range of $1 trillion a year in coming years. So that'll put more supply out. That should put some upward pressure on rates. So we do. It's not our business to project this publicly, but that our assumptions are that rates will return to levels that are somewhat higher.
Well, let me for the record state that I'm very concerned that we're going to see interest rates remain high. The Committee for a Responsible Federal Budget notes that 50 basis points is $143 billion a year in debt. I'm concerned that we're on a path that's very unstable. Appreciate you being here. Madam Chairwoman, I'll yield back.
Thank you. The gentlewoman from New York, Ms. Ocasio-Cortez, is now recognized for 5 minutes.
Thank you so much, Madam Chair. And thank you, Chairman, for coming in to speak with us today. Chair Powell, in the summer of 2019, which admittedly was a different world, during a Financial Services Committee hearing, you relayed to me that, quote, I would look at today's unemployment as well within the range of plausible estimates of what the natural rate of unemployment is. Do you recall what the unemployment rate was around that time in 2019?
I want to say 3.5%.
Yes, it was 3.5%. And what is the current unemployment rate today?
3.6%.
3.6. You also said, quote, when unemployment went way up, you didn't see inflation go way down. So you don't see inflation reacting to unemployment the way it does because inflation seems very anchored. Again, that was at that time. Chair Powell, would you say that some, briefly yes or no, but would you say that some of the contributing factors to today's inflation include ongoing supply chain issues, including volatility of commodity prices as a result of the ongoing conflict in Ukraine, and companies also raising prices because they can?
Well, I would say on supply side issues, for sure, those are playing an important role.
And am I correct that American workers' wage gains have actually trailed inflation? In other words, while the cost of goods went up by 8.6% on average, wages did not increase by that much.
It depends. For some people at the lower end of the spectrum actually have been getting positive real wage gains. For most people, though, inflation has been higher than their wage increases.
So on average, we have a wage growth at about 6.1%. So average wages are trailing inflation. It does seem that American workers are not primarily responsible for the inflationary issues that we're seeing today. But despite this, we are seeing some comments from individuals like former U.S. Treasury Secretary Lawrence Summers earlier this year said that in order to contain inflation, the U.S. needs 5 years of unemployment above 5% or 1 year of 10% unemployment. Do you agree with that assessment?
So I understand how that number can be arrived at or derived, but I think there's so much uncertainty, and in particular, that the answer is going to depend to a significant extent on what happens on the supply side. If we do get these supply side problems worked out, which I think is certainly going to happen in time, then you wouldn't see anything like that. But it's a highly uncertain time, and our intention, of course, is to bring down inflation while keeping the labor market strong.
I think it's important to drive home what a 10% sustained unemployment would look like in this country. For context, we didn't even reach 10% during the Great Recession. We did experience 10% unemployment in 1982 following the Volcker shock. But in this market, to get to 10% unemployment, that would require about 10.5 million additional people out of work. And historically, we know that black unemployment is usually double that of white unemployment, correct?
Yes, it tends to move at twice the speed, both up and down, but certainly moving up.
So when the former Treasury Secretary says he wants 10% unemployment overall, he's also saying that we need black unemployment of nearly 20%, or implies that. But Chair Powell, I do think that despite the tools that you don't have, Congress does have tools as well. Would you say that the following actions granted in the scope of Congress could be deployed to impact inflation, using antitrust laws against companies that are raising prices using their market power?
Sorry, I didn't hear the last part.
Would this action, would using antitrust laws against companies that are raising their prices have an impact on inflation?
Laws?
Antitrust?
Antitrust laws. Okay. Sorry.
No worries.
The acoustics in here are different.
No worries. Would that have an inflationary impact?
It's hard to say, really.
Would subjecting those companies to a windfall profits tax have a potential impact on inflation?
Again, I don't.
And would requiring government contractors to keep a lid on their pricing have certain impacts on inflation?
You know, there's a long history of price controls when inflation's been high, and it was not a successful one. Really, it comes down to getting demand and supply in alignment.
And if the Fed's tools mostly impact demand, but most of those inflationary issues could be potentially impacted by supply, how high do you think the Fed would actually have to drive unemployment to actually have an impact?
Well, that's going to depend on a lot of things. And, you know, ideally, we can raise rates, and it's very important that we get inflation back down, particularly for people at the margins of society who are suffering the most from inflation. And maybe a longer conversation we can have.
Thank you.
Thanks.
Thank you very much. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Powell, for being with us today. Congratulations on being confirmed to your second term as chair. We got some rocky times ahead. Wish you luck. Last time you were here, we discussed how rising interest rates really inflates debt servicing costs for the federal government. And I know what you're going to say. That's a concern for fiscal policymakers, the Congress, to take into account, not the Fed. And that is mostly true. But I still think it's worth everyone being fully aware of just how costly servicing our debt will be now that interest rates are returning to historically normal levels. According to the CBO, interest payments on the debt are the fastest growing part of the federal budget. CBO projects that servicing our debt will cost taxpayers $8.1 trillion of the 10-year budget window, $8.1 trillion. And their inflation assumptions are projected interest rates are fairly lower than current levels and quite a bit lower than where rates are likely headed to get inflation under control. And I thank you for your efforts to get inflation under control, but for every half percentage point rate hike, that is an estimated $133 billion of annual increases. I'm going to say that again, $133 billion in annual increase in debt servicing costs. That is just a staggering amount of money. So we, Congress, must get our fiscal house in order. We have to. There is no other option. The dollar's position in the world as the global reserve currency is solid, and there are no immediate signs of that changing. But if we continue on our current trajectory, that will not always be a given. So my question is, are you worried that if our current fiscal path continues, which I should note with each rate hike it looks worse and worse, that the dollar's position in the world could be challenged in the long term? Is that a concern?
Certainly in the long term. The dollar is the reserve currency, and I don't see it as particularly under threat at the moment, given the advantages that we have, which are many. But you're right, the U.S. federal budget is on an unsustainable path, and we will have to deal with it. The sooner the better. And unsustainable just means that the debt is growing faster than the economy, which by definition, over time, can't be sustained.
Thank you. For the record, I also want to follow up. You stated the following as Congress considered the Biden stimulus. Quote, in addition, workers and households who struggle to find their place in the post-pandemic economy are likely to need continued support. The same is true for many small businesses that are likely to prosper again once the pandemic is behind us. That was from your speech on February 10th of 2021. I just wanted to add that in for the record. One final question. During a meeting last week at the International Association of Insurance Supervisors, the IAIS issued a consultation paper on comparability criteria looking at the use of international capital standard versus the aggregation method. As you know, the U.S. has committed to using an aggregation-like approach here in the U.S. through the National Association of Insurance Commissioners Group capita calculation and the Fed's proposed building block approach. Moreover, the EU and the UK, through their covered agreements with the U.S., recognize these approaches to group capital. Nevertheless, Insurance Europe, a federation of European insurers representing more than 95% of the European market, takes the view that there cannot be two versions of an international capital standard. So my question to you is this: will you continue to advocate and support the aggregation method as an alternative to the international capital standard?
So I think I'm a little rusty on that, but I will say this. I know that we're strongly committed to capital standards that work for U.S. insurance companies.
I get that, but I guess what I'm getting at is we have a different way of regulating insurance here in the U.S. We all know that, and it works for us, and we do not need to let these international bodies change our way of doing things. We need you to stand up for the American way of doing things and for American businesses. Can you commit to doing that?
So I think that's what we're doing. So,
okay.
Yes.
Thank you. Madam Chair, I yield back.
Thank you. The gentleman from Massachusetts, Mr. Auchincloss, is now recognized for 5 minutes.
Thank you, Madam Chair. Welcome, Chairman. I want to start by asking you about inflation expectations, which, as you obviously well know, can be very difficult to dislodge once they are anchored in the mindset of consumers, and what the Fed can do both to address inflation, but also to convince Americans that inflation is going to be lowering in the medium term and thereby prevent inflation expectations from getting anchored.
Well, so if you look at inflation expectations, and of course we measure professional forecasters, households, market-based break-evens and things like that, a broad range of things, you do see that people expect inflation to be high in the very near term, but they expect it to come down fairly quickly and get back to. So generally, as a general matter, the evidence is clear that people do expect inflation to come back down to levels that are consistent with our price stability mandate. But this is the first, we haven't had a test like this. I would say we haven't had an extended period of high inflation for a long time, and so it's not a comfortable place to be. Short-term inflation expectations are higher, and it does add, it adds to our desire to move expeditiously and with force to get rates up and ultimately to get inflation down.
So, building on that, 1 degree removed, the only thing more painful than expected high inflation is unexpected high inflation, and it makes it the degree to which businesses and consumers do not have confidence in the Fed's ability to control inflation, or the U.S. government at large, makes it harder for them to make capital investments in the long term, makes it harder to do wage negotiations. Is there a measure of the degree of confidence that both business and consumers have in the ability of inflation to remain low that you are tracking, so that we can try to measure the degree of confidence people have in not having to see unexpected inflation in the future?
So first, I agree. But ultimately, this is the point is that if the public retains confidence that inflation will come down, if their expectations remain anchored, then it will come down. That is we think that's how
self-fulfilling,
it works, right? So by many measures, we track them all. I mean, we put them all in one big measure called the Index of Common Inflation Expectations. We do that, and we publish that at various times. And they're sending basically that message that essentially, yes, inflation expectations are anchored. But as I said, that's good, but it's not enough. We need to get inflation down because inevitably over time, these expectations are going to be under pressure.
Are you able to track, though, it seems like you also want to track volatility within that index of inflation expectations to see how much confidence people have that they're not going to see unexpected inflation?
Yes. We look at the distribution, and there's some small signs, concerning signs, and we just can't allow that. We really have to. Ultimately, our whole framework is about keeping inflation expectations well and truly anchored so that inflation will return to that anchor.
And your credibility in that is autocatalytic in inflation expectations. So I think it's critical that the businesses and consumers have that confidence.
Absolutely.
Can you explain how quantitative tightening, I guess we would call it now, is going to play into that? Unrolling quantitative easing of the last 10 years?
Sure. So it's quantitative easing in reverse. So what quantitative easing does is it reduces the supply of risk-free, longer-term assets, and that tends to drive rates down as people want those. And when we loosen our balance sheet, when we shrink our balance sheet, what happens is the public will be holding more of that paper, and we won't be holding it, and that should have some upward pressure over time. Markets are forward-looking, so they're already pricing this in.
And you don't project any changes in how you're going to do QT?
So we put out a plan. We thought very carefully about it. We've announced it. Markets have seen it, and it's sort of priced in. And I think we would intend to keep to that plan. Of course, one of our principles is that we're always going to be flexible if that's warranted.
Last question for you in the final 30 seconds here, Chairman. Can you give us an update on FedNow and your plans for access both to established banks as well as to financial technology companies?
So FedNow is supposed to go live next year. We believe we're on track to do that. We've got people working really hard on it for some time. I didn't catch the last part of the question.
And how are you going to make access available? Is it going to be just for certain
types of banks? Is it going to be for financial technology companies? How are you going to adjudicate access? So that's something we're looking at. We are, I mean, mainly it's for the broad sweep of banks, and we'll have to look at going beyond that. I yield back.
Thank you. The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Chairwoman Waters. Chairman, welcome. Glad to have you here. Would you agree that housing is a leading economic indicator on the health of the economy or on the direction the economy is going?
It's certainly an important indicator.
Because it affects so many different facets of the economy. Because it affects so many facets of the economy, is that right?
I'm sorry, I'm having a hard time hearing.
Because it affects so many facets of the economy. In other words, when you housing, whether it's commercial or residential, you buy a lot of products that are across the spectrum.
It's an important, very important sector of the economy for the reasons you point out.
And one of the reasons that most economists are predicting a severe recession is housing as a leading economic indicator. I've done that. That's what I've made my living. Do you realize it's very simple to solve to get the housing at a point that it was under the previous administration? I'm from South Carolina. People are moving there. Do you realize in the last probably 4 months, it's been a severe cutback, despite the fact that people are coming in and need it. And it's because of this administration's war on energy and natural gas. The Fed can't regulate that. Putin can't regulate that. It's a direct result of policies of this administration. And one of the reasons that it's basically going to come to a standstill, the war on energy, you can't afford gas for your product. It's a war on the workforce that this administration has done. When you pay people not to work, it's kind of a disincentive to go to work. Supply chain that has been mentioned, when the call I got 4 days ago, a leading producer of chicken cannot get corn to feed the poults,
I have no idea what
the
he's
young
saying.
chickens. It's kind of a problem.
Honestly, he said it was very simple.
Interest rates.
I thought it was about real
which
estate.
Is,
and he
at your
started talking
disposal,
about gas, and now chicken.
is
I have no
severely
idea.
going to affect the
I have zero
housing
idea
industry.
with Mr. Norman.
When you're paying a 6% long-term mortgage rate, along with every other cost increase directly caused by the policies of this administration, the housing is going to come to a stopping point, as it is
there it is.
now
I think
likely
that's
to
the
have.
conclusion.
Regulations
full
have been
circle.
mentioned here. We now face on simple projects regulations, and I would point out many of them needless to be 35, 38%. That's when you combine all of these things, housing is going to take a tremendous drop. That will affect the economy, wouldn't you say?
I think all of those things are affecting the economy.
Is greed that has been mentioned here a leading cause of inflation?
I think it's a macroeconomic phenomenon that's caused by the things we've been talking about.
Was greed not a factor 4 years ago?
Don't worry, if this guy's saying real
If
estate's
it's a
going to
factor
come down
now,
dramatically,
were they just less greedy?
I feel very great now.
In 16 through 20?
It's hard to see why there would have been.
Right. And did Putin, was he responsible for the low gas prices that we experienced from 16 and 20?
Not as far as I know.
I don't think he had much impact. If he did, it'd be a sad state for the United States. You know, I think one of the congressmen mentioned about the debt relief for college students that's been proposed by the current administration. How will that have an effect on the economy? And I think the number that's been talked about to forgive $50,000 per student, will that affect the inflation and the economy?
You know, as I mentioned, we don't score these bills from an inflation standpoint.
It wouldn't be positive, though, would it?
Sorry?
I doubt it would be positive, would it?
Well, I don't know. I mean, that's for elected folks.
All right, and on the central bank digital currency, would you have to have approval from Congress before the Federal Reserve got involved?
I can't imagine that we would move forward without authorizing
So
legislation.
you'd have to have the approval of Congress.
Yes.
Well, thank you for what you're doing. You're using the tools that you have at your disposal. Most of this can be eliminated if we had a policy now that was pro-business, pro-growth. But thank you for what you're doing, and congratulations on being reappointed as chairman.
Thank you.
Thank you. The gentleman from California, Mr. Vargas, is now recognized for 5 minutes.
Thank you very, I'm over here, Mr. Chairman. Thank you very much, Madam Chair and Ranking Member. Mr. Chairman, thank you very much for being here, and congratulations, I think. I'm not sure. You're running into pretty heavy lift here going forward, but very much I appreciate you being here today. I believe that inflation is real, obviously, and it's hurting a lot of people. It's the causes, I think, that are being manipulated and frankly lied about. And there's one big criticism that I make of you, and also, and especially, I guess, Secretary Yeltsin, and that is that you haven't explained inflation within the context of the world environment, what's happening globally.
I'm just saying, you don't even know who Yellen is.
My good friends on the other side of the aisle
he has no idea
love
what
to
her
blame
name even is.
inflation singularly on President Biden and his policies. I didn't get a chance to ask Secretary Yellen any questions when she was here last time, kind of low on the totem pole here. But I wanted to scream because every time she led with her chin as opposed to explaining that this inflation is globally. But now that I have you here, I get to ask you some questions. What is the inflation rate in the European Union?
Overall, I wouldn't put
it's
a number.
8.8% according to Statistica. Did they receive any money from the American Rescue Plan?
Not to my knowledge.
What is the inflation rate in Estonia?
In Estonia, don't know. I mean, they're roughly comparable to ours.
It's 20.1%. It's not very comparable to ours. It's over 3 times higher than ours.
European democracies.
Estonia. Did they receive any money from the American Rescue Plan?
Not to my knowledge.
How about Latvia? What is the inflation rate in Latvia?
No idea.
It's 16.8%. Did they receive any money from Biden or the American Rescue Plan?
Not as far as I know.
How about Bulgaria? 13.4.
I knew that one.
Poland. You knew that one?
No.
Oh, I apologize. I'll let you try with Poland. How about that? They're a friendly nation. 12.8. Did they receive any money from the American Rescue Plan? And if they didn't, why do they have inflation that's so high?
Not as far as I know.
So why is their inflation rate so high?
Well, in Europe, the inflation that they're seeing is principally, I believe, due to energy prices and food prices. It's due to the war, and it's due to, the situation with Russia being their principal energy supplier.
So not the American they didn't receive any money, though, from the American Rescue Plan?
Not as far as I know.
Okay, let's keep going. Romania, 12.4. Slovakia, 11.8. Hungary, 10.8. Croatia, 10.7. Greece, 10.5. The Netherlands, come on. You ought to know the Netherlands.
I sense that we're going down, so be lower.
10.2.
See?
But you do see I'm glad that this is going. Germany, how about let's skip to Germany. Very similar to us.
I'm not going to guess.
8.7. And the reason I wanted to go through the litany of these things, I keep hearing from my good friends on the other side of the aisle that inflation somehow magically exists because of Biden's policies, because of the American Rescue Plan. Well, if that's true, then there shouldn't be this other inflation in other countries. It's a global phenomenon. As Clinton used to say, it's the economy, stupid. Here it's the pandemic, obviously, and things that happen. We have a situation around the whole world, yet you don't explain it globally. And I shouldn't yell at you because I really like you a lot, and I really do think you're doing a good job. I'm trying very hard. But I did want to yell at Yellen, because she didn't explain anything globally. Don't you think you have a responsibility to the American people? I know in my district, most people believe that inflation's only happening here because of the rhetoric that they hear on the other side. And you guys, I think, have the opportunity and the responsibility to give them the full picture, not this limited picture. And I hope you do so. Again, with that, I'll yield back. Thank you very much, Madam Chair.
The gentleman yields back. The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chair. And actually, I think my timing for my question is perfect. Chairman Powell, I'd like to discuss with you today an issue that is of significant concern to me and many of my colleagues. The SEC's regulatory agenda has more than 50 significant proposals that are currently underway or approaching a final vote. These rules cut across every asset class under the SEC, the Securities and Exchange Commission's jurisdiction. The sheer complexity and volume of these overlapping rulemakings could negatively impact markets and the public that depends on them. SEC Commissioner Hester Peirce, warned that the speed and character of these rulemakings could create dangerous conditions in our capital markets. Now, this is against a backdrop of the U.S. economy facing significant challenges. We've discussed that all morning. Inflation at more than a 40-year high with substantial increases in the cost of food, housing, and gas prices at record prices. Also, supply chain backlogs and labor shortages continue to weigh on the economy with consumer and business confidence plummeting. And of course, we're still studying the impact of the global pandemic and the consequences of the ongoing Russian invasion of the Ukraine. In Oklahoma, small businesses, farmers, ranchers are navigating through surging energy prices and volatile
kind of starting to flip. Healthcare and staples are still up, but industrials, financials, materials, and energy are really red.
Prices are expected to worsen the situation throughout the summer and into the rest of the year.
3 hours, 3.5 hours.
In uncertain times like this, market participants need to seek to protect their retirement savings, to hedge risk, and to safeguard their livelihoods. A top priority should be supporting liquid markets to protect the U.S. economy from the face of these substantial headwinds. I know you don't comment on other entities within the federal government. I know these regulations that are going to have such a tremendous impact are not coming from your area, but unfortunately I'm concerned that the magnitude and the significance of rule-making proposals coming out of the SEC in such a short amount of time runs counter to the goal. We know that regulatory uncertainty creates adverse market environment for economic growth and market stability. So, Chairman Powell, I'll not ask you to comment on the SEC, but could you speak to the importance of market liquidity during periods of economic uncertainty?
Yes, so markets are there to, one of the things they do is process information and consider the implications of it, and it's critical that markets be liquid enough to do that. And if that happens, then financial conditions can adjust and equity prices of various kinds can adjust. And that's one of their big functions, is to do that and to absorb news, sometimes very difficult news, in a way that preserves stability.
I think Congress and the public should have the opportunity to fully grasp the impact of the SEC sweeping proposals. If we really want to tame inflation, we should begin by not making the current situation worse. The SEC's approach will rattle markets during a time when strong capital markets are essential to our economic growth and our constituents back home. After all, you're working hard on the demand side of the equation, but we in Congress and the administration should help with the supply side of the equation. And that is not making it more difficult to invest in and create more goods and services in this country. That said, Chairman Powell, as you've acknowledged, the Fed's monetary policy tools can do very little to mitigate rising gas prices. However, the increased cost of gas has an oversized impact on consumer inflation expectations. Folks see the price at the pump going up and experience the price per gallon at an all-time high. Could you discuss how the Fed envisions its ability to rein in inflation expectations, driven in large part by gas prices? Or put another way, if gas prices remain at record levels, is an aggressive response from the Fed all but guaranteed?
Well, if gas prices remain at the current levels they're at, then inflation, the problem is inflation means continuing to go up. So it isn't so much the level as the rate of change, as you know. So I think we are mindful that even though these things are outside of our control, the gas prices and food prices for the most part, that adds a little bit of urgency in our wanting to get
another
our
new
rates
low.
into
You
a
still got
place
like a point
where
before
we're
it gets
addressing
like
inflation
panicky,
directly,
but
because
374
the
flat
public
is a key
reacts
level.
to all kinds of
Again,
inflation,
this will
not
take
just
us
core
kind of to where we
inflation.
gapped
Our
down
tools
from
tend to
yesterday.
generally go to core inflation.
Remember, it was a quick rally at open
but-
yesterday,
and
but we gapped
we
down.
don't think we can use our tools to change energy prices, but we do think that they add to our desire to get expeditiously to the appropriate levels.
And clearly, Congress and the administration, the majority, has a
VWAP
responsibility
didn't
to
move too
increase
much, so-
supplies of
See,
resources,
still only
not
9 a.m.
discourage that.
Pacific.
Yield back, Madam
What,
Chair. Thank you,
12
Mr. Chairman.
Eastern.
Gentleman's time has expired. The gentlewoman from Ohio, Ms. Beatty, who is also the chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you so much, Madam Chair, and thank you, Chair Powell, for being here as you're navigating through all these federal issues during this difficult economic time. Chair Powell, after our hearing concludes, this committee will be voting on a few pieces of legislation, so I'm going to take advantage of having you here to shed some light on a few of the things that we will be considering. I can't think of a better person to give us some insight on these issues. First question is, we'll be voting on an amendment that would delay the SEC's small business advocate from conducting outreach to underserved business owners until after gas prices drop to the pre-COVID level. Chair Powell, in your opinion, will delaying the SEC's outreach to minority business owners affect gas prices in any way?
With all respect, I'm reluctant to comment on proposed legislation.
Well, let me ask it this. Let's say if it's not legislation, is there a correlation between what gas prices would be in relation to what they were with pre-COVID with inflation?
Again, I'd be expressing an opinion on someone's amendment, and if I start down that road, I don't know where it stops. I really, these are matters for elected people.
Well, would you say that the global markets and inflation is across the country, that we're seeing this everywhere?
Yes, inflation is happening everywhere now.
I'm dealing with a lot of fair housing issues in my district. And, I have a long history of working with public housing and relocating people. And as we look at issues with housing, do you think housing is any way tied to inflation?
I'm sorry, I didn't catch the question. I apologize.
Do you think what's happening in our housing market is tied to inflation in any way?
Yes, it is. Yes. So housing costs are about a third of the CPI. Housing, we call them housing services, and that's really rents plus the way it works is in effect an owner of a house.
Don't trade this. Not a recommendation. I put an order in the morning and I got filled.
Something called owner's equivalent
I went with
rent.
Nutrila.
So yes, it's an important factor in inflation.
July 15th call.
Okay.
Super liquid, so be very careful on it. I didn't spend that much. I ended up spending like $20, but I'm pretty sure they have a data with Regen coming out
giving
today
us
or tomorrow.
an idea of as some of
recommendation.
our colleagues are trying to tie things to the American Rescue Plan. They're trying to tie it to us taking care of the least of us. That if it is tied to inflation, why in other areas or countries?
I'm still short on the FedEx.
They don't have the American Rescue Plan.
I shorted the shares and I have the calls.
How do you answer more about Mr. Vargas's question? I mean, I know he gave you a litany. I'm not trying to put you on the spot with quizzing you on what their inflation rate is in comparison to ours, but I think you got where he was going with this. Is there anything else you'd like to elaborate on in relationship to where he was going?
Sure. So I'll just say these things there are differences between, even though we have a very similar inflation rate with a lot
Nah,
of the
don't
large
go
European
that far out the
democracies
money
now.
on Nutrila. I didn't
Pretty
go
close.
above 100.
There
So
are differences
I
between
had
countries,
to fill,
and the difference with the U.S.
again, I put the order in the
compared to
morning and I got
the
filled
European
just right
countries
now.
is that ours
But
is more
just be
about
careful with it. The play's already
demand.
up. I already
We have
spent
areas
like
of
even,
our,
I paid
in our
like
economy
200%
where
premium.
demand is substantially in excess of supply. That's not mainly a feature of the European economies where they're really feeling very, very high inflation because of energy prices and also food prices now. That's part of our story too. We're also feeling energy and food prices, but we have this other part that is more core inflation, that is more susceptible to being managed by our tools and is really the object of our tools.
My time is already up, but in light of your response to my first question, I just need to say for the record, I can't conceive of a single connection between gas prices set by global markets and giving advice to small businesses. And the same, I have a hard time coming up with a theory of how allowing discriminatory housing will help stem inflation. And I think my time is up. I yield back.
Gentlewoman's time has expired. The gentleman from Texas, Mr. Session, is now recognized for 5 minutes.
Thank you very much, Chairman. Chairman Powell, thank you very much for taking time to be with us. This is important to the American people who hear our questions. This is important for us as we weigh and measure and gauge your input, which we believe is exceptional. I've stated that to you in the past, that I believe that we need to have confidence in what you're doing. Today, I'd like to, if I can, without dissecting your thinking, use some of the words that you have provided for us today to see your thinking. You had stated that as it relates to the Fed, quote, we don't give advice to agencies. Now, that's a quote from you today. We don't give advice to agencies. Do you think that advice is different, which I do, than tools which you have to do your job? But I consider part of what you do best, perhaps the Fed, is advice. Can you help me to understand we don't give advice to agencies?
Well, so I think particularly on fiscal matters, fiscal matters affect people's lives. It affects industries and people and tax levels and spending. That in our system is the province of elected people. And for someone who's an appointed person who hasn't stood for election and has a very narrow mandate, I just think that's not appropriate. If we're going to wander into those kinds of things, then what would be the case for our independence? If we're going to be involved in every political issue that isn't directly connected to our work, then why would we be independent? We should just be another agency. But we have this independence, and I think to preserve it, we need to stick to what we do and resist the temptation to work on every problem, even the ones that are not assigned to us.
Well, let me say thank you for the answer. You do know, however, as we were talking about student loans, it's a rather large amount, about $1.2 trillion that is out there. You stated that you believe that would likely be dealt with in legislation. Now, that's what you said, likely to be dealt with in legislation, student debt. I think even private advice, not within your tool structure, but this advice that we're trying to land on, would be really important, because it will be, the way I see it, the next large hit to inflation. And this is why Republicans, or at least this Republican, says that I believe that this administration, the Democratic Party, are making friends with inflation. They are using the toolbox that they have of politics and money and spending policies to make friends with inflation. So my point would be to you, I sure hope that someone could send an unnamed memo to someone saying that you have an opinion, if you have an opinion on that. Next point, we have had some discussions about unemployment. How is unemployment calculated?
So you have to be actively looking for work within the last month to be and not have a job to be unemployed. If you're not looking, then you're out of the labor force, and that's so you're not participating in the labor force. So those are the factors.
So what we want to do, some members of this committee have wanted to look back and to say, well, perhaps under President Trump it was 3.5%. Now we're 3.6%, so not a big difference. And yet the huge number of jobs that are available is really the factor. When there are not jobs, that is a problem. But to simply say, well, Trump was 3.5, now we're 3.6, everything is fair, it's all done. I think the other advice I'd love to have you have from the Fed is to someone about getting people back to work. Because today, the government has given zero instructions for federal workers to return to work. And I think that it is causing a mindset among many, we don't need to go to work, thus reflected in 3.6% unemployment and millions of jobs awaiting. Mr. Chairman, thank you for taking time to be here. It's my hope that you would find in your toolkit advice that becomes perhaps more important, and I thank you, sir.
Thank you.
The gentleman's time has expired. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Madam Chair, can you hear me?
Yes, sir, we're loud and clear, and we can see you.
Okay, thank you. Okay, I want to thank Mr. Powell and welcome him back to the committee. I know it's a great deal that is going on. And Mr. Powell, I think earlier there might have been something that came from one another of my colleagues, and it was a rise in interest rate to combat inflation does come with a rise in unemployment rate and possibly contributing to an economic recession. While white unemployment rates have dropped to pre-pandemic levels of 3%, and in QI 2022, the national black unemployment rate remains still at 6.5%. And I know something you can't say, but what suggestion can you offer to help prevent black and other minority communities from facing future economic inequities as the Federal Reserve continue to raise rates in the near future?
If I heard your question correctly, it was whether we're considering additional future interest rate increases, sir?
That's correct.
Yes. So I think just last week, my colleagues and I wrote down our forecast for this year, and we anticipate ongoing rate increases over the course of this year. Yes, additional rate increases.
Do you believe that the Fed's current inflation projection of 2022 and 23 remains a good benchmark to consider, even with these vulnerability potentials growing in the upcoming months?
I think these are the projections the latest projections that individual FOMC participants submitted were submitted last Wednesday. So I think they're still fresh, and there's a range of expectations of people on the committee, but I think they're a reasonable set of projections. Yes.
Okay. And Mr. Powell, several of my colleagues on the other side of the aisle have been debating about the Biden policy and so forth, which I know you can comment on. But there is a concern where we were kind of caught off guard with the war in Ukraine, and then at the same time, our vulnerability of all of the things that we depend on for other countries. In your deliberation, when you all are working with the situation that has arrived, that came from the Russia-Ukraine war and other real estate and other stress in China spilling over into the United States, does the Feds give a recommendation back to the administration on how we should proceed in the future? Because everything, we've done a lot of things with other countries and depend on a lot of countries for resources and so forth. And it looks like we're becoming very, very vulnerable. Well, it doesn't look like it. We're becoming very vulnerable to this dependability. Do you all make a recommendation back to the administration on how we should proceed in the future?
No, sir, we do not.
Okay, and so early on you said that as prominent, that policy position should be considered by the legislature or the administration. Am I correct?
I'm sorry, I lost track of what you said there. I apologize.
I think to some other colleague of mine, you stated that those policies should be left up to the Congress or to the administration. You all don't really deal with that aspect of it. Am I correct?
Well, I'm sorry, which aspect of it?
About what recommendation could be made for all of the things that we have offshore that we depend on from other countries. Yeah. And I might not be really clear, but for example, like the gas situation with Russia, and wheat and stuff with Ukraine and stuff of this nature.
No, we're not in those discussions. Those are really discussions that happen inside the administration, the Treasury Department and the White House and the other agencies.
Okay. With that, Madam Chair, I yield back.
Gentleman yields back. The gentleman from Missouri, Mr. Lippenheimer, is now recognized for 5 minutes.
Thank you, Madam Chair. And welcome, Jerome Powell. Long morning for you here and afternoon. Question for you with regards to a quote that on March 17th, the CFPB put out in a blog on rising interest rates in which they said, and I quote, "The CFPB is the arm of the Federal Reserve System that is fully focused on consumers, ensuring that markets are fair, transparent, and competitive," end quote. Do you believe the CFPB is an arm of the Federal Reserve? And do you have any control over their actions?
Well, they're an independent agency. We have no control whatsoever of their actions. They are actually, though, legally a bureau. The law makes them a bureau, and the profits that we make off of our balance sheet, we give all of them to the Treasury Department.
I think this is going to be over very soon.
To pay for the CFPB.
So does that make them an arm?
For all practical purposes, they're fully independent in all of their policies.
They're not an arm of the Federal Reserve, then? I wouldn't consider that an arm. They have a relationship, but they're not an arm.
Technically, they're a bureau, but
they're not under you, so they're not on how they could be.
No, we have no supervision. Okay. And, we collaborate with them, we coordinate with them, we talk to them.
Well, this is overreach by the director. I just want to make sure that everybody's on the same page. This is a bunch of nonsense, so it needs to be put in its place. Chairman, you've got your hands full right now. This is Wall Street Journal from Tuesday. We had economists say recession is likely. Down here, we said stocks are not bottoming very soon. So we've got some concerns. I know yesterday you were in the Senate.
Yes, they all still read newspapers, if you're wondering.
There was a lengthy discussion on inflation, which there has been here this morning as well. And in my mind, there's 4 root causes of inflation. And we've had economists in your chair a few weeks ago, and I had one in my Small Business Committee a couple weeks before that, and I asked the same question of them. I said, it looks to me like there's 4 causes of inflation. Monetary supply, rules and regulations, energy, and supply chain / job problems that we have with workers in the economy today. And they both agreed that's basically your 4 problems that are underpinning inflation. I asked them to give me a percentage on each one of them. They said roughly 40% for money supply, 20. So I guess my concern
is
just
posted
that,
something on
if you look at those 4
buyout
causes,
rumor, it's already up.
You're trying to
got
fight
price target
inflation as
increases,
one of your
but it
mandates,
doesn't look like
and you're
it's
really under
going
money
too
supply
crazy.
is the only thing you have
Keep
any
your eye out for
ability
that.
to do something with. And even then, it's probably only half of it because Congress has control over how many dollars are put into the system with additional bills, like the $1 trillion stimulus package from last year, taxes and things like that. So it looks like you have a minimal amount of impact out of those four things. So it looks to me quite oftentimes whenever you're trying to control the inflationary stuff with the interest rate, it's kind of over here trying to do a little something when over here there's all sorts of stuff going on, and the administration seems to be in contradiction to some of the things you're trying to accomplish over. Do you ever feel like that? Do you believe that that may be a position that you're in right now?
So we're very focused on the part of the job that we can do and using our tools to do it.
Well, I understand that, Mr. Chairman, but I would seem that it would think that you're, all these other factors fall outside your purview here, and for you to try and manipulate it and everybody rely on you to solve the inflation problem by tinkering with the interest rate over here, it looks like that's a little overhyping the situation. But one of the things that is very concerning is the regulatory cost. In my discussion with the economist, he said, look, and this is the administration's own figures, last year, Biden administration the cost of compliance with new regulations was $201 billion. That's astronomical. That's a huge cost that has to be built into all the small businesses and other businesses whenever they produce products and services for sale for customers. They've got to build in an additional $200 billion in costs every year. Would you agree that's a huge driver of inflation?
It sounds like a big number, yeah. And as you know, we try at the Fed to weigh costs and benefits and take that into consideration.
Would you agree that those other four things that I said are underpinning inflation, would you agree that those probably are the four major problems?
Yeah, so overwhelmingly, most economists would not think of it in terms of money supply, but would think of it in terms of supply and demand. And although there may be a role for money supply, they would think in terms of supply and demand being out of balance. And that's how I think about it.
You know, the definition of inflation I've always had was too many dollars chasing too few goods and services. If you throw more money in, you have more money to supply to the consumers.
There's 40 plus years of history and actually Milton Friedman at the end came back and said, you know, that's not really working anymore.
Mr. Chairman, I just
maybe
got
working again though.
One more quick comment for you with regards to this. It looks to me like whenever you're modeling, when you're trying to model and you use these four different things, I hope that your models are including these things in your modeling. I appreciate just a 13 seconds to be able to finish my question.
Bro.
Thank you,
Powell
Madam Chair.
low-key just like schooled him and was like, but maybe it's working now. And then he slammed the paper.
Mr. Sherman, who is
This
also
is
the
the
chair of the
drama
Subcommittee on Investor Protection, Entrepreneurship,
like
and Capital Markets, is now
reality
recognized
television.
for 5 minutes.
This belongs on
Chairman
AE
Powell,
or
I want to
something.
thank you for bringing to the attention of this committee over the last several years the systemic risk posed by tough legacy LIBOR, some $16 trillion of instruments where we would not know the interest rate that the debtor is supposed to pay the creditor, and $16 trillion is a big problem. We passed the relevant bill back in March, and for those who think Congress can't possibly deal with a problem until after the last minute, we passed it a year and a half before the LIBOR hit the fan. That bill requires rulemaking by the Fed, and the rulemaking is supposed to be done by mid-September, and that would put us in that's the final step in making sure that these LIBOR instruments are not a subject of uncertainty, because even 1 basis point, a thousandth of a percentage point of risk or uncertainty, turns out to be significant when you're dealing with $16 trillion. So Chairman Powell, can we count on the Fed in getting these regulations out by mid-September?
Yeah, so by the way, thank you for all of your efforts on this technical problem, which have really helped move it along. And in terms of the rule, yes, we know the deadline. We know it's a tight deadline, and I'm assured that people are working very hard to meet that deadline.
Thank you. You're shrinking your balance sheet. A lot of focus on how much you're shrinking your balance sheet, but it also, what matters is the content of the balance sheet. You can invest in treasuries, or you can invest in mortgage-backed securities. If you go to an all-treasury portfolio and sell off your mortgage-backed securities, that'll probably raise mortgage rates. And we're trying to deal with housing inflation and housing affordability. So whether it's the mortgage on an apartment building that might be built, or whether it's a home mortgage, keeping mortgage rates low, I would think would help inflation. Is there any possibility that you would take a look at that and perhaps keep in your portfolio some of your mortgage-backed securities and perhaps have a mix of mortgage-backed securities and treasuries in your balance sheet?
So we're committed to having a mostly Treasury, not all, but mostly Treasury balance sheet. And we don't have that now. And you know, Treasuries are going to start to roll off, mortgages much less. So we have not decided to start selling mortgage-backed securities, but we've said that we'll look at that again when this process is further along. And if we do, I don't actually think that the things we would do would have much of an effect on mortgage rates compared to, well, the effects that we've already had.
We have obviously faced a recession risk. Biden says that a recession is not inevitable. Do you agree?
I don't think that a recession is inevitable.
Thank you. There seems to be a great debate in this committee as to whether inflation is the result of COVID and the effects of the Ukraine war, which affect the entire globe, or whether they are the result of Biden and his policies, which, believe it or not, are not applicable to Germany, Britain, or Canada, as much as we in America like to think that we are the entire world. And then we look at inflation rates, and we see higher month-to-month inflation rates in Canada and Germany than here in the United States, higher year-on-year in Germany and the UK. So we're in a situation where only if you believe that Biden is responsible for German inflation can you reach the conclusion that it's Biden's policies that have caused inflation in the United States, which is pretty much on a par with what we see in other developed countries, particularly Europe. A part of this is the idea that if Biden just gives a speech saying we'd like to see a fossil-free future, that somehow impairs the amount of oil that is produced in the United States and somehow then affects worldwide oil prices. I would put into the record this article from Forbes titled, U.S. oil companies have increased drilling by 60% in 1 year. And without objection, I hope that could be done.
Without objection.
And I would point out that we had higher oil production in this country in the first year of Biden than the last year of Trump. Then we had higher oil production in 2022 than 2021. And in 2023, we will have the highest oil production in the United States in our history. Unfortunately, that'll probably not be the lowest gas prices in our history. So whether it's good or bad, we've discovered that making speeches does not suppress oil
time has
production.
expired.
I yield back.
The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Thank you, Madam Chair. And it's just so ironic that, that my colleague is talking about oil and pumping. I literally just left my office with a group of folks from Alberta. There is an alliance of 6 energy companies up there that are going to get, by the way, to net zero on their carbon emissions by 2050.
Approaching the lows again.
474, Canada supplies 62% of all the oil that is imported here in the United States. Or they did, but they can't pump it here, or they can pump it, but they can't pipe it here because Keystone Pipeline, which was bought by the Canadian government, was canceled by this administration. So hell yeah, we can blame the Biden administration for some of this inflation. And I'll refrain from that again, but heck yeah, they are directly responsible for gas prices and what we are seeing here. So you're trying to spread this around that it's Putin's fault, that it's everybody else's fault. Meanwhile, this president is flying to Saudi Arabia and won't go to Alberta and won't pick up the phone and talk to Justin Trudeau about getting Canadian North American oil here. That is security. Let's not stop going to our adversaries and go to our allies. All right, so need to take a breath here a moment, and Mr. Powell. I'm glad you are here, and I do believe you attempt to be less political than maybe some of your other predecessors, but I do want to briefly point out something that Mr. Stiles and Mr. Timmons raised earlier regarding your comments in February 2021 as Congress was debating the Biden stimulus. Mr. Timmons cited those comments earlier. Well, in fact, your quote is still highlighted on the website of the House Budget Committee, the majority's House Budget Committee, under the headline, quote, Experts and leaders agree the country needs the American Rescue Plan now. So your words are listed alongside quotes from the Minneapolis Reserve Bank president, the president of the Federal Reserve Bank of Atlanta. And again, this is from 2021. And I just wanted to hear, the hearing record to reflect this timeline, first of all, and ask you, do you think that maybe your quote should be taken down from that website, knowing what we know today?
It's not up to me whether people take down the quote.
Well, let me tell you though, if you're trying to be apolitical, that and allowing those words to stand with this mess that has been created in the economy doesn't stand. So I guess that's up to you, but if you're going to strive for that, I would suggest at least have some of those folks sitting behind you. They might want to make a phone call. All right, we have discussed during your last visit that I've long advocated for a rules-based approach to monetary policy. We talked about the Taylor rule. I've suggested the Yellen rule. Now with your reappointment, it could become the Powell rule. I don't care what it's called, but I am very concerned that we are not looking at those guideposts and having those guideposts. I'm glad to see that that in the Fed's most recent report, you did once again include a section on monetary policy rules, which had been omitted from the previous version, and you and I had discussed that at that. I want to read a quote from the June report and then get your thoughts. Although simple rules cannot capture complexities of monetary policy and many practical considerations, make it undesirable for the FOMC to adhere strictly to the prescriptions of a specific rule. Some principles of good monetary policy can be illustrated by these policy rules. So my question is this: what principles do you believe are important when the FOMC is making decisions on monetary policy?
Well, what principles are important? Well,
and we've got a minute with a quick gavel, so please go.
So, I think to try to think systematically about monetary policy and not be, fully discretionary, to try to have a frame of reference. What are we trying to do? The Taylor rules, what they do is they embody the dual mandate. It's really what you're looking at in the standard Taylor rule and all of the spinoffs is how far are you from your price stability mandate? How far are you from your employment mandate? And that tells you it's a frame of reference. And I think that's a useful thing to have.
Okay. We got 30 seconds less. Obviously, what I'm trying to push for is more transparency from the Fed. I also want to very quickly revisit your interaction with Mr. Gottheimer, where you spoke about the importance of preserving innovation and competition in the digital asset marketplace, which I agree with 100%. In fact, Republicans on this committee included that as part of their working principles last year. So let's talk about that light touch when it comes to legislation. However, one of my colleagues also noted that regulators right now are being very heavy-handed, which I'm concerned about as well.
Expired.
And I will follow up in writing on that. But we need to be hearing about how heavy-handed regulators are. Thank you. I yield back. Thanks.
The gentleman from Illinois, Mr. Caston, is now recognized for 5 minutes.
Nice to see you, Chair Powell.
Final question,
I want to
Chad.
just start by thanking you
So
for
pay full attention.
For your
We did hit
service over
another
these last
low.
couple of years. I know you and I have
let's
talked
see where we go
before
from here at 373.
Your rhetoric, your language, making it clear to all of us and to the nation that we needed a balanced fiscal and monetary policy in response to the downturn created the political space for us to do what we did. I don't think we could have done that without your voice. And the fact that we had not only as rapid a recovery, but as equitable a recovery as we did was because we had that space. And I think history will show that we owe you more gratitude than we've given you. And I thank you for that. The fact that wages grew fastest for the bottom quintile did not happen but for that fiscal policy that complemented what you were doing. And yet we find ourselves today with people talking about fear of a recession. And I would submit to you that the fear of a recession is not because our economy is weak, but because our democracy is weak. If we were to use our tool on this side of the dais to say, what should we do to address labor markets? We'd reform our immigration system. What should we do to reduce people's exposure to high-priced volatile fossil fuels? We'd make massive investments in cleaner, cheaper energy. What should we do in response to housing supply constraints? We'd invest in housing. I could go on and on. Everything on that list is deeply, deeply partisan because the markets are looking at the United States and saying, do Do people in this line of work, those 537 of us who have the privilege to hold federally elected office, do we see human pain and suffering as a problem to be solved or as a frailty to be exploited for our political ends? They look at my colleagues who 2 years ago thought it was harder to stand up to Vladimir Putin and support Ukraine and say they're going to do the same thing again. They look at the talking points that all of you get every Monday that says, talk about Biden's energy crisis, his border crisis, don't do a damn thing. I admire your obedience. Do you have an ounce of leadership in your bodies? And so now we're left here in this moment, and I'm not going to ask you to opine on policies. I understand you can't do that. But you were so eloquent 2 years ago in saying, if we don't balance fiscal and monetary policies, we are going to be looking at a recovery that looks much more like the Great Depression or the 2008 recession, where it was a long, slow recovery. What concerns do you have right now if the only tools we use to respond in this moment is monetary policy?
Well, honestly, as you can imagine, I'm very focused on monetary policy, and I think that the thing that I assume you're hearing from your constituents at home is about inflation, and that is our assignment. You know, it's not that we control all of it.
Well, I guess, and I'm sorry to interrupt, but we are. But when I talked to the CFO of a manufacturing company a month ago, and he said, my business school teacher taught me to do just-in-time inventory, and now I'm trying to manage to just-in-case inventory. That requires capital. We talk to chip manufacturers who are saying, I need money to build, but I need a labor force to grow there, and I don't know how to do that unless I have access to capital. Raising rates is great at curtailing demand. It's also great at curtailing supply. So what concerns do you have if all we do is raise rates?
Well, you're right. There would be supply effects as well. For example, to look at housing, you know, if housing starts will slow down, and I get that, but ultimately we have a job to do, which is to restore price stability so that the economy can function well. It's really the bedrock of the economy, and it's most important for the people at the lower end of the spectrum who are now seeing their wages and savings eaten up by inflation. So we need to do that. There's lots of other things that need to be done in the economy, and that aren't the business of the Fed, but we have that job, and that really is our focus, along with, of course, preserving a strong labor market. The two mandates are equal. In the current situation, the labor market is very strong. It's extremely strong. Two vacancies for every unemployed person, 3.6% unemployment, and wages moving up. So it really is a question of getting inflation under control, and that has to be our focus.
Well, I guess I would just ask you to use your voice as eloquently as you have over the last 2 years. I'm not asking you to tell us how to do our job, but the supply pieces matter. And when the market is baking in a recession, I can justify that logic if the only tool we use are the tools under your purview. Thank you. I yield back.
The gentleman yields back. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Okay, you guys want to
Mr.
listen
Chairman,
to Kentucky?
I visited with farmers in Fleming County, Kentucky last Friday, and my constituent Charlie Masters asked me to emphasize the extreme pain he and other hardworking Americans are experiencing as a result of this inflation.
Okay, thank you. Thank you. So, ladies and gentlemen, it is Jerome Powell. He's probably going to be speaking for a little bit more. We've had a couple of other things today. Again, you had like a New York gun bill. There was just news on Intel getting delayed. I have a chart to show you of the PMI data that wasn't good, but honestly, everything we brought up on the watch list yesterday, you guys noticed it very, 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 very quickly. You all pointed it out, but people are mentioning this today as a little bit of hawkishness from Powell. He did say the word unconditional. So it was omitted from yesterday. He did not say he has an unconditional commitment. Market took that a little less hawkish, but today, early on, you guys noticed it. You called it out. He actually ended up saying it. So that was like a little bit of hawkishness. Other than that, there really wasn't anything that was said. Again, you have a couple of other things happening. We are hitting lows, but we're not at panic level. We're pretty much getting to the levels we gapped down to yesterday and kind of where we opened up on Tuesday. So nothing too crazy. Europe and the energy situation there is really bad. That was part of today as well, too. But other than that, It's been pretty chill. Oh, yeah, marijuana, too. That's why I was looking at MSOS, the banking provision. They cut out the marijuana banking provision from the competition bill, so didn't really react too much. Again, this one showed up on the scanner. I did go over the scanner during that. That's what's been nice about Powell. It gives you some time to listen. Market doesn't move as much. You get to, do the thing, but there's really nothing on there. There's a couple plays on, what was it, like NASDAQ, SPY. What was the other one? IQ, the China name. They had calls or puts on the leaps. And then SPGI, S&P Global, they got a bunch of calls, but it was a spread play. And then Neutrala, I made that one. Netflix confirms 300 staff laid off Thursday. Another one. Hawkish and bearish, just in reference to what the topic is. Pretty much bearish is when you're talking about equities and stocks or an asset that has a price to it, whereas hawkish is in reference to the stance that a policymaker is making. Pretty much it's aggressive or more or less bearish and could have a bearish effect, but it's in relation to policy. So SPY hitting a new low, 373.50 has broken. So I don't know, that's one level. I think we bounced from there yesterday. We'll even see like 372, 373 flat. But unless we go lower than 370, I really wouldn't trip on here today. I don't know if it'll move too much. Netflix layoffs align costs with slower growth revenue. Yeah, Netflix confirms, and then Intel says Ohio expansion could be delayed due to Congress. That was on CNBC just like a minute ago. Netflix butter. Oh, yeah, volume is kind of coming in on that one. But SPY's coming down here, too. Again, if you didn't notice, during the Powell speech, I kept up XLP. So this is a big, big effect here today. Again, utilities, XLU, that is leading the way. But consumer staples and what we've been getting at is some of these safe havens. It has definitely been, it's holding up a lot of today. And then energy is down like 4 or 5%. Believe it or not, I still have this little Powell shit up. Believe it or not, tech isn't doing that bad. It's even like materials. I don't know if you guys noticed that. I kept going up to Caterpillar too. Again, SPY's still hitting another low, 373. Watch if we break, even like 30 below 373, like 372.70. But it was, what's it called? I just blanked on that. Roblox could be because of the Apple Store. We will talk about that, but I was saying oil and energy is down. There's one more thing. 336 is AMD 79. Oh, wow. And then again, you have FedEx earnings today, too, after hours. We're still in that one. We're up like $400 on that play if we close out the insurance, but I think I might write it. Powell, possible Fed will reduce balance sheet by 2 to 3 trillion. He said 1 trillion earlier. I don't. He's not talking that now.
Fed and compromise your independence.
No, this guy's
precisely
still yelling.
When you should be focused.
Yeah, bro. They were all yelling today. I don't know. And then Yeltsin. Financials are down a lot, actually. Again, bank stress tests come after hours. So a couple people were asking about that. It's interesting that they moved down this much, but that is really bringing a lot of the market down here today. Again, energy. And then that's what I was saying. If you noticed, Caterpillar materials, fertilizer plays, again, anything related to oil and commodities, honestly has been getting whacked. I don't know if you've looked at some of these charts, but it's like, again, these recession fears and people talking, some people are thinking that the bonds have topped out from here too, but you're watching now the commodities and materials, they have came down hard. So this could be one of those like seasonality peaks, and then we see what happens by the end of summer, but it is bad. Again, like you're seeing what's happening with oil, but go look at Caterpillar, go look at industrials, materials, and anything in that sector. It is just like, it is bad. So that's where it's like we're either getting deflation or it's going to be a pullback here. But again, that parallels directly with the recession fears, which parallels directly here with the bond market and what you've been seeing with TLT even bouncing up. That's why some people are saying this could be the short-term top for the bonds. Bradley Yeltsin! Oh, man. Oh, no, that's beautiful. Bradley Yeltsin. Oh, my dude, I'm telling he had no idea. I'm telling you. I don't know why. I just got a feeling. Again, I really felt like he had no idea who Janet Yellen is. I promise you. It's like, you know, when like somebody names like a baseball player, you know, when they're like, oh, yeah, Kobe Maguire. Yeah, he's one of my favorites. You know what I'm saying? But like, I felt, shout out Kobe Maguire in the Twitch. I know we got Kobe Maguire, but I'm just like, dude, I know you. It's like, I feel you, but like, it's okay. I think he knows like the general idea of what like Yellen is and like who she is, but like I just don't think he knows who Yellen is. I don't know why I got that idea. Damon Jeter, Steph Curry, Steph Curry, man, Steph. And then Chad also too. I don't know if you noticed, since we have a little bit of a mini bounce. I'm not too sure if you're familiar. Here at Chattadonia, we have new crowd control. If you guys did not notice, I'm grateful for the Chattadonia military system. Unfortunately, it works hand in hand with our daddy overlords, but we have ads now. So on this channel, they constantly remind me to play them, but I've noticed that it's 100% effective at Chad control. So we love you, and God bless you. I'll ban you if you have ad block, but you won't get ads unless the Chad gets crazy. But pretty much, if I have to use crowd control, you will get ads. That it works effectively, because instead of talking smack in the Chad, you all just complain about ads. It's honestly very effective. You have no idea. Spy coming down a little bit more. A little bit more. Let's see what happens. Let's see what happens. Again, Wells Fargo, FedEx. I'm still in both of those too. Marshall ads. It's pretty funny. Chattitative tartaning. But we love you, and then somehow the bots still make it in here. Inflation hurt in Josh's pockets. I mean, you know, YouTube like hooks you up if you play ads. So that's why they want it to happen. So I'm just, you know, I need to appease my daddy overlords. And again, it's just nothing is more effective. You'll see it. Well, I could do it right now, but I don't want to do it right now. But I'm just saying, the next time chat gets crazy, you'll see it. You'll see what I'm talking about. I've never found such an effective tool. Like, y'all went from, like, making fun of the lady to just, like, 400 messages complaining about ads. I was like, wow, that's amazing. That's amazing. But, hey, man, everybody's affected by inflation. You know what I'm saying, too? So let me get some of those dollars. I'm fine with it. We'll take it either way. We'll take it either way. But crowd control is very effective. It's like a bulk taser. No, it's just that's it. It's wild. It's wild. You'll see it. Well, you'll see it. It's hard to talk about. It's something you got to see. You got to witness it. You just got to witness it. Yeah, dude, material, bro. Alcoa is down 8%. Have you guys looked at the materials? I know I said it. Some of you who are trading it, I'm sure you got to witness it, but dude, everything is down. ZW. Even wheat dropped below a 10 handle. That's amazing. Corn at 748. That could go lower. I'd love corn cheaper. Brought to you by Tesla. Fertilizer. Yeah, fertilizer, Caterpillar, Deere, anything industrial material, commodity, oil related, they have actually been like absolutely knocked off the planet. There it is. Another new low. 370. We're already below the first level. I think anything below 372 pretty much opens up the door to like 371. FedEx on CNBC. The stock's not even moving. See what they got to say.
Whatever reason, guidance or throw a curveball at us.
So, Brenda, you own their rival UPS. Any thoughts about what you're expecting after the bell?
I'm going to go pee and get a carbo.
Yeah, I would just say,
obviously having a new CEO in place can be pretty transformative. We've seen that at UPS over the last several years, and why we prefer UPS is just this focus on better, not bigger, and improving efficiency by implementing more automation, being able to eliminate some jobs of the process, and really just becoming more efficient overall, I think is going to help not only UPS, but potentially FedEx as well in this type of environment that we're in.
So, Pete, you own UPS as well. Any thoughts about FedEx bumping up its dividend? Still below UPS's dividend, to be clear. I believe FedEx bumped up to about 1.5%, UPS at about 3%.
Right. Yeah. And it was a great move. I think that was a great move by the CEO to make that decision. Obviously, the board members as well. I think they've done a lot of the right things. But there's a reason why UPS, if you just look at a one-year chart, why it's consistently been outperforming against FedEx. And I think a lot of that has to do with the ground versus international and a lot of the different, what goes into that whole pricing model. But I tell you what, I love what the company has done. I think it's been a great decision to do that. And by raising the dividend, that makes them that much more attractive. That being said, UPS still nearly doubled the dividend yield. So because of that, I'm going to stick with UPS, but I do think FedEx is going in the right direction right now under the new CEO.
Yeah, I misspoke. FedEx at 2% dividend yield, UPS now almost at 3.5%. Up next, Pete's latest trades and unusual activity and final trades, halftime. We'll be right back.
Hey, have you been interested in a long term? Get one today. It'll change your life, even if the market's down 50%. Don't worry, long-term saves lives. Brought to you by Tesla. Charge your car while investing long. Hi, good morning, good afternoon, happy 10 a.m. The market's at a low, but it's not that bad. How do you feel? Welcome, Chattadonia. Welcome. Roblo's doing good, so I also mentioned that there's a couple of talks because there's an Apple Congress bill right now about them in the App Store and all of that. Did you guys know that members of Congress have a special App Store? Actually, did you know this? Oh, man, it's great. It's so great. Did you guys know that? So members of Congress, they can literally, they download a separate app for the App Store because they all have iPhones and shit. And they do it so that it doesn't have like certain things that like track them or like data sharing. It's like it's much more, it's like a backdoor channel for them to download apps separately. So that's what people are actually, that's what they're mentioning because they're going after Apple and the App Store and all of this stuff. And they're pretty much saying it's possible, but that could be some of what is feeding into to Roblox or any company that, you know, makes a lot of money through like Apple payments and all that. I really think that could be underneath the surface kind of making a move right now. Jules says to seek stay of FDA decision, may appeal. I mean, I feel like, I don't know why they target Juul. Like you still, bro, I went to a gas station the other day and they had all the other flavored vapes and everything. I said I went to a gas station the other day because I try not to visit that place. It's so expensive. But I feel like, I don't know why they go after Juul more or less. Again, I am a shareholder, so obviously I'd take more offense to that, but still. No, like they have like 20 new kinds from China. They got everything now. It's like, I remember they disappeared for a little bit and gas stations wouldn't even sell them. And now they're all back everywhere. And then that's it. And then they just see the little Juul pods in like tobacco. And it just looks sad over to the side and nobody buys them anymore. Smile in my face, but are you happy for me? Let's see. We're still hanging out at the lows again. Watch XLP, Emma, with that news. We'll see if it ends up coming up. You think oil is done or pulling back? So I'm like, maybe this is how you know it's a good pullback because it's like, yo, all of commodities are dropping. It's not just oil, but I would attribute oil causing it more or less, aka the chicken before the egg. But it's down a lot. But with my original theory, I do believe that this is the pullback here leading into the end of summer. I mean, I'll tell you now, I don't know if they've passed it, but if they do the little gas tax holiday, then that is not going to be that makes me bullish on oil, more or less. Just because, again, it kind of is the same logic as the SPR, but you got to really think about it. If they put a discount on gasoline, one, is it actually going to be good? Again, a lot of politicians in the past, even Nancy Pelosi in March, she said that's not a viable solution, but it's pretty much implying that we might. I think people are still forecasting a lot more higher prices eventually. Again, that's why they would want to bring it down more or less. But it is a big drop. This is a big enough drop across commodities where it's like, okay, this one will get this will make you rethink a lot of things. This put everybody on notice because now oil is relatively unchanged now from March at these prices. So we'll see what happens, but I still, again, remember I made that video like right here when I said I'm going to short oil, and I said I'm waiting for one pullback, then it's going to run up crazy again, and on the second pullback, I think that will be it. But I mean, ever since then, as oil is coming down, as all of this has happened, talks of recession have definitely increased a lot more. And I don't know if it's the talks of it, but what I'm trying to say is that more or less kind of fear of the consumer, fear of the market now, that is kind of starting to spread a little bit as consumer expectations are becoming unanchored. So another new low. We're coming down here one more time. China LNG export issue. Which part about it? About them or about us not exporting? Because that's the real thing that I see next, is that we won't be able to export. And then on top of it, what Germany even said today, I think Germany even said that if Russia cuts off supplies soon with German oil, it could be a Lehman-like contagion for the rest of the world. But that's the only thing I'm really worried about with LNG and exports right now is, one, whether the United States has the ability to, or two, whatever happens with Europe's energy security. Why is D mysteriously? Well, no, it's just all the material plays. Industrials as well, too. They are all literally clapped. New low, 372 now, so we're now getting a little bit lower. For reference, we opened up 372.20 on Tuesday, and that was a little bit higher than where we opened up on Monday, which was like 370. Jerome Powell here in ends. Yeah, we got a little bit of a head start. Global oil prices will skyrocket. And again, if Europe has that problem, it would be wild. How much could FedEx move? It's pricing in about 8%. Last earnings, it moved 5%, and the earnings before that, it moved 9.7%. So a lot of people are talking about it, and one thing you'll notice, it's already moved, and it's starting to do that pin. So we'll see what happens. Lucid froze their assembly line. Stock is kind of reacting a little bigger to that. Let me verify it right here. Lucid, I don't see it coming across the wire just yet. Troy's posting it now. Lucid. Froze assembly line. I see that too. Seeing it on Twitter right now. Stock reacted a little bit. Average down on wheat. I think if it's below 1020, we're finally negative on it. Yeah, but I wouldn't average down just yet. I'd wait to see what happens from here. If the premiums, depending on what those do for some longer dated ones, but we're about to find out here. Again, I think once we see what happens with oil, like I said, I think that's the chicken that is leading everything. That is going to give us an idea here of how this is going to play out. Or, again, if things escalate to the downside more, and the recession talks pick up faster than expected and it hits us in the face, then maybe this is the final move on oil, but I don't know if I necessarily believe that. Meta 170 calls for earnings. Amazonian. Lucid starting to react a little bit again. Frozen assembly line news, but I'm not seeing it on the wire just yet. Lucid experienced challenges with the production ramp-up of debut vehicle. Target on the high again. That's discretionary, but again, the consumer staples leading. You're bouncing a little bit after hitting that low. XLU is holding up good. Again, XLU, XLP. I believe utilities are the number one right now. On the die. And Jewel is trending on Twitter. Proud of them. Proud of them. DRV going to the moon. Target is still killing it. Where's Wells Fargo? Again, banks moved a lot. Big volume there on the banks, actually, but XLF's down 1.76. Wells Fargo, they're down 3.5. So, again, stress tests come in after hours. You could still make a play, but the calls have definitely dropped, and then the stock is down a lot. Yeah, the calls went down 50% so far, pretty much since the last 2 days. The bank stress test is still occurring. It's going to happen after hours. So it's not like it happens. You just get the results. So you could even argue some people already know it and it's somewhat priced in, but that's when it's going to be coming in. The new spot card thing, I did not. What is it? I have calls on Citi and Morgan Stanley. Again, I grabbed those on Tuesday, but those plays are already down. And then we did the short on Wells Fargo, and that play is up. But I owned calls as part of that with the insurance. So got to kind of monitor it a little bit and see that puts actually did drop 50, or calls dropped 50%. There it is. Business Insider with the Lucid source. Good work on that. Become an insider. $1 a month. August puts at the 150. That may be a little too far out the money. I guess they're 225. I don't know. Where's their next, I guess 160, 170 is probably if it was really bad. But again, if it's not bad, then that's it. I still do have the shy plays. Those are down now. Again, those have till August. If we get bond volatility re-emerging with what the market does, we'll find out. But the real thing is just going to come down to now, do all these recession fears and talks really lead, and then oil coming down in commodities, does it really lead to a bottoming out or a topping of the bonds, and then things chill out and now people are more worried about pretty much impending economic slowdown more than inflation? That's what we really got to see. I keep thinking about this being the most forecasted recession ever. Amen. I mean, Powell even, that's where I said, I mean, if it is going to surprise us, maybe we're already in a deep recession and we just don't know it. That's the only way a recession surprises us faster rather than later. So that's where I'm like, it's either we see the recession effects a year and a half down the line, or we're already hitting the brunt of it, and before we know it, you just kind of fall in a full-blown, depression and deflation, more or less. Retest coming in. Well, VWAP actually moved down. It wasn't moving down earlier, but I think we're still open to a lot of volatility on the day. See the bot, 300% move. The Taiwanese bot? Or the Thailand bot? I did not see that. Let's check. The bot. Well, did the Malaysian ringgit move? Let's see them too. No, they all kind of look like the it doesn't I'm not seeing that it moved. It weakened, but I don't know if it was 300%. I think, are you talking in like the year? Even then, it was at 30 to 35. It's weakening. It is continuing to weaken, but I'm not seeing 300%. Intel, I like it. I mean, I wish the dividend was higher, but if I'm going to take something with that low of a yield, I don't think it's even above 3% yet, is it? Oh, 3.92. It's a little better. But it's like I would still rather I thought it was still at 2%. If it was at 2%, I'd rather take Walmart or even go for like Starbucks. But Intel could be good if they can recover a little bit. And I don't have any exposure to it. It's something on the list, but it's not like top tier. I think, like, let's say, you know, if I'm being patient here with a little bit of cash, and let's say a lot of other good plays start to run back up, and then they're not as attractive anymore, and then Intel is still kind of in the gutter with that yield, I would be tempted to take it. DCP, how many times? I think that was good enough right there. So however many times you said it up until that one, that ended up working. So it's good. DCP, just with all the oil plays. Again, a lot of the oil commodity energy plays, bro, they all just look like ridiculous when you look at some of these daily charts. Again, even go look at like Caterpillar, go look at like MOS, NTR. Some of them aren't as bad, but they have really, 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 really been clapped. Alcoa looks hideous. Alcoa kind of started dropping before. Again, Deere, everything you could think of. It's been a pretty wild one. Oh, you're talking bot, the ticker. Oh, y'all got the wrong one, bro. Oh, you guys are saying bot, and you had me. I started talking about the Malaysian ringgit. I was like, wait, hold up, let me go check this out. I literally, bro, I got the damn I got the Thailand bot currency. I was like, nah, man. I was like, it's weakening today, and like it's doing the thing, but you meant like oh, okay. So 300. That makes more sense. That makes a lot more sense. Bot, BHAT, not a currency. That's it. I was really about that. I was like, okay. I said, I didn't know what. I was like, what happened in Thailand? You even had like George Soros jokes too. We were all just, they was just like, it was like a penny stock. It's up 300%. Well, now I have to find out what happened to bot. I can't end it here. They triple after termination of public offering. They just rocketed to 320 that they won't proceed with previously announced underwritten public offering. So that's good. They canceled it. It's always good news. You just went heavy in margin and bought all the Facebook shares. # small good decisions. Now, listen, I appreciate the small good decisions, but I just don't know if it fits right there. Maybe we could try another sentence, but I feel you. Just be careful there on the full margin right here in June 2022. I appreciate small decisions. Again, the good decisions, SGD, baby, but we'll just maybe another sentence, it would have fit better a little bit. I don't know. He's like, I'm going all in with margin. Small good decisions. Did you not read what? Okay. August XLU's already up 100. Yeah, they're killing it. XLU's fire. We would have hit the double dip or the double up if we went with XLV2, but XLU is the number one performer on the day. Tabuli. How is that one? Remember I had a deal the other day? And then I bought Nutella stock or Nutrila. Again, that's the biotech random one. So we'll see. I sold my house and bought a lot of small NFTs. Small good decisions. Okay, that was a better attempt. However, I still don't know if that was used correctly. But it's okay. It's a learning experience. That's why you're here. So make sure you get the long term. Just little by little. What about wheat? I like wheat. I like wheat. Like I said, it's down here. I'm negative now on the shares that I got at 1020. I still have the October options. I believe they're up a little bit, not as much as what they once were. But I still think wheat is going to come back in. Like I said, chicken comes before the egg. And in this case, the chicken is young oil. So wherever young oil goes, I'm sure that'll probably start leading us. The average move, it really depends. But I mean, you could already see it today. The banks have already moved a lot. So it's like they've already priced in like 4 or 5% leading into this. You think Fed will cut rates later this year? No. I think they're going to slow down the rates by the midterms. So pretty much the November midterms, I think we're going to watch a dramatic drop in the yield curve or the either the yield curve or what people are predicting. But hence, if that does drop off, it would flatten the yield curve even more. But I do believe that by November, we'll watch the Fed go back to maybe a quarter or maybe even hold a little bit, but I don't think they'll cut rates until there's real evidence of a recession and slowdown. But if that happens before that, then we'll see what happens. You hear about the Bored Ape Club allegations? I did. So now I didn't know there was a new one, but it's the same thing. So that's why I was like, somebody brought it up the other day, but I didn't know that pretty much somebody like did another expose on something. Like I saw this months ago. I saw this probably like 4 or 5 months ago, and they redid it. Pretty much somebody else brought it to light again, kind of like recycled it. And then now, you know, I think with crypto down and all of that, people are kind of reacting to it. But I did see it. It was a little bit more compelling. I don't know what I think about it in that case. I mean, unfortunately, I would hate to watch it go to zero, but I don't even know. Yeah, it's Philion. I think that's the new video of the one who made it. It's like a YouTuber brought it back to life. But people were talking about this for a long, long time. But pretty much the allegations are that Bored Ape Yacht Club is like super racist and has a bunch of like Nazi symbolism. And then they like compared it to like Nazi logos and like the name of like Yuga Labs and when they release stuff. So a lot of it is like, you know, speculation, borderline. You could call it tinfoil, but then some stuff you're like, damn. That's because that's actually, that do really look like a logo that shouldn't be there. Okay. But yeah, kind of like cancel culture coming in hot. But people are it's coming back to life. But if you've invested in Bored Ape, I think, or you've really been following this space, you've seen this before. Like that's what I was saying. Like I heard about this a very, very long time ago, but it seems like it's making its rounds again. But this time it has a little bit more hype behind it. And then crypto's just clapped in general. Is 75 implemented or is it talk? I think it's priced in for July, but a lot of them are talking about it. But realistically, I wouldn't doubt that until we get PCE and CPI numbers, then that's when the real decision is going to come. I mean, we saw last time how quickly the market repriced everything, so I would not be surprised if the same thing occurred again. So that's why I think the data release will do it. But then the real question is what happens to the Fed futures pricing in the later months? Do they start to bounce up a little bit? Let me see if I can show you. Let's see. So like November. I need to be able to show you the chart. I have to like show you like a flip. It's like a flip book. So like here's November's rate hike odds, right? So I want you to see this is the daily chart. You notice it's coming back up right now. This means that they're pulling back, meaning that when the chart goes down, that means more rate hikes. When the chart goes up, that means less rate hikes. So this is November. This is what I'm talking about, right? But now take a look. This is October. You'll notice it's like a little bit down. Again, I don't have these all backed up and saved so you could see. But then let's go to August, or this is September Fed futures. You can notice it's coming down, right? And then let's go to August. August is coming down. And then July, this is the upcoming meeting. It's also going down. Okay? So you see it? But now, let's go back. Now that I've showed you that, let's go back to November. Remember, the chart going up means less rate hikes. So you see how November now is starting to go up over the last day or so. This is just the Fed futures. But now, look at what happens when I go to December. And again, this has to do with recession. This is having to do with what people are talking about. This has to do with people saying, yeah, maybe the bonds have topped here for the year. So take a look. This is December now. It's even higher than November. That means people expect after December, things are going to start to slow down, considerably. Now, again, let's go to January. So by 2023, what do you notice? It's a lot more vertical. Bonds topped or bottom, TLT bottom, bonds topped in that sense. Again, we kind of interchange them, but it'll be a top in bonds, but a bottom in the sense that bonds will stop underperforming. Because remember, bond yields go high when they're doing bad. So it's like bottoming out of the idea or of the bearishness, but then topping out in terms of the actual yield. The yields top, bonds bottom. So, but that's where I'm saying here with rate hikes. So we're going to find out how the data will push July. But that right there, I'm telling you right now, you are getting this early, and this is where the market is going to start leading. But coming into November, December, January, if those rate hike odds drop and kind of anticipating either the midterms and or the recession and how that will play out, just watch that, because that will literally show the market is pricing in now the Fed cooling down, and that means they're cooling down for a reason. Again, it's either going to be recession or until they want to assess where things are at after the midterm, so on and so forth. Unless inflation is stickier. And then again, what will happen? The bonds will start going back up. But it gives us a 3-month clock, like I've been talking about. Again, that would take you to September, August, September, maybe even October. And then once we see that clock go by, then we're going to really start to see what's up with everything coming into 2023. Where's policy? How does everybody feel? So on and so forth. Bank plays, we're down on the options, and we are up on the short shares. So I lost $60 on the Morgan Stanley, and then I lost $30, $40 total on the Citi, and then we made I think $100, $180 after losing on the insurance here on the Wells Fargo short, and then still holding coming into tomorrow, or at least even after hours. We'll find out. It comes in 30 minutes after hours. Like the video, y'all. Am I going to sell your ape? Probably not. I think I'm just going to hold on to it and see. If that ends up being one of the failed projects, that would be unfortunate, but I'd be very surprising. But I think I'm going to ride it out until you see the next wave in a few years. I've been through a lot of crypto waves. Again, these are my collectibles. Otherwise, I just can't now. After that NFT, I won't be able to go out to the club or anything for 2 years. Because I spent it all on an NFT. And then I had to sell my Lambo too. So, you know, you make bad decisions in life. You got to pay for them. Nah, that's a sarcasm. Relax. Some of you don't get the sarcasm sometime. But I am going to hold it. I've literally, like, at this point, if I didn't sell it at 150, why the hell would I sell it now? At this point, I'm fully committed to that bag holder logic. Sell your Camry instead. Nah, I'm going to hold it. I'm going to hold it. My auntie is non-fungible now. I seen someone with a Letterman jacket and Bored Ape NFT patch. Bro, you see it a lot. Now it's just like, it just kind of hits different. You used to see like a Bored Ape NFT, and then you were like, oh, dude, you probably got that for so cheap. You like, whoa, you have one of those? Oh, my gosh. And then now it's like, oh, you have a Bored Ape. How much did you lose on it? It's like, now it's like, it's just a very different, it is a very 180 approach, bro. Like, I saw people, I swear, like in November, bro, like you were getting like airdrops. You had like people, bro, they had merch. They're like, I got an ape coin. I got an ape sweater. I got an ape. I got ape every dog. I'm just like, dude, you were like, damn, he balling out. Bro, they were going to clubs. Bro, I never seen that many bottle girls in my life hold up signs that said like NFT or like monkey or something like Bored Ape. Like, I was like, what? This is everywhere you went. They're like NFT, LOL. You were like, damn, they balling. They balling. And now it's just like, oh, you have one of those? And then some of y'all get a little bit more vindictive with it. You know what I'm saying? But I feel Bottle Girl Ape Club, pretty much, man. They brought NFTs to the clubs. Like, it was wild. NFT you gifted is serving coffee at the event. Nice. Which event? The Polo Assassin. Nah, man, that was just, it was crazy. It was crazy is that there was all the other NFTs too, man. You know what I'm saying? Gold analysis. I don't know. I need to maybe I'll make a video with gold. I tried to touch on it on the last weekend video. But it's just like, I think what people got to realize is that anybody in gold, like your gold is solely dependent on whatever happens to the dollar right now. So until we get the dollar actually come down as a result of demand and not only inflation dissipating, but like that's the ironic part. When inflation goes down, the dollar will probably start to weaken. But until the dollar goes down, there's zero play on gold, in my opinion. So that's it. If you want gold to go up. So that's all it comes down to. So it's like if you want to buy gold and you want to think it's going to go up, you need to start having an idea of when the dollar is going to go down. That's it. There's nothing else to it. You don't need to read a Peter Schiff article. You don't need to get any deeper than just seeing the dollar. I mean, that could send you on a rabbit hole, but at the end of the day, you got to you do have to figure out when the dollar is going down, and that is what's going to open the door for a massive rally in gold. I do think it will happen eventually, but I think predicting what's going to happen with the dollar while the rest of the world and all these, the rest of the world, all these countries with inflation, what their central banks are doing, what we are doing, everything else is just like, you don't really know what the path of the dollar is going to be. Again, there's a lot of data dependent, but once the dollar starts to drop significantly, that will be your signal for gold. Or if you can anticipate it, then you will probably get right at the perfect time for gold. 374. We didn't even really bounce like that. If anything, that just brought VWAP down probably like half a point. Do you think your dollar won't come down until we get full capitulation? I think a mix of capitulation and just straight up deflation. And again, that question that guy asked, the congressman, he I don't know if you guys heard what he said. Remember I was like, that's a good question. He was literally explaining to Powell, and he said, Powell, are you telling us that you're going to raise rates and inflation's going to come down, but doesn't that mean employment and everything else is going to come down first, and inflation will be a result of everything coming down? So that's deflation. That's literally what it's saying. It's saying where they're going to raise rates so much, the dollar will get to a certain level of strength now where, again, liquidity tightens up. And before you know it, there's not money floating around the same way. And that leads to a slowdown in economic activity. That leads to all the slowdown stuff, which would inevitably bring down inflation. But he addressed it very, very eloquently. And I don't know if you guys got it on there. I did point it out, but it was wild. Deflation from increase in demand, yes. And everything else. Like it could even affect supply too. Like he's saying, if people aren't going to hire, again, if you don't have capital to hire people, or now it costs so much more, and you're not going to be able to hire as much or grow the same way, you're not going to hire people. You're not going to produce output or growth to a certain degree. So that's where he brought it up. He was one of the only people who really acknowledged that, hey, you do realize that rate hikes can actually affect supply. And that's what he was kind of getting at, where it's like there's a broader effect, but everyone's expecting inflation to come down. But with that expectation of inflation coming down, it comes with this idea that the economy is probably going to change, and if not, slow down. Didn't Lindsey Graham say we could address this from increasing supply? Yeah, people have been saying that, but the whole thing that they haven't been saying is that a lot of people have been saying raising rates only affects demand. That's it. So they're saying the Fed, that's why Powell is even saying it's outside of my control. He said, oh, yeah, I can't control the supply. But what that guy today mentioned, I wish I remembered his name, he brought up the fact that, well, actually, if you think about it, your rate hikes can affect supply. And Powell did acknowledge it pretty much. He ran him through the logic and was saying, so you're saying inflation is going to come down, but what about this that's going to happen before that? And that's what we're talking about with kind of the deflation, but that one was a little bit different. Damn, the bots just came in. Streamer recommends. I don't recommend that, man. What the heck, bro? Why y'all turning up the heat? The bots are like, whoa. I feel like that's a direct threat, bro. What do you mean? I never seen that one. They getting smart with it. He says streamer recommend. It says not a recommendation. Man, these guys are crazy. YouTube getting one. It's an honest living. Why don't the bots try not to be so body? I don't know if they know how to. The only time they try not to be body is where they have like one who comments like something and says like, "Oh, I need help," and then literally they like have it like a fake conversation. That's about it. Just tell them to stop. Hell yeah, good idea. Got to be an NPC to fall for a bot. I don't know, man. Apparently it works. I mean, that's just, I don't know, business 101. I feel like they're just going with the strategy that has worked. I feel like they have some level of conversion rate where they're like, yeah, this is it. So I don't know who we're dealing with in this world. Intel is not going bankrupt. They said they're slowing some things down because of the Congress stuff, but that's about it. FedEx had a little bounce. Oil analysis. I just think it's it's at the first drop, but oil is again, it's bringing down a lot of everything, and right now, it's just not a pretty effect for any of the commodities, materials, energy, all that stuff. So we will see, but I think if they do the gas holiday and that goes in, then I do think, I really do think that oil will start to go back up again. Send me money has a greater success rate than zero. And that's why just get out there and start knocking on doors. At least you tried. At least the bots try every day. I could respect it, but not really, but kind of. I see. I don't know. Just, yeah. Is Roblo up still? Again, we are chilling right now. It's 10:30. Alrighty. Ba-da-ba-ba-bop. I'm in a coat. Hey, happy holidays. Okay. I need to go to the bathroom. Hopefully there's not an ad. I go bathroom first. Oh, here.
Basis point rate hike, which I don't think is going to come to fruition. I thought was very interesting. And the fact that he's not dancing around the possibility of recession, he's saying that it is possible. But I believe his words today is that a recession is not inevitable.
We also heard in that clip there from the Fed chair the current labor conditions. I know you've been, Jennifer, looking very closely at the labor market as one of those longer-term wild cards when it comes to where the economy goes. Give us your sense of what you're going to be watching closely.
All the indicators, anything that has to do with jobs, obviously, is very important. And I think that's the one big source of support right now, of potential tailwind, I guess, if you call it, for the U.S. economy, is that the job market is still very, very strong. And the Fed chair alluded to that over the past couple of days. But we have seen unemployment claims, for example, starting to tick higher over the last few weeks. So that's something to keep an eye on. And I don't know how long the number of job openings can stay at or near record highs. But again, as long as the labor market remains fairly strong, I think is definitely positive for the U.S. economy. But again, how long that can stay elevated for is another question.
Are you thinking that we could pivot from passive roll-off of mortgage-backed securities into outright selling?
It's a possibility, and I think he was talking about that again this afternoon or this morning. But again, I think the Fed is going to completely focus on rate hikes themselves, and that's the one that I think the Fed chair has recently said that is the most well known to investors or to financial markets. The known quantity or the known entity of raising rates, and then the shrinking of the balance sheet is sort of taking place in the background, but still.
Thank you. So still not, dude. We're barely moving. You said take a look at PETZ, PETZ. Oh, what is this? TDH Holding, 91%. Where's that other one? The BOT, BHAT. That one went up 300. Yeah, she sounded sped up, but she wasn't sped up, so that was good. Pet squeeze play. I got a mini one. We could give you a mini one. Bot. Not the stock, but bot. Oh, it's starting to move. Just a little bit. You're parched. It's good. Man. It's good. Stay relaxed. Stay in the game. Get some water. You're moving down a little bit. Well, we could get this quick. It's good. Ladies and gentlemen, the market's coming down a little bit. You are at lows, and I am here to just drop you with a very, very simple philo. Just a little life reminder. And I like this one, and it's very simple. It's not as deep, not as deep as you would think. But I had another discussion. Again, a friend was asking me for advice. They were dealing with a lot of stuff, and I guess here's the conclusion. I'm just here to remind you on this hour that everything you will ever want that is worthwhile will require some level of work and commitment. Okay, Chad? Okay, that's the conclusion of today's Philo. So if you want to check out now, you can, but I just want to give you the reminder. I'll tell you the story a little bit. I have a friend, they're trying to figure out a lot of different things. Like, I've seen them change careers probably 3 or 4 times. I've seen them go back and forth and literally be like, all right, I want to do this now. I want to do this. They're even looking for a place to move. They don't know if they want to buy, if they want to rent, if they want to rent here, if they want to live here. Should they live with this? Should they do this? And really just a lot of different things. And I was asking them because they're like, what should I do? And I was like, well, what is the priority? Or like, what is it that you want the most? I think you got to start there with the goal, but pretty much we kept juggling around, the things that was wanted that weren't necessarily necessary, and then we were talking about how can we get what we wanted, but now what are we willing to do to get what we wanted? So it really ended up being a dilemma where it's like, okay, the thing that would be the most optimistic or the best, the optimal, was not chosen because optimal would require a different level of work. Are you feeling me right now, Chad? Are you following? So pretty much the thing they didn't want, like, again, if it was like location, the type of job, profession, their lifestyle, the thing that they would most want, the job side, it came with an aspect of you didn't really, it required more given. If you had the good job that you wanted or the less work, you got more of what you wanted and vice versa. But we were talking about this, and really I said at the end of the day, I boiled it down. I was talking to him with it, and it was pretty good. We had a very good conversation, and I think they were kind of, excited at the end of it because it just seemed like the problem was either switching things too early or just more or less not being able to find the priority, and eventually we did. And what was the priority? It was the type of job that they wanted to do and what they were willing to do. But what we started boiling it down to and everything I was talking about, it was just mainly and simply any commitment in life, anything worth having, anything where you're going to get the level of freedom you want, whether it's on the back end, the level of social ability, God knows what it is. Again, everybody has different goals with it, but I was just saying, I was like, have you thought maybe all of that stuff would come if you were able to stick with one of them and go from there? And we kind of came to the answer that, yeah, that was it. So this is a mini philo just until the market goes down here. Don't worry, we're not going to make it too crazy. But I just really want to remind everybody that, and I read it this morning, the road is narrow, my friends. The road, well, let me read the verse to you. I'm sure some of you got it this morning. Did y'all get it in the morning? Matthew 7. You could only enter the kingdom through the narrow gate. The highway to hell is broad, and its gate is wide for the many who chose that way. But the gateway to life is very narrow, and the road is difficult, and only few ever find it. So, Chad, that's what you could boil it down to. But what I was really, it's funny because I said this to them, but I'm just saying the road is very wide. You know what I'm saying? Like, actually, it's like you do have this ability. It's very wide. It's very difficult for people to pick up on things and say, yeah, I'm going to commit to something and work on it. Again, that is the narrow road that I'm talking about, where it's like saying, once you find the priority with it, but anything worthwhile is going to have some level of effort and work and consistency applied. So anything to the contrary, I would call it a wide road. So hopefully this is a good reminder. And I hope it gets some of you excited. Like I said, by the end of it, my friend was excited now to actually work in some areas, and the thing that he was kind of getting daunted by ended up turning to a net positive, where he's like, okay, now that I have the answer, and instead of trying to run away from it, oh man, it's a beautiful thing. So hopefully that helps. Hopefully you take that to the bank. But ladies and gentlemen, that is your philosophy. Make sure you're subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile, press high chat, X out the chat, hit the thumbs up button. We love you. I won't even give you the uncle, because that one was such a short, simple philo. Just wanted to give it there. You know what I'm saying? Just a little one. Just a little one for the people. Hopefully you're feeling good today. It's a good one. It's a good one. And it was a fast one, just very simple. Again, I like some of these. You know, these are you've been getting philos kind of as they happen, and I don't know. I just even with that one in yesterday, I was like, man, it's good. I think the work and commitment is beautiful, and just I want to just give a good reminder that it's necessary for everything, pretty much. Even if you want an easy life down the road, it is still going to require some level of non-easy upfront payment. Is more or less what it comes down to. But once you kind of understand that, and if you could really focus on that, I mean, it goes a very, very long way. And I was excited because that was just a good discussion with a good friend of mine. Feel the chat. You feel it, man. You feel it. Chat is good, man. It's a beautiful day. Beautiful day. The market, I mean, I don't know, man. What's tomorrow? Oh, my gosh. Tomorrow is Friday. Habibi. So those Michigan inflation expectations, those are going to be big tomorrow. But, dude, we haven't done anything. Even though we're kind of near the lows here today, like, we haven't snapped. Maybe we still got, what, 2 hours, 2 hours, 15 minutes? That's still a lot of time. 2 hours and 15 minutes left. But I don't know. We really have not done much this week. And now you do got one important inflation expectation data tomorrow. And that's it. Again, we heard from Powell. You had a couple of other things today. Germany and energy was not good at all. You've been watching oil and literally all the commodity industrial stocks drop. Consumer staples, healthcare, utilities led today. Jerome Powell brought up the word unconditional, but people didn't freak out too much. And then we have philo, and you're blessed. All week, haven't done anything. I mean, it was a short week, but definitely more tame than I would have expected. That statement summed up the JP meeting. Which statement? Said a lot of statements. And then literally, we're just hanging out near the bottom of the day, but it's not necessarily in a danger zone. God bless, Josh. God bless you. God bless you. And then we have bank stress tests after hours, FedEx earnings after hours. Again, that big data set tomorrow. I don't know, though. Maybe coming into tomorrow. Who knows? Banks and transport stocks get clapped. And then if oil has a bad day tomorrow, and then the API, I forgot that data got delayed. That one's actually going to be interesting. But keep all that in mind. But I don't know. Tomorrow may shape up to break us. Otherwise, break us up or down. Otherwise, we have not moved all week. How did your friend figure out what he was willing to work in? I don't even think he figured that out yet, but I think he just figured out the problem that was making it so confusing, is that he was trying to get a different outcome while keeping the level of work the same, which we realized that's just not going to work. That pretty much every different outcome of what you would get up front, it required a different level of effort. So if there's one aspect he didn't like, possibly working more in a certain area would have fixed that. But if he's not willing to do that, then you'll be forced to settle with the alternative. Earnings today: FedEx, BB, Smith & Wesson, Camp, and VTGN. Average down. Well, we sold and make the first set free. I would hold. I don't know. If anything, I kind of want Oxy just to play with Buffett there. Because, again, the stock jumped up and came back down. They would have been down a lot more without it. You could go look at all the oil plays. But otherwise, I'd hold on to the Conocos until we get a little bit later here into the summer session. Working smarter, not harder, doesn't mean you work less. Ooh. Ooh. Tell him. Smith & Move in New York messed up the chains. Yeah, because it kind of could be like a sell the news event. I think that one was a little surprising. I don't even think people expected that. Bro, is this real? Bro, that's crazy. Wait, is this a real picture or is this edited? Y'all see this? God hates NFTs. Make fiat great again. Anti-MetaMasker. Bro, NFTs, Ethereum is anti-American. No way this is real. Wow. I did not know there was a stand against NFTs. Wow. SPY bouncing up. VWAP came down dramatically. Kind of. I guess another 0.6 from here. So we're finally getting a little bit more of a move here over the last 30, 45 minutes. Breaking up to the upside a tiny bit. And VWAP coming down. There's a video. Wow. Gary Vee been quiet. Yeah, people were going. I think Gary Vee said something about it. And people were mad what Gary Vee said. Because some people were trying to blame Gary Vee. They said Gary Vee was the reason why NFTs started. I was like, I don't know if Gary Vee was the reason. I think everybody was greedy. And we were like, and before you know it, you had NFTs on Saturday Night Live. And then that was it. And that was it. He did hype it up. I mean, I wasn't that hyped when I found out it was just like birds the first time. I was like, this is weird. But then it eventually, I mean, I still think those are worth a lot. CSGO skins were the first NFT. Definitely. I mean, that's pretty much going to be the future of gaming now. You know, all of your digital items are just going to be stuff you could own and hopefully transfer between gaming worlds, more or less. Still like Roblox? I do. I really do, actually. Nothing's changed about that except really just the market climate and, you know, funding a growth name like that, future duration. It's a lot more of an issue at this point. Can all be regulated. No. I think only stable coins. I mean, I don't know. I just don't know why the stable coins. I get why people use them in crypto, but I also, and then the yields, but I don't know. Would any of you use a stable coin if it didn't offer a yield? Like if a stable coin was like a savings account, would you still stable coin? Does that make, because that's the only part, like that's the area that needs like legislation, or that's the one they're going to probably crack down on the most, but I don't know why like even stable coins have even became what they are. I just genuinely have not, I've never really been a fan of them. They want stable coins because they don't trust banks. Is that it? Like, is that the reason you just don't trust? But like, that's what I'm saying. If it didn't offer a yield, would you still use it? Or I get how if you actively trade a lot of Ethereum, Bitcoin, and you don't want to move it back and forth and like the spreads and all that. And, you know, I could understand that, but it's like, you could just still hold the dollar, like low key. Cheaper to swap to stable coins than sell. Yeah, you can move a lot. You can't buy cocaine online with the dollar. Yeah, but I would still argue a stable coin is not your best to go purchase cocaine illegally on the internet. I don't think you should do that, nor is that a recommendation. But stable coins is different than like Bitcoin or Ethereum. And it's not like stable coins are just like they stay stable. And it's like, I understand the ability, again, using it with other currencies, swapping in and out, all of that stuff. And again, if you wanted to move big amounts of money with less fees, less of a hassle, but it is, I don't know if it was just because the yield, but that's the area which gets a lot of the crypto regulation focus just because so much money has gone into it. I think it was just because rates were so low, and then some of these companies, in order to try to grow, they were offering 15%. Imagine if you were able to borrow money at like 0.5%, 1% on a couple million, and then if you did get away with putting in a stable coin for a year, and then you just made 15%, even 30%, and then you compounded it. I mean, it could have been wild, but now, I mean, obviously you see the downside risks now, but still. Do you know limits at 1031? Can you roll into any size property? Yeah, I think it just has to be around similar values or more. It just can't be for less. J&J Pfizer curling. Is Target still running up? Yeah. And then let's see consumer staples. They're holding up good still. XLU's doing great. One of the stupidest pumps. Today we didn't do anything. I mean, we just slowly sold off. Again, you had a little bit more hawkish Powell, nothing too crazy. And then we're chill. You know, it wasn't even any of the moves. It hasn't even been jarring. I mean, we do have catalysts if you think about it. I mean, between today now or end of the day, the earnings, the bank stress test, and then the data tomorrow. I mean, there's a decent amount going on. So I feel like the market can move a little bit calmer until we get that. But we'll find out. Tomorrow could be an exciting Friday or could be boring. It's not going to be a big expiration. It's just a part of the industrials. Anything industrial, material, commodity related, absolutely just destroyed. Lucid said they're pausing their assembly line. They're having troubles expanding with their bigger model or expanding production. Wow. Targets, dude, there's still a lot of good names going up. SPY's actually green. SPY's up 0.06. And the NASDAQ. I didn't even notice that. I thought tech. Let's see. Where is tech? I guess tech is up only 0.5%. Again, like utilities are up 3 times that. Healthcare up 1.5. Consumer staples 1.5. Real estate 1. And then tech and discretionary are barely up. And then anything industrial, financial, material, energy related is all clapped. Keurig Dr. Pepper to acquire global rights to Atipeak. And then Nutrila RGS. Wasn't RGR moving? Again, Smith & Wesson has earnings after hours. FedEx, BGS. Where's Boeing in all of this? Ooh, Boeing is not good today. Industrial, Boeing. He was doing so good a couple of days ago. And then travel got hit. Travel was really, really down on a lot of this today. I forgot there was a reason for travel. I think it was the recession talks. People are saying now, if the more fearful people get of recession, all of the positivity you had in travel and people like, yeah, they're spending and all of that, they're saying that might, if there is an actual consumer slowdown, people are getting worried on that. My read is a recession seems more likely as sooner. Chance of prolonged rates going down, we return to low growth, low rate duration, and industrial commodities get clapped. If that was the case, that would be this materializing faster and pretty much almost immediately than people expected. But yeah. OPEC seen reconfirming plans for August at 6:48. So we'll see. Again, I think the next signal will probably be, again, whether they do the gas holiday or not. Is natural gas still clapped? I want to see what, because again, they have some other legislation with that too. Labu taking off. Again, the biotechs, I want to see, again, we have a couple of biotech updates. That's why I got Neutrala. So Neutrala, they have a conference tomorrow. They're presenting data at a conference. And again, I think Regeneron is involved in that too. But the biotechs, like we said, I mean, a lot of them have been trading well below their cash value, so we'll see. How accurate do you believe the Fed has been in controlling and managing the demand side? I don't think accurate at all. I don't know. It's hard to really say. I think over the past 30 years, we just haven't really had inflation. You weren't even getting it. Things were, even though it wasn't normal, it felt a little bit more normal than what we have here today. But other than that, it was hard to move inflation over the last 30 years. Again, you got to see, like when you pull up TLT or when you pull up a 10-year bond chart, like you see it. We went over this yesterday when we were going over bonds in like the 70s and all that, but you haven't had bonds really move like this. Look at from 1986, 1987 till today. Even then, you've never had a period where the bond yields and all of this have actually gone up and we've had inflation. So this whole period, you never really got inflation. After the late 80s and early 90s, again, this going down, we never had inflation run up like this. So they've been accurate at handling it, but they couldn't get inflation even if they tried. So that's kind of a part of the problem, more or less. But very hard to say. You bought XLU yesterday. It's up 50. Yeah, they've moved pretty good every single day so far. They've been holding it down. Neutral XLU hitting a new high. We might go up to VWAP. Some of the strengthened industries today are making a move towards the high. And again, tech isn't doing the worst. Honestly, tech could be a lot more worse today, and it's not. Like this is all today, commodities and energy and anything in between or remotely related. Any company that benefited with the oil, the fertilizer, all that stuff. But this is tech is not doing bad today. It's actually very weird. It was a little bit earlier, but not now. Open interest for oil contracts rise to lowest since 2015. XBI will double top. I do now. The biotech. No, I think it has to do just whether we get the turnaround or not. I mean, I think the biotechs are very, very attractive. You need the market to cool down. You got to realize biotechs at the end of the day, if you're not playing FDA reports on them and you're not playing the data and the drugs and the release, the other half of the equation is funding. Again, is how much money do they bring in now? Do they have licensing agreements? But then now, how will they fund their operations to meet their endpoints and primary targets? So when rates move like they move right now, again, we had this talk with real estate yesterday. You know what I'm saying? Same talk is going to be here at biotechs, believe it or not. They have future duration. Most of them are. So I like the biotechs a lot. The question is, at one point, do they stop moving in terms of what the rates are doing? Because if rates go up and it's harder for them to fund it, it's going to be hard to run their business. That's why right now most biotech companies, at least I believe right now majority, like 60% of biotech companies are trading at a lower price than the amount of their book value and how much they have on cash on hand. So it's because they're saying, well, how are you going to play for the next 2 to 3 years? If rates go up like this, will you guys be able to continue? How will that affect your drug, meeting your endpoints, your costs? And then what if you need more stuff? Who knows what's going to happen? But it's a very long duration asset. So I like biotechs a lot right now because they are cheap. They are just cold-hearted, just factually cheap right now, but you don't know the uncertainty with rates and how, one company to the next in biotech with how rates affects them. It's very, very volatile because they are all so different and they're all trying to chase a different drug. So I think the biotechs are great right now. I think they're very cheap, but they are victim to a lot of external variables, especially in terms of rates right now. So we'll see. But if we get the turnaround and we get people kind of feeling a little bit better, and if they really believe we're going to get a recession and rates will be coming down sooner than rising up sooner, then I could see why they would buy the biotechs. And this could be a little bit of a bottom, more or less. I guess biotech kind of expensive today. Contracts are still kind of pricey. Kucha follow that gas. That gas is a little bit more unique, I would say, but we'll see. I mean, right now there is just a trend playing in the last week or so where anything related to oil, energy, they are all kind of moving in tandem. MRTX, Mirati Therapeutics, they're on the high. Mirati. But we didn't make it to VWAP. That's not a good sign, but MRTX is moving. Again, some of the tech plays are holding up great. Utilities have been moving higher with all of this. You think Tesla will split? I mean, I think everybody will vote for it. I feel like most people who are in Tesla, I feel like they love the splits. It's been interesting because you've seen it play out a little bit different here ever since the Google and Amazon, but we'll even see what happens. NVAX being good. Pro split. Following news on the war closely. Not as much anymore. I am watching as it relates to Europe and energy, and that was a big, big thing here today that came out. Again, Germany gave some very dire warnings, more or less. It's kind of hard to explain. Not really. They pretty much said you could have a Lehman-style crisis in Germany if Russia cuts them off too early and abruptly. Just waiting on the Fed, yeah. Again, today we did nothing this whole week. The earnings, stress tests, and then data tomorrow. Maybe we'll see what all of this week, what it was really for. But other than that, there's nothing. Take one. I only took the Neutrala for like $25. That's it, yeah. And then just riding out the other ones from yesterday. I want to get more oil eventually, but I do want it at a way. I want it near 100, more or less, if I am going to buy into it. Yeah, financials really priced lower coming into the stress. I thought the stress test may have maybe been a little chiller, but when you look at financials and how they moved into this, like, it's kind of wild. Like, I don't know, like, why is in literally leading into the stress test, every single financial stock went to a new low, and then some just well lower than others, like Bank of America. Again, J.P. Morgan. So they actually priced in pretty aggressive for this stress test. So I want to see how it's going to be. But you already got like a 3 to 5% move on financials just from the beginning of the week. What is that? 374.92. That's not bad. Almost 375. Coinbase experiencing connectivity issues. They even said they're getting rid of Coinbase Pro. They're just going to have a pro platform for everybody, I think. They're ending the rave. Meta at 5-year comparable. We'll see what happens to these 5-year support levels. Let's see what FedEx does today. But yeah, this is a big level for them. Coinbase has never frozen withdrawals. I mean, sometimes they've had issues. Sometimes it's been a little slower, but I've never had an issue depositing nor recovering money from the base. Only question, are you supposed to be running? We're not doing anything. Again, the last couple of days, we've done nothing. That's it. We had the gap down from Tuesday, which, I mean, again, and imagine how bad Friday was. And then we got to hear from Powell and everything else. But, like, we've done nothing. Like, literally for almost 21 hours, 24 hours, like, of actual market time, you've been trading at this price for a very, very long time. So, like we said, we have a lot of catalysts kind of lined up, so we're going to find out what happens. Coinbase having issues. Everyone's really sensitive to that. I guess I'd be scared. I guess with all the crypto people getting clapped. Don't tell me about no connectivity issues, man. Palantir, didn't they get an upgrade the other day? S&P dividends, risk-free in the bonds. They gave you 20 in Bitcoin to switch from coin. Wait, really? I thought all the portfolios are connected. Don't tell me about Betos. They're still up a little bit. They're not up. I mean, when we got $1 for them, that was the top on the contract. But, I mean, we still have till July on the play. They're still up like 300%. The FedEx play, I think I'm up like $300 on it right now if I close out. But if I hold it for earnings, I will be open to more risk. If Coinbase goes bankrupt, would SPY limit down? Yeah, because I think it would, because Coinbase, not only their stock, the amount of crypto assets and everything else, it would be insane. It would be insane, actually. I don't know. I think I would think it would have a lot more contagion than most people would expect. Coinbase won't let me transfer it from it to Pro. They're getting rid of Pro. Again, I don't know what they're doing. They're changing something. Here's FedEx day after moves. Yeah, so it moved 4%. Oh, it was 2 earnings ago that it moved 9%. But the last 2, it's moved between 4 and 5. This is one day after. So they've had some big ones. And then I just think they're at 2018 levels. But even back then, they didn't really move too much. It's going to be a good one. I'm excited. Solana getting in trouble, and they're getting in the mobile business. I haven't even looked at any of these cryptos. The cryptodes, man. Lifelong bull. It's good. Good. A little green here, kind of. You had that little candle. VWAP is surprisingly coming down, though. Huge volume on Labu. Then Neutrala is about to hit a high. And then again, I went through the scanner today. There wasn't really anything too appetizing. If market goes bullish, wouldn't that prolong our current situation? You could still have you might even go up once the real recession is announced, believe it or not. Again, recession fears might make you go down, but an actual recession might make you go up. But really, it just depends on where the data is, where the economy heads from here, consumer sentiment on expectations for inflation, all of that. Just really depends where we go with all that here. But once, even if the market stays up here, it looks like the next real battle we're going to have with everything, the data and everything else and figuring it out. Then the real battle that we're looking for now is when will the Fed begin to reverse course, and that is when we will have a recession. And but when that happens, then the Fed is going to start. That means the Fed is going to cool down on this onslaught against growth stocks and everything else in the market. Yeah, in a weird way, I think the actual recession will be bullish, more or less. It just depends, again, on how everything ends up playing out. But right now, it's just like if recession pretty much means Powell is going to end the biggest tightening cycle ever, then I think that would end up being bullish to a degree. Again, maybe that's what they want. Maybe that reflects a 1990s style recession, which Bullard and a couple of other people have brought up several times. The best growth names, Apple, Amazon, Google, Netflix, maybe. Netflix has kind of changed a little bit, but definitely your blue chip tech stocks that you all know and love. Ukraine wins candidate status in bid to gain EU membership. Still have those July Amazons. Yeah, those are clapped. Oh, yeah, I'll have oil. Interesting. That's coming in as breaking. Apple have been hacked by Italian spyware, Google says. I don't think he'll end until we see CPI go down. Well, yeah, but again, if the economy starts slowing down, but again, like they said today, chances are CPI slows down once the economy will slow down before CPI. That's the question. So how many of you, what do you believe? Do you believe that the economy will keep pace before CPI comes down? And pretty much CPI will come down while the economic data pretty much stays where it's at now? Or do you believe that economic activity, unemployment will go up, and then CPI will start coming down? That's really the main question. I think CPI is first. I do have the VWO. The VWO. Economic data first, and CPI is lagging. The latter, recession with limited bankruptcy, will be bullish. Very tight rope. Option B, kind of in tandem. So that's pretty much what's going to highlight everything for the next couple months here, is this question. Is that, again, if inflation eventually is going to come down, but now if it starts to come down, but then the economy is already slowed, well, then there you go. That's why you have your recession. That's why we're talking about them simultaneously for the most part. Just in a weird way, what would be the reality of the CPI? You see what I'm saying? So when CPI does in fact come down, what does that look like? Right? What is that going to mean? Does that look like a recession, or does it not? Or does CPI coming down mean, if things look good, then we'll be good to go? Another one, Ukraine wins symbolic step on long path to EU membership. I guess that news is pretty big. Again, Ukraine is like a special candidate. Special candidate status. Airbnb, we'll see here. I think anything below the 90s I've been picking up in like $10, $20 increments, more or less. Because I think our last purchase was at like 126 or 125. But I think we're right around the corner with earnings, so I might have a little bit of an incentive to wait. But like I said, too, I'm comparing it with all the other plays that I like here, because I would like more value and all of that. And really, we'll see what happens. When is Airbnb earnings? And you all got earnings, hey? That's okay. You look like a worm with braids. Oh, this guy don't know how to battle. He shook, because ain't no such things as halfway options. He's scared to death, scared to look at this theta option book, grand book. Could be, I'll go acapella. Fuck a B&B. Fuck a AMC. Good GME if you doubt me. I'm a piece of boomer trading, and I say it proudly here. Tell these people something they don't know about me. Dang, Airbnb is August? August, you gotta wait a little bit for that. Oh, it's only pricing in $2. I don't think that's for the earnings. But dang, so August, we might have to wait a little bit. So I think we'll definitely have an extra deposit on there. Do hurricanes make oil go up? Yes, usually, depending on the impact. But yeah, it drives up demand, and then if it impacts supply, yes. And again, we think that keep that in line with natural gas. I mean, right now, there's just so many questions of like, it's one thing of how it affects domestic supply, but then also the demand and pricing for anything we would necessarily export. EU agrees on conditional path for Georgia. I thought Russia already owns Georgia. I'm so confused. Georgia too, damn, I feel like they're kind of, is this going to be the escalation? Do we get, I mean, again, I would be watching Germany now, but I looked at all the premiums. They suck. I wish we could even like short the shares, but we are definitely getting a lot of the, what's it called, come back. The Europe energy and that leading to recession type stuff. That's definitely back in play right here. Tomorrow's catalyst, they're going to be the response we get here to FedEx earnings, as well as the bank stress test, and then University of Michigan consumer sentiment and inflation expectations. Those have been very, very key, especially as we've been like going over, you saw, I think it was 2 weeks ago or a week ago, after the CPI, last consumer expectations, people are getting worried. Even Powell has mentioned it. So I do believe that it will be a big data set. Waiting for oil. I just want to see how it reacts at $100. Otherwise, I'm chilling with it. For now, at least. I go to university. Do you really? So, like, are you actually in these surveys or, like, what's going on? What is your sentiment? Can we use that as a gauge or what? And, bro, we have not broken up VWAP. Netflix had a weird set of, like, upgrades and downgrades today. It's negative now, but it was up a decent amount in the morning. I feel you. Again, all of tech is surprisingly up because your safe havens are ripping today. Your energy and industrials are getting absolutely clapped. But then, like, right smack dab in the middle is just consumer discretionaries and tech up 0.5%, not really doing too much. So, pretty wild. Very, very weird day. And what it's subtle. It's kind of more confusing than not. And we did have a little bit of drama here. I mean, the dollar is strong today, but the yen is also strong too. It's like that little bit of dollar volatility, bond volatility, even from the beginning of this week. It's kind of been a little out of hand, more or less. SPY's at the 9-day moving average. I feel like we just have not moved. This ain't even a moving average. This is like a sitting average. Can we call it that? A sitting, standing average? Just this been all week. Tuesday, Wednesday, Thursday. Just 375. Limited time only. 3-day sale. Get the S&P for the same price. So I'm okay with that. I'm okay with that. FedEx has an FX divvy. Oh, yeah. I think I will have to pay the dividend. I didn't think that's maybe why it was so cheap. Those scammers. Oh, it's tomorrow. Shit. I think I will have to pay the dividend. Oh, that sucks. Scammers, dude. I know. I don't know if I cover tomorrow. No, I think today's the last day. Yeah, because you shorted it, you'll owe the dividend. Or I think the next shareholder would get it, technically. So the stock will pay a dividend. How much is it? But if you're short the shares, and you already sold the shares, you technically, I mean, whoever you borrow the shares from is entitled to a dividend. So if you sold it and can't pay them, you have to come out of pocket to pay for it. Is it $1.15 a quarter? So that would be $115. I guess I just add that to the risk there. It's not that crazy. Netflix, FedEx, the dollar's still up. Dollar been very weird. All of it. Biden calls on gun control or Congress to send gun bill to his desk. Ever used the commodity indicator, CCI? I have not. Keurig will buy rights to Antipeak non-alcoholic cocktails. You got that earlier. Just came across again. What time? It's 11. Do we still got an hour and a half? It's good. My FedEx play, I shorted the shares. So I just shorted 100 shares yesterday at like, what, 231 or something? And then I bought 3 calls for July 8th on the upside to cap the gains at like a $2,000 loss. Or if it did move big, I'd be able to make more money on it. So I have short shares with extra calls. So I'm kind of both ways to a degree, but mainly leaning towards the short side, especially with a lot of cushion here right now. We're above the sitting average, but VWAP is dropping on that one. It's weird. We are going to see Apple running. Apple's been up all day. Netflix just went green. Roku. Roblox is up all day. Roblox is like breaking out too. This thing is weird. XLF could kind of move up here. That would be nice. XLU is making another high. XLV now. Healthcare is really launching. Coin. Coin was already up all day. What was there? Wasn't there more? The other Voyager one went up too. Baba. DD. Oh yeah, no more. Wait, no more DD? Oh my gosh, what? Where's DD? DDIY? Wow, no more DD. It's new ticker. That's crazy. Bitcoin, I don't know where it's at today. I'd assume it's doing good, but a lot of the crypto companies are doing a lot better today, but we'll see. I think Bitcoin's still around 20,000. Diddy Bop. Ooh, Diddy Bop. XLV, healthcare is still killing it. We said last week the yen above 145 is bearish. You would buy puts. Yeah, just in general, that would mean the global inflation is getting worse. The weaker the yen goes, more likely to impact policy decisions in China and everything else. So if it really like broke and with their meeting and if they kind of lost control, that was kind of the idea. So people are expecting the yen to go to 150 now. But I was saying if it did it quickly, it would have broader implications on the broader market and what was going to happen there. So it's still up, but that's why it's like even then we got the reactions. But it's not really climbing above 136. But currency moves are slower. That's why a fast move would say a lot. And Bitcoin is at 20,400 right now. And Bitcoin is popping. So market's going up. Bitcoin, I think, is hitting a new high on the day. No, almost. No, Bitcoin is down from this morning. Bitcoin was at 20,700. Peru Central Bank sells 50 million in Forex market. Gasoline futures settle at 3.76 a gallon. Facebook to the long term. Let's see after this earnings or even maybe towards the end of the year. I mean, it's at a low price already, and clearly they're dealing with a lot of stuff. But, I mean, if that thing gets to 130, I mean, just kind of like Netflix, you start getting into some really low prices on some of these bigger blue chip names. I'm going to love to own some of them. GME starting to pop in volume. You're getting a little bit of hype here. I mean, again, Bitcoin SPY's kind of rallying off this. The names that are leading today are going up too. COP. Oh, oil. Oil is down 5% right now. Again, that's the worst here on the day. It's down 4.1. And then industrials, materials, financials, those are the worst. And then Somehow tech is actually going up almost 1% now, and then discretionary is 0.5%. And then utilities and healthcare are the number one on the day. But yeah, GameStop, a little pop. SPY came back above VWAP. We are now, I hate to tell you this, Chad, you're like right where you opened on the day. You got an hour and a half left just chilling right here next to open. So, again, we had Jerome Powell. He didn't really say much. A little bit more hawkish, but nothing too crazy. Bad PMI data. Oh, and that's what I need to show you. So, that was a negative of the day. That's where kind of some of the negativity started. But here it is. The last time PMIs have dropped and hit this contraction level below 50, you can see the red is the last recession. So, pretty much the economic data we did get today was negative in the sense that it's showing that PMIs and manufacturing is now hitting contractionary points we've only entered last time we were in recessions, 2008, and then that mini one we had in 2020. But SPY's right at VWAP. Right at open. Give or take. Energy popping. That would lift the market up a lot if they actually could get a move off the bottom, but you're also getting driven by the defensive names. Yeah, no, they're kind of. I think banks are getting some steam and then tech, and both of those were down. It's 11:35. Pop, pop, pop. UWMC is eating. Well, again, longer term rates, people are, again, this is the recession talk. It's honestly, it's really fascinating how it's developing here, but let's just see if this stays or not. Because again, the market could see it today and the bonds can move very quickly. I guess even the yield curve is still at 0.06, not fully inverted just yet. But it's a very interesting dynamic. Again, if those Fed futures start to move down, we're going to really see what's going on. But again, you could see how mortgage companies would benefit. Fed futures drop. People think recession comes soon. Stop raising rates that long. And then before you know it, what starts to happen? Rates start coming down again. That would benefit the mortgage providers. Bibbidi bobbidi boop. Bro, we banned like 5 of them back to back to back. They're like, I want my message to come through. Projected move on Nike. When is Nike earnings? Last stress test did go well. There was a couple of losers, I believe. And I think Wells Fargo got limited on it last time. Looks like Nike, I don't know when their earnings is. Says Nike, June 27th. So after this week, I'd say about $9, give or take. Again, with whatever movement leading into that, 4 or 5. Yeah, it's about $9. $9, stocks at 107, so just under 10% expected move. Myrna News, Vax for 6 to 11. Yeah, wins CDC advisor backing. Republican Senator Rob Portman speaks to Bloomberg. No bearing on gun safety bill. EVBG. What's this? Everbridge. They're popping right now towards the high. SPY making another candle on the upside. He's moving. Global Founders Capital, Rocket Internet's VC arm, is understood to be laying off as much as 80% of support staff. German company. Target on the high. EVBG, I don't know what's going on, but even Amazon's at the high right now, ripping. So they're killing it too. That's going to help lift up the discretionaries. Bonds are stop moving on that. XLU staying chill. XLV's making a move with the high, but everything's going back up. Again, I don't know if this is exciting or not because you're literally at open. So I don't know. You got an hour and 20 minutes. And then who's this Republican senator? Oh, he got off. It's the play neutral. I wanted to check the text is working. Subscribe yesterday. Yeah, that was the only other play that I made today. Nothing else. And then nothing really too crazy. We got Powell. He didn't say much. Again, it was a little bit more hawkish. We had that bad PMI data. And then energy had another awful day today. And that's pretty much it. Meanwhile, Tesla. Well, Tesla made those comments yesterday about their factories in Austin and Germany. He said they are a money furnace. So, but he said that's why they got to work on it. And then they had something about slowing down, I believe, the Shanghai factory. That was this morning as well, too. So I don't know how it's going to come into, you remember, Tesla might be a victim like the travel stocks where they've had such good earnings and then people were expecting them to do so well and then that got priced in, but then the stock wasn't able to hold up. That may happen here with Tesla because pretty much everything ended up coming down whether you had good earnings or not. And now depending on if you were priced in to do good or not, it just really makes you have either a tougher quarter or not. So we will see. We will see, my friends. Second wave in commodities, what you grabbing? I'm probably just going to get a lot of oil. Probably going to just get a lot of oil, more or less. Rejoin the stream alert since you can't watch all day. Thanks for your service. Thank you, my friend. And we'll let you know tomorrow. I mean, since you're here now, you got big catalysts today, after hours, that are going to lead into tomorrow with the FedEx earnings and the bank stress test. And then get ready, the consumer sentiment tomorrow. That should actually move things a lot. Dump incoming. What time is it? 11:41. We'll see maybe around power hour. It's a nice move, but like we're back to open. You're back to open. Quarters overestimated on deliveries. They might still hit deliveries. I think, again, what do they guide, though? That's going to be the big thing. So what are they talking? Oil's impact on the Indian market. So let me go to the bathroom. Follow me on Instagram at The Trading Fraternity. I love you. Follow me on Twitter, too, Real Cult News. You can even follow Troy, the first account there that I got retweeted. It's beautiful. You'll love it. And we love you. And God bless you. And, yeah. Please hold.
And inflation go up substantially. I think the time has come that the baton will move over to some of the emerging markets. And I think amongst them, India is likely to be one of the better performing markets that we believe over the next couple of years because it has the best growth story on a structural basis, right?
Well, explain that growth story on a structural basis. I mean, there's a big narrative there, I think, around India, one that's existed for a while that hasn't completely come to fruition. Maybe it's because China kind of stole a lot of the thunder in the EM space for a long time, and then India's had some political issues that they've had to sort through here. On a relative basis, what makes India more attractive than some of the other EM nations?
So I think, I call India a natural growth market, right? And what I mean by that is that if you look at some, an emerging market like China, for example, what we've seen is that China requires regular intervals of stimulus to get growth going, right? Because structurally, after 2 decades of rapid growth, China is now slowing down. India, on the other hand, does not require external stimulus for the economy to grow. And that's because we have the best demographics in the world today between now and 2032. 65% of our population is between 18 and 35, right? And we know that, you know, when you have this kind of a demographic, you have natural growth that is
But
there.
it's not just about the demographic, it's also about the economy itself, what's actually being built, what's actually being produced here. Is there sort of a scale, an acceleration, or a shift in, I guess, what the economy is producing?
Yes, I think another structural point is that India just crossed a $2,000 per capita mark, right? And if you look at the history of most emerging markets, you see massive acceleration in growth once you cross the tipping point, because there's more savings which can, you know, which is available for discretionary consumption, which drives consumption.
Right.
The second big story in India is that we've seen massive reforms by the Modi government, right, in manufacturing. And I think given the global supply chain challenge.
I thought he was going to say something on oil, but he didn't. He did not. He did not. Target's still on the high, but we're getting a little bit of a rally here. You got about an hour, 15 minutes left, Chattadonia. NASDAQ is up almost 1 now. Dow is barely up. You could probably blame oil for that one. And then SPY is up 0.5%, but it's getting a little decent now, but this is just right where we opened up at. Ooh, Tesla. Tesla's just staying a little guttered. The FedEx earnings, I think it'll be an indicator for like travel and transports mainly. I think FedEx is going to be a big one, and it's at a 5-year, it's like a 5-year support level, or even goes a little bit further there. So even with their dividend, you could see it. The stock has kind of moved today, but now it's just like, it's just not moving. What I average down on wheat, I think it's if you're already in it, you could probably hold on to it a little bit and wait for more of a margin. And again, when we see what happens with oil and commodities, but I think if you don't have it, I mean, it's a better price than the second set that we got. So could be decent, but I'm not averaging just yet. I will if I could confirm oil and everything else. I'd love to grab more, but I'm not really reacting to that just quite yet. It's been a very weird week with the dollar, all the other currencies, how we've kind of played out. And again, just this little mini demand destruction in commodities. We got to see how big it's going to be. If it's actually, is this it? Is this really demand destruction, or is this going to be now that final pullback and then we get one more run up and then there it is? So we will see. SPY 440. Beto, I still got the Betos for July. Those are holding up a decent amount. I think they're still up like 300%. But I think crypto is just going to be a lot of volatility. I would take a look at the Beto options, because if those premiums come down, I would love to grab it again, up or downside. Pretty much if crypto kind of stays pinned and Beto just holds, because those premiums, we really did steal them. So I'm still in that. I like it. Weber. Oh, dude, the grill, dude. Oh, dude, a little Fibonacci grill, dude. 35%, dude. Oh, dude, look at this, dude. Oh, dude, 4th of July is coming up, dude. And, like, the stock's, like, going to the moon. Oh, dude, that's crazy. TLT leaps to the upside. I think if we confirm that, if we confirm there's going to be the recession, but again, I mean, if inflation, and they're still expecting inflation to run out of hand, that's it. It's just going to play out like it did every single time now. Even though we were already going lower, it's just like, I think we'll do one of these where it'll hold up for a little bit. Inflation gets worse, the yields are gonna come down every time. But eventually, once there is a recession confirmed and we know it's gonna come back down, then it's gonna chill. Even bots trying to pump HT. Home Depot. Home Depot. Powell comments, how does he respond if recession is confirmed? How does he respond if recession? I don't know, but if you heard him say recession and it was actually there, then I think TLT would start to go up, and you would actually watch oil and the commodities actually stay down. When did he say told you it could happen? He has carved that out for himself. He has carving out a little bit of a parachute, more or less, by being this data dependent. The attitude we've seen Powell take over the last 2 weeks after that quick move, he is now, even though Powell will ultimately get the blame, he's found a way to he's found a way to kind of pivot in any direction and be like, well, we knew this could have happened, and yibbity bobbity boo. Yeah, I would say we didn't intend to. And I meant tools like his fave phrase, not an insult. Why are we on this channel? Because we love you, and we wanted you to have another opportunity to not get banned. So it's good to see you. Hopefully you don't get banned, and we love you. If you got any plays, we only made one today on Nutella, and that's it. Oxy price target, and Buffett bought in today again. Apparently he owns 16% now. Weber puts for September. You think he lost his credibility? I mean, I think to a degree. I think some people have, but it's like yes and no. You do know what he is going to do. You do know what he's going to do in terms of listen to the market. He has credibility there, but not necessarily in some of I don't think he has credibility in foresight, or that he actually has a broader plan beyond just responding. That I don't think has credibility anymore, but there is credibility that he will do whatever the market price is in. That's why I brought it up here today, and I was showing you guys the Fed futures and then watching what happened, after November and all of that, because quite frankly, that the Fed futures have more credibility than Powell. So I think Powell has credibility to some degree right now, but only in the sense that the Fed futures have the most credibility of anything. And that's what we watched him succumb to a week ago. Does that make sense? Are y'all following with that? Because I think that's the best way to understand Powell, more or less, is that literally the Fed futures have credibility. I don't know if necessarily Powell does, but we know he will respond to it, which gives some credibility, more or less. That's good. I'm glad it makes sense. That's where Powell can surprise and regain credibility. But it depends. I mean, because at that point, if he tries to surprise, then he will break the credibility of the Fed futures. And then at that point, we won't trust anybody. Now, at that point, all credibility will be lost. Because right now, Powell, again, he has no credibility when it's all up to consumer estimates. Again, it's becoming unanchored. Powell's credibility goes out the window. He was wrong about transitory, all of that, but by sticking to the Fed futures and giving that credibility, that is kind of the final pillar of the broader credibility, more or less. Y'all need to research the Fed. You won't be talking about credibility. We're talking about credibility in in a sense where you know what the central bank is going to do, and them clearly outlining that. That's why over the last decade or longer, it's been very easy to invest, or there's been a bull market, because you know what the Fed is going to do. At the end of the day, Fed is fighting stocks. They are fighting growth assets. You don't want to fight the Fed. They've outlined it, but now we just don't know what central banks are going to do right now. So it's not like credibility. Again, I think credibility was lost when Richard Clarida fucking top-ticked the S&P and then resigned, but we won't go into that. But it's more or less just the fact that you know where their plan is. You know the plan they're going to outline, that they're going to stick to it, and there's some credibility in them not fighting, either supporting stocks or not supporting stocks. In the green, never fight the Fed. Amen. And that's what's happening right now. That's why that's why a recession is starting to look bullish to a degree, because people are like, oh shit, if there's a recession, then that means Powell is going to stop destroying the market with aggressive rate hikes, and then that means growth will be able to come back. Funding costs won't be too crazy. People actually like that, believe it or not. TLT, FedEx ain't doing anything. Oxy didn't move off that price target. De Blasio's talking on Bloomberg about the gun bill. Recession destroying my ass. Powell doing it. Well, recessions happen naturally, but there is a strong correlation between the Fed and rates and recession. And that's why, a lot of people, again, even though the Fed won't admit it, and they say no when asked the question, most people understand that it is a tool where the Fed could pretty much bring about a recession on purpose to achieve one of their goals with price stability or whatever it may be. How much can you make? FedEx, I'll just make dollar for dollar with whatever it goes down. And then if it stays at like 355 or whatever, two or 355 or whatever, $20 higher than where it's at now, I will lose about $2,500. They can never say that. Yeah, they usually don't. I miss the 0.8 federal funds rate days. The good old days. The mortgages at 3%. Growth stocks would go up 20% a day. You know what I'm saying? Fed saying market is priced in several hikes. That's the credibility of the Fed futures. And that's like what the Fed futures are saying. And that's where kind of they've been following that. And that's why now over the last couple days with the narrative we've been getting and this recession talk, but we're not like selling off and kind of bounced from it. It's, we're watching the Fed futures start to calm down, which is insinuating that the Fed will probably be calming down around there too. Especially given, again, the credibility or accuracy of the Fed futures this year so far. Fanatics in talks to buy sports gambling company Tipico. DraftKings wins sympathies. DraftKings getting a candle off that. What is Tipico? Tipico? Yeah, Fanatics. That's confirmed. It's on The Wire and on CNBC. Chevron CEO issues statement after White House meeting. Chevron CEO says meeting with Energy Secretary was very constructive. Again, there's a buyout, it looks like, here in the sports betting stage. So all those sympathies are moving. It's super popular in Europe. Nice. I did not know what it is. Yeah, the Tesla money furnace was from an interview recorded in May. Yeah, they said, no, they did mention it. I probably should have mentioned it too here, but I mean, I don't think people saw it. It's new to everybody. That's why they're taking it. But that statement was in reference to his logic as to why he decided to cut X amount of the workforce. Granholm urges oil refiners to boost capacity to cut prices. SWK pop. And then Chevron issued that statement. They just met with the White House. Stanley Black & Decker moving good. That's an interesting one that's up, actually. Actually, SWK getting a pretty big candle there now. That's surprising because any other, like, tool maker, material, or industrial is down today. I think that one's a little rare. Let's see. Yeah, commercial services and supplies are up. Air freight and road and rail. And then building products. It's more capital goods that are clapped in the industrial sector. Summer vibes rolling slow. The volume is a little bit lower. I guess we are really in summer. It's better than what it could have been. I mean, 54 million with an hour left. But we kind of do this after we get into some of these lower levels after a little bounce. But it was kind of like that in March, too. Stanley's reshorting. I don't see anything on there. And they said recent milestones in their ESG revolution. That's it. Stanley is restoring articles in Connecticut newspapers. Is restoring? What does that mean? They're restoring. Texas Grid says it has sufficient power to meet demand. All in on OJ like orange juice. It's Fanatics, not Fanatics. Again, that's the sports betting stuff. DraftKings got a little bit of it. Biotech's making another move. SWK had that little pop, but we don't know what's going on with it. Chewy up 10. Yeah, Neutrala is hitting a high now. That one's actually good. Those plays almost doubled. But again, be careful with any of the biotechs. You could go after Regen too if you want one of those. Those have been leading and just killing it. Weber is going up again? Bro, Weber's up 40%. Another candle on that one. Are we bottom yet? Wheat's at a bottom. Corn. Dude, everything is just knocked energy related. Energy commodities are disgusting. Even energy's coming down right now. So look at, we're coming up. And energy is about to take another leg down low key. And XLU's doing great. There's talk of Stanley reshorting production and bringing jobs back to that's okay. That, and I saw that in some ESG stuff. But other than that, there wasn't anything. I still do like DraftKings. I mean, it's going to be longer duration, so we'll see. Oh, Funko, I forgot that from the morning. This one was super hyped up today. I forgot one of the banks, they gave an upgrade to it, and they said that the stock is both, like, it's a cheap stock, has a little bit of the hype, but they were mentioning the, what's it called? They were mentioning the, what did they say with it? They called it a safe haven, or they called it defensive. They said it's cheap and defensive. I said, no way. Look at that. Fubo in talks with Univision. Uh-oh. For what? Fubo kind of looks like it's building up into it. I need to confirm that on the wire, but honestly, take a look at that one. It's not showing up yet. Yep, now it's starting to pop. Again, I don't have that on the wire. Troy has that a little bit earlier here. Oh, they tweeted it. Damn, a lot of this. What do they say? Here's the tweet. Is in negotiations to renew our long-standing content agreement. Okay, so it's not a buyout. Is Univision for the soccer games? Renew status quo. But no, isn't it Univision? It gives them the soccer games, I think, right? I don't know. I don't know if it's bad, but it's just, it could be good or bad. It just, yeah, they need that because that's a big part of their thing. So if they don't get the contract renegotiated or it comes in higher, it could clap them. But if they get a good negotiation on it, it could end up being good. So weird hearing you say Univision. Why? It's Univision. Univision. Wow. That's a lot more fun to say. Univision. I got to say it in Spanish now? What? Bro, this is not, you like, and now say it in Spanish on one leg and hop around. I'm like, it's Univision. Retail puts getting squeezed. They know it. Even the calls are expensive. Again, the last couple days and some of those gap ups. Fubo's going up. SMIBE making another move. Honestly, I would just see if everything else, if oil comes down, it'll slow us down. But if oil could pop right here with everything else, it'll be good. XLU. Say Telemundo. CCO. Where are the airlines? Travel, I don't think travel bounced today. Uber is somehow up. They're fighting. Airbnb, they're in the travel gulag. First Energy's up. Enphase is up too. Bro, they scammed me on that one. They even exercised my insurance, so I couldn't even hold the shares longer if I wanted. They turned into a short. Target. Microsoft's actually really leading. Microsoft 2. Apple's almost 2. Dude, everything is up. What a weirdly slow day, man. What a weirdly slow day. They're making us wait. Televisa. Y'all just having me just say all these names now? Docu. Puts again short term now. Fubo's still going. Apple is coming up. We're a little bit higher, but still at opening levels. FedEx is coming back up a little bit. Banks are not playing along. Again, stress test after hours. Yeah, biotech, diagnostics. Again, anything healthcare related. Healthcare and then any subset, biotechs, pharmaceuticals, they're doing. Actually, pharmaceuticals are doing better than healthcare equipment right now. But they are one of the bigger runners there. Yeah, Uber's hitting a high right now. Very weird. Both them and Uber and Lyft, especially when they were kind of down a pretty decent amount, and then the rest of travel is down. Coinbase hitting a high right now as well, too. We'll know about the bank stress test at 4:30 p.m. Eastern. So about 30 minutes after the market. I'll probably give you an update on the watch list. You will watch stocks move a little bit after hours, so it really depends on what it is, but I think most of it would be up on the front. Stress test move the market. Somewhat. It depends if it's like a real bombshell one. When usually if it's really good across the board, we've seen a very, very big increase. So, like literally, there was I think it was during 2020 or like 2021, the first stress test post the Fed, once they allowed them to have the dividends back, it changed the whole market attitude. We woke up, everything was up, bank stocks are up like 5%, but other than that, there's been other instances where it's like the bank stocks will go up, some would kind of just stay the same, but then the ones, if they got pretty much negative action as a result of the stress test or negative comments, then they would just get individually clapped. July for earnings. When is the earnings, though, for Facebook? If I think it's too early, unless earnings is July 8th. Is it? Oh, I put Facebook. No, they're July 27th. So I don't know. A month before earnings, you could start setting up, but it might be a little too early. Love you, Josh. All the Chads. You're in my prayers every night. God bless you, baby. You too. Shout out to Chad. Amen. Ukraine company EPAM getting mentions after European leaders formally accept Ukraine as candidate to join EU. EPAM. Again, Lyft and Uber still up. With EPAM is Ukrainian? I guess this kind of looked like a Ukrainian candle on the 28th. Interesting. Is coin related to Bankman-Fried bailouts of BlockFi and Voyager? I wouldn't say so. I think crypto kind of just bouncing up a little bit, people chilling out. I think there's still some uncertainty, but it's kind of just had that weekend flush, and then this week it hasn't gone any lower, and there's just been a lot of volatility back and forth. Look, clap, July 15th. Oh, yeah, when is that's another big expiration. Yeah, July 15th expiration. They're going to play their little game there, and then all the earnings will come in a week or two after. I could definitely see that happening. Cop calls. If you want to go in for the oil dip now, I'm just going to wait for like one more test to like 101, 100, because then at least we'll be closer to the danger zone and finding out what's going on with it. But since I made them free there at the top, I'm going to be waiting on that one. Again, we still have about two months of time, maybe a month and a half. So we'll see. And again, this has been one of the most volatile weeks for oil ever, even on the downside. Again, it's just crazy. We were hitting 7 weeks of crude oil going up, and then all these last weeks of declining, or the last week and a half, already set a record on the size of the decline. I'll wait on oil. I will. The first drop from oil this was a big one. This was enough. You haven't seen oil move like this since this first time we dropped. And again, I think a lot of the legislation, the job owning, and what's going on with it. But I think once they put the gas holiday, it'll start going back up again. But for now, I think it's a mix of talk, the legislation, and then also, like we said, recession fears and anything like that. That is what is what's making this a lot more interesting. But this is big. Again, it's now everything is dropped with it, though. I'm telling you, when I go and look at every single commodity chart, when I go look at all of these fertilizer plays, anything related to agriculture, anything connected to the commodity energy boom at the beginning of the year, they are down so bad right now. So even though this is just a pullback, now when we mix in the recession talks and everything else, it's like, okay, this it's dropped enough to make you really it's dropped enough in the last week to really make you have an idea. So I'm glad that I called it before it dropped like this, because I think I would have been a little more confused. But since I had a plan before and it's kind of playing in line with that, I'm pretty, I think it is going to come back up here. But this was a big enough drop and it did it fast enough to really make things, to really make everybody kind of question and think about, okay, what do you think is going to happen? I feel you. It's dropped. It's dropped. PCG, they traded sideways. I feel like I'm trying to buy the dip. It's never going to move. PCG, is it utilities? Yeah, PG&E. They got clapped recently, and then all of a sudden, yeah, right? I think with utilities, if we do watch it, but I think PGE is limited because all the fire bullshit with all of the with all of the arson that they've done, or all of their responsibility. And because didn't they have like I don't know if it was bankruptcy, but they had some level of liability towards it. I think that's why PG&E is staying like that. I have FedEx short shares, and then I got calls just in case. I don't know, are the calls moving up now? It's still pricing in about $15 for today. My calls are kind of the same price on the ask, but the spread is huge. Coin about to test. You having fun tonight? It's like old times. They're good. That's good. Have fun. There's a lot. I mean, even then, the market's been kind of boring the last couple of days, but I do think it'll be interesting to see how we respond to everything from after hours to the morning. That one should be good. This is the dumbest market. I would replace dumb with fearful. And this is probably one of the most fearful markets, which is makes sense with all the moves that we're getting. NBA draft tonight. I don't know. Last draft pick was in a Taco Bell commercial, and it had me really questioning life. Because then I was like, yo, he eats Taco Bell too? But I'm like, no way he could eat Taco Bell. How he got that 12-pack? I'm like, I don't get this. Are we telling the kids to eat Taco Bell and they going to go to the NBA? Like, is this part of an NBA routine that they eat the cheesy crusted chalupa? Like, hold up. Honestly, I was tripping out. Honestly, I didn't know what to. Honestly, I had a lot of questions. I really, really did. How come God lets the market makers get away with so much shit? Because he lets you get away with a lot of shit. You know what I'm saying? So that's kind of how it works. And then it like all wraps up into a philosophical debate on free will. And then that could even tie into love and a lot of other things. But let's just boil it down to, I think everybody in the world has some level of leeway at some point in time that they quote unquote get away with. But I feel you. Eat a Taco Bell party pack? Nah, man. Nah. Appeal, FedEx. I thought that would have moved the options up a little bit. Banks haven't done anything. It gives kids in less stable financial households hopes they could be an NBA star. Nah, man, everybody got the Taco Bell commercial. I think all income saw that. Now we just going to have, there would have been a future kid. He was about to make it out there, bro. He was a baller, and then he's just like, yeah, I'm going to add Taco Bell to my routine, and then boom, he just develops a stomach ulcer, and now he can't play basketball for 15 years. No? Okay, too intense. Maybe it's a plot to another Sandra Bullock movie. I don't know. But still, anything could happen. I'm just saying, I was confused. Anything could happen. 50 in XLF. It'd be good to, if you didn't buy any bank calls with the banks down so much right now, it might be good. Excel says they acquired ADD additional. Oh, an additional. I was like, who's ADDL? They acquired 23,000 shares of KKR. Has anyone ever seen one of these market makers everyone talks of? Yeah, you don't really know them too much. I think Ken Griffin is the most popular market maker. You know, half the time I thought Ken Griffin held the home run record. You should have saw my face the first time during the GameStop stuff. And they just brought out some old white dude, and they're like, this is Ken Griffin. And I was like, what? I said, this is crazy. This man don't have a home run. He don't. I said he could not take it deep in the left field. There's no way. There's no way. But then come to find out, he was just scamming us all with naked short sells. Funny how that worked. Yeah. Ken Griffey, not Ken Griffin. Oh, I know. I've learned. Okay, Chad, F everyone. I'm adding more UVXY puts. Honestly, you can still go ahead with that trade without saying F you everybody. You know what I'm saying? I think you would have at least 49% support from the bearish Chads based on the survey of 5,000 Chads. So I think you're good, man. You're good if you feel that way. I would say just control the budget, control the premium, and you don't need to bring everybody else into this trade. It's gonna be fine. It won't let you hit the like button for some reason. We've been having some issues. I don't know. So check, make sure your like button works. If not, you might have been. I don't want to tell you what. I just make sure your like button works. If you click it, it should have an animation. It works? Okay, that's good. Yours didn't? Your membership will come back here in a couple days. If you didn't notice, you are on another channel. But now that you've taken the time to realize you're on another channel, please make sure you're subscribed to this channel with the bell. Otherwise, you're just going to miss out on all of the watch lists. You know what I'm saying? Sad. Hate to have you miss out on the watch list. Hope nothing happens. That's crazy. You might have a problem then. Big problem. Frankly, I gave 10 UVXY plays 100% on this stream. Okay, so why are you saying F everybody? I think then this situation is resolved. We will now mark your case as closed. You will not be able to reply back to this message. Thank you. Crisp. Oh, yeah, I did see that one. Man, we should have bought Amazon or something. I'm not loading up on oil just yet. We're going to find out. We are going to find out. Again, I want to see as it tests near $100. Why the transfer streams I like to mix it up a little bit, you know. I told that to my girlfriend. She did not like that. She made me sleep on the couch. I said, what? I said, you got to mix things up a little bit. You got to change it up. And she just looked at me and gave me the evil eye. So I don't know. It's hard to say. Oil? Nah, oil. Wait, what oil ticker? Oh, I would probably go for Conoco or Oxy at this point. I like Conoco a lot. That was a fire play from the first time. Again, we still got a lot of time on it, but with Buffett and Oxy too, that could be a good one. But I'm probably going to go for oil futures personally. FedEx put premiums. FedEx even barely moved though. It's only down 0.7. If it ends up higher, let's see. FedEx, all I did was short the shares and then I bought calls. You get sensitized to your stream. Oh, man. Honestly, I'm going to just give you a philo on this. I don't want to. Should I ruin it? Oh, it's something. It's so relatable to what you just said. You're going to have to bring that up at another time. Technical analysis. Oil is at support. The loss gain on FedEx. So I shorted at like let's just keep it simple. I shorted at 230 and then I bought a call at 235. So since I'm short on the shares, anything above 230 I would lose. But since I bought a call at 250, I can't go higher, or 255, I can't go higher than $25 a share, which would be $2,500 loss. But now, since I spent money on that contract, I have to factor that into my loss. And then I bought more than one contract so that if there was an event, there was a big move to the upside and they surprised to the upside, then I could actually make more money. But if it ended, let's say the stock by July 8th ended up at 255, so my options are worthless and I'm down on my short shares, my max loss would be around $3,000. $2,500 for the shares and then $500 for the insurance. Microsoftian. So basically you want FedEx to go down. I want FedEx to either go down a little bit or go up a lot of bit. Does that make sense? So it's like I'm pretty much I'm more bullish neutral, more or less, because I can make, if it goes down a little bit, I'm already making money on the play. I already have like what, $3 or $4 per share on the short. So then I would lose on my insurance, which isn't that much. But if it goes down a little bit, oh, you thought it wasn't coming, ladies and gentlemen. No, 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 no. It's there. Bradley Frizzle and the Peach Nation, baby. Rise up. The peach is here, ladies and gentlemen. Oh, never a moment too late or too early. It's glorious. Horn. Oh, the persistent peach, bro. Oh, they don't know anything about that life. They don't know any. Oh, my God. They were doubting. They were doubting. They didn't know where it was. They were whispering. They were like, where's the peach? I don't know if the peach is going to come in. No, it came in, baby. Look at that. Look at that. Wow. Wow. Right on time every time, baby. That's perfect. 30 minutes left. Amen. Amen. Bitcoin, BTC, yes, Bit is launching. Honestly, Bitcoin has gone up $400 in the last 20 minutes or 10 minutes. I guess 18 minutes. This rally does not make sense. I mean, we're a little bit positive today. Again, there was more bullishness. There was bad data, all of that. I think the higher we go into green, I could accept a neutral on the day, but this is getting, we're starting to push almost 2% on the NASDAQ, which is wild, but I could only imagine if oil was actually up today, but data was down. If anything, I think it's just more or less, you're watching some factors of inflation calm down. But again, recession odds come up with it, but I don't know if it's that bad. Just when you thought the peach appears, it's beautiful. Wow, it's beautiful. You will learn about the peach if you don't know. Eventually, you will learn. It's just something, it's like one of those things in life. Like you just pick up on it. I don't know how to describe it. Beto. Everybody in the Betos. Where's XLU2? FedEx is launching. Someone's buying oil right now. Won't be enough, even though XLU bonds are giving up here today, which will be interesting. Again, the dollar was up, but let's see if that flipped. The dollar barely moved, and again, even though dollar was strong today, the yen also strengthened. Oxy news that was out earlier. Top analyst says Buffett to buy Oxy outright at 93. Well, if he bought in with another set, he already owns 16%. Think consumer? No, it can. I think if expectations are unanchored and they keep going up, but again, people are saying consumer expectations are at risk because energy and gas prices keep going up. What has happened in the last week, oil has just gotten demolished with every food and every other commodity. So now that's chilling out a little bit. And again, now that's why like the recession odds are picking up and the other things are coming down. So it's creating this weird outcome more or less. Why does he say he want Oxy? I think Buffett has just bought into Oxy, I think, 3 times this year. And then he's cut other stuff, but he's been just going in on it like big. So nice move back, bro. We're getting towards the higher end, but now the difference is that NASDAQ is up a lot more than earlier in the day. Early market on close, 543 to the buy side. Conflex temporarily suspends withdrawals due to recent volatility in crypto and uncertainty involving one of its counterparties. So there was another crypto brokerage getting clapped right now. Either brokerage or fund. 377.45, bro. You've moved like almost 5 points off the bottom today. I know it doesn't feel like much. I think some of you felt it more here. Now you're really, really watching that come to play. I think oil leaps. I think it's a better idea than it was a couple weeks ago today, but you're going to have risk. So you could buy an oil leap today, and I think it would still be good, but you still might go down 30 to 40% on the contract, is what I'm saying, is that oil could still move, and you are definitely in the midst of some very violent oil candles. So if you want to try to catch the knife, that's fine. But that's what I'm saying is like I would wait till it kind of bases out a little bit, and then we could go from there. So much risk takes one government bill to clap everything. Well, right now they're talking about it. This is just like the first SPR where the job owning can bring it down, but depending on what bill they put in place, it will be easy to price in the future from there, essentially. Again, if they do that gas tax holiday, that's bullish for oil. Again, just like the SPR release. So if we know, usually the talk of it will scare people more, but once it does happen, you'll get some pricing in effect, and then we will be able to go from there. Robinhood money, I think they're going to be safe for the most part. And then SPY is about to hit a new high on the day. Oh, my goodness. Dude, we're 2 points away from 379. We'll see if we close out from there, but you have 27 minutes left. Oh, my gosh. I'm sorry, dog. People are coaxed back in. Not really, because we're still low, and you're getting bullishness driven by recession talks. You see what I'm saying? So it's like, I don't know. It's like if you were very watching the micro and reacting, it looks like people are getting drawn in and all that. But at the end of the day, it's like the SPY is still very low. And the most bullish thing about the last couple of days has been the odds of a recession increasing because it would slow down Jerome Powell. Pretty wild to think about. There is a lot of money on the sidelines now, and a lot of money trapped in underperforming assets. XLU going up again. Those plays are up 200% now. Yep. They trapped in memes. That's part of it, but there is still, again, even institutional, anybody who would be in the bonds or anything. I mean, it's just like people are still, they still got a lot of money on the sidelines. I mean, the short term, you might have some opportunities. Again, you even have ex-dividends and a lot of those coming up. But at the end of the day, I mean, a lot of people are still forecasting more or less just uncertainty down the line. And then Amazon's Amazon's up 3.4 today. So again, earlier in the morning when we were at this level, tech was not doing this good. So keep that in mind. Recession equals good, yes. In the short term. That's what we've been talking about a lot today, because that is what is happening. And a recession is good in the short term, or that's how the market's interpreting it, because that would bring the bond yields down, and that would mean Powell will stop clapping the market. So it's like a couple moves ahead. It's like a chess move. It's like losing your knight if it puts you in position to trap the queen with a diagonal piece or whatever. You know, it's something where it's like, obviously it's not good, but this is part of what people are reacting to. Again, it's kind of counterintuitive, but we'll see. Again, because then once the recession gets here, if people will react negatively to the recession, but in the meantime, a recession or odds of a recession would slow down the Fed at this level right now. $11.65, reload NDX. It's okay to quote that. Yeah, feel free. I mean, don't hold it against me like Powell. Y'all can quote anything on here. I mean, I am talking all day. Bro, I found one of those pages on TikTok. I found a page, and it was just a bunch of clips from the stream and a bunch of my quotes. And I was like, oh, shit, I said that? And I was like, oh, shit. And then, like, they would word it. They were like, Josh talking shit about this. I was like, I wasn't even talking shit. But it sounds like that once you titled it like that. So I feel you. I was like, man, that's crazy. It was cool. No, I was down with it. I was like, that's cool. I was like, that's really cool. Can we get some new merch? Is your current merch not breathable? It should be breathable enough to last you until the next season. Objection. Out of context. What? UVXY setting up. Good calls. We've had some good ones. I mean, a lot of the pain has just been suffering from the bad stuff we've been holding. There's been a couple swinging and misses, but, I mean, we've done very, very well on agriculture, commodities, energy, and a couple of random ones. And then we got to start the year a little bit prior there with the Longeveron. That was like November, bro. That was crazy. Dude, it's so crazy what has changed from November. Like, that still blows my mind. My B-Day today. Happy birthday, baby. Amen. Ladies merch. Yeah, we got to get that. And I think we have, what's it called, too? We're going to have some kids' clothes soon. But it's still breathable. As long as that's the focus. We've been doing a lot of breathability testing. You know. Turned 21 this week. Happy birthday, man. Let's go. Let's go. 21. I'm jealous, bro. I'm jealous, man. 21 years old. Y'all lucky. Y'all lucky. Make the most. Make the most of all the time you have. And you better be hopeful as hell, bro. You know, that's because that's like the young person phenomena. Is that like people young as hell out there getting mad hopeless for like no reason? Or like they think like they have so much time, but they're like, oh, I feel so behind. I feel like this. Oh, my gosh. And you see all this in like the social media. You'll see like a 12-year-old who bought like 18 houses. I get it. It happens. You know, some 12-year-olds really be like that. But still, you know, just don't worry about it because I'm telling you, man, you had so much time. And I wish, like, I always understood I had a lot of time. And I feel like I understood this young, but like you never really fully grasp it until you get older. So unfortunately, I'm just here to tell you, I'm jealous of your youth that you possess, and I really encourage you to make the most of it. I encourage you to make the most of it. Would you rather be how you are now or go back to 21 with zero money? Do I get to go back to, like, is it 21 at 2022 or like, I don't know, but. Like, I don't know. If I'm 21 again, that means everything was still the same price when I was 21 and I just had zero money. I would go back to that 100%. But I'm 21 with zero money right now. It's different, though. It's like if I was just fresh out, if I was 21 today, I would still do the same thing, even if the prices were here. Now, if you asked me if I was 21 with a hairline, you get a different response. I would just become a model. And I would say, screw investing. I'm out. Are you kidding me? What do you mean? I get paid to take photos. You're insane. I'm out, bro. I'm out. That's it. They gave me 21 with the full head of hair. Oh, that's it. You gave me the knowledge too a little bit. I guess I get into bonds and some other things eventually. But that full hairline is going to keep me back at least another 10 years of investing. I'm going to go live this full-headed hair lifestyle. What do you mean? This is crazy. I didn't grow up with this. This is nuts. Y'all got full heads of hair. This is insane. We haven't made a long-term here in a month so far. So we're still holding, but we're going to see. Again, I got the ex-dividend coming up for young JP Morgan. So we got to decide by July 4th whether or not I'm going to take that or not. When I started growth stocks or real estate, both. But I definitely did a lot more growth when I was younger. But again, I did real estate too. I've always said I've made the most amount of money in real estate, like dollar for dollar. Like, again, I just don't know if everybody accurately understands that when I say it. This is what I was saying when we sold out the Bitcoin to go make the house flip is like people, like you got to understand what the real leverage is. Like making 10% on $1 million asset is the same thing as making 400% on a $25,000 day trading account. So I've made more money in real estate, but the fastest money has came through stocks. But when I started out, it was stocks and real estate, but I was mainly in growth stocks. That was a big thing. I was all about growth when I was there. I did grab a couple of smart names here and there, but I was young and I was really about the future. Honestly, I still am. But it's weird how, I didn't expect the future to kind of go in some of the directions here. I was right on a lot of the early stuff, but that's kind of when what I've been on with it. So early on, I did get a lot of growth. So it's like if I was 21 years old right now, I had zero money, you gave me my knowledge, I would probably go into a lot of growth right now, and I would still probably try to get my bag in real estate because I could understand that's what it was. I've always said it. You guys have asked me if I was broke, if I went broke, what would you do? I would go get a job at Costco or Starbucks, maybe the Apple store, and then I would do stocks and real estate in the meantime until I found a real estate deal that would have allowed me to quit the job and then get more money investing in there. I would build a long term. I would weigh it probably more to growth 70-30, with growth side at 70% since I'm a little younger and we got to get that bag up. You know what I'm saying? But that's exactly that is my game plan. I'm telling you, that is my full-blown parachute at life. I've already figured it out. So God forbid, but God willing, we see what happens. But that's definitely what I'd be doing with it. Got to pay off my student loans. Nah, you got minimum payments, dog. Minimum payments. You know what I'm saying? I would pay the minimum payments until I found a real estate deal. And then once I got a real estate deal, that would pay off all my loans. You see what I'm saying? You see what I'm saying, bro? They don't feel me. Why don't they feel me, bro? That's always, I'm telling you, that's it, man. That's how I would do it. So I know some of you have expenses and other stuff. It doesn't mean ignore them, but you don't have to stop. You say, oh, I'll get into real estate once I pay off debt. That'll take me 5 years to pay off. No, pay what you can, handle yourself, but then get into an income profession and work at something that could get you all of that way faster. Remind me, save up for real estate in the future. Amen, bro. And I promise you that will not do a disservice to you. You know that? Like anybody who's like ever heard anything with real estate, and I'm like, yeah, save up. Even if you believed it was out of reach, even if you believed it was whatever, even if you thought it was going to crash. But if you're like, okay, and you like started saving up money for it, started looking into it and started doing it, I promise you, that will never harm you in the future. All that's going to happen is you're going to have a bunch of money saved up, a bunch of money ready to go. You're going to be fully in tune with what's going on in the industry, and then hopefully running into opportunities so you could do something with it. But very, very good. What's pumping the market at this point? I couldn't tell you. Maybe the bonds kind of coming down here, but I think it was tech coming back up because tech was not this high when it was here throughout the day, but now all of the same things are leading. So utilities, real estate, healthcare, consumer staples are running, but now discretionaries in tech, they've gone up a whole percent while everything else has moved up a quarter. XLU popping. Again, it's going up, but not as much as tech and discretionaries right now. Those are what's really, really leading the market right here. So, again, we'll see if we could get past 379. It's only like 3/4 of a point here. So, let's see. And how much time? 3 minutes till 10-minute rigged. Again, I think we had an early market on close, 500 million buy side. Till rate for an hour. The weed. It's interesting that they went up with that bill getting cut out. Nobody listened. No, they were listening. All the people who listened though were just high because it's a weed stock. So they they just forgot to type back. They meant to tell you thank you because that is moving up a lot. They just were I feel them, man. You know that happens sometimes. So it's cool. Don't hold it against them. Push it. Oh, bro, I did so many. I did so many resistances during the Powell speech. Maybe insiders already saw stress test results. Maybe, I mean, they're coming up here. Literally, bank stocks now in the last 30 minutes, they probably recovered like, I'd say 0.75% right there as a whole. Even Wells Fargo recovered like 1.5%. UWMC, I need one more good earnings report. But again, rates coming down, people thinking this is the top on rates. That's why UWMC is coming back up right now. When's their ex-dividend? Did we already miss it? Yeah. That's unfortunate. BlackRock is up. Yeah, they're considered a bank. So what could happen about the stress test? Unless it comes in really bad and like they do a stress test where they factor 10% inflation and the whole economy crumbles, I don't think all of the S&P will get affected by the stress test. I'm more leaning towards, I think a couple of banks are going to do really good and have like 2 to 3% moves, and then I think there'll be at least one bank that'll probably drop 5% more or less. Yeah, Roblo killed it, like absolutely killed it. 10-minute rigged, 378.65. It's going up here now. So let's see. 1 point is the Powell close from last week. So let's see what happens. Coin 55, put. This time I'm bullish on FedEx. It's okay. It happens. MO is going to the moon. Again, they said they're going to fight the Juul deal. I mean, they dropped like 7% yesterday. I think non-event like past stress test. I think non-event for the whole market, again, unless there's like a big bombshell. Otherwise, I think there'll be at least one big loser, and then I think most just above average winners. Yeah, crypto in the last like 30 minutes, an hour has actually gone up. Bitcoin went up almost like $700. Tillery, everything's going 378.57 though. Let's see. That 379 has been very, very stubborn. Apple, Lumina's on the high again. More biotechs, dude. Crazy. Even Nutrila. Bro, that thing even kept going up. Oh, yeah. Did I tell you guys I sold out the XLU? I sold out one of them. I forgot to tell you. Not a recommendation. Don't trade. You will lose money. I sold 1 out of 3 for 60 cents. I bought all 3 of them for 60. So I just 200% made it free. And now we have 2 free XLUs coming into the end of the month. Or middle of July. And then Nutrila's up a decent amount. Chili's? Chili cheese dogs? Unbelievable rip. It's unbelievable that tech is up. I would have been okay with like a fairly neutral day, but like I didn't really see a 2% tech day. That kind of crept up on us up until like right here, but like tech is up a lot. It's a very it's a not really there's no clear-cut signal from today. That's just it. Just safe havens are up, defensive names are up, energy, materials, industrials are completely clapped, and then discretionaries to tech and communications are just smack dab in the middle, but now they're just leaning overly bullish. So it's just very hard to see what are these moves? Like, are people buying defensives, but then they're also buying the growth? Again, I think the recession discussion explains a lot of it, especially with the bonds, but everything else is kind of it's a little all over the place, to be honest with you. It's good that we're up on a day where, you know what I'm saying? Up on a day where energy is down so much, because if everything was down and energy was down, my goodness, today would have been very, very ugly. You would have been right back down to like the 370s, 360s maybe, because again, energy, materials, industrials down a lot. It's big, but the safe havens are up, and then everything is in the middle. So they bought tech hard like later in the day, but for the most part, people bought more consumer staples than tech today. So like you have way, way more people buying even utilities. Utilities is the best on the market right now. So you had more people rushing into utilities and consumer staples than tech, even though Amazon is up 4%. So very, very weird week, but ultimately very weird day with no clear-cut signal as to what is what is the motivation between what is being bought today. You can't really tell when you look at the industries, whereas the last couple weeks, the industries, they've given us a lot to really determine, okay, this is kind of how the market's feeling. No one can trade this. Index 2 up, 2 down. Scammers waited till let's wait till Friday and then July 15th too. But we will find out, my friends. We will find out. It's gonna finish at 3. It won't go past 379. So we'll see the last 5 minutes here, but I doubt it. Yeah, it's not at 379. Very stubborn. Look at even they flip VWAP positive though, or at least the VWAP is curling up now. But very interesting. It'll move sideways until PCE, maybe, or even any other CPI. But no, but I think tomorrow, again, FedEx earnings, stress test today after hours, and then the consumer expectations tomorrow. I think consumer expectations are really going to move things. Why is one level more stubborn? I mean, people have different reasons. I like to attribute it to real world events. So like that's why like my technicals, quote unquote, is a little bit weird. Because my support levels are based on what happened. I try, since we watch every day, we genuinely have a good idea and could like look back and see this is what the market was reacting to, so on and so forth. In this case, that 439 or that 379, that's literally where we closed after Jerome Powell came in with that very big rate hike a week and a half ago. And ever since then, the market gapped down and went to a brand new low the next day. People did, remember, it did not hold up. So ever since then, that has just been a very pivotal shift in policy, pivotal shift in the Fed futures, even recession odds, oil, everything else. That is just a huge, huge point. So that's why I think that level is a little bit more stubborn and has a lot more meaning if we're above or below that because of where the market was and what happened from then. Hi, are you making sure I see your message so you go on your other account to see if you're not banned? So then you can make sure I see your negativity. The mods just banned you the first time, or they hid your message. How about I banned you now? I love you. Chattitative tightening. I'm sorry, positivity got you clapped. I don't know how that would work. I could assume if you go into positivity initially and then your expectations are too high and you're more motivated by the expectations, and then your expectations get disappointed, and then you backtrack from positivity, it's going to make you think it's a lot of hoopla. So I could totally understand. I've been in those shoes before, but you'll be good to go. Just keep it positive either way with enough time. Again, with the market and everything, this is just the season, so you will be able to recover and you will do good. I mean, again, as long as you stick with it. But if you do back out and change everything, that was kind of the philo today, because that's what we notice. Everybody does back out, and then eventually it's hard to build something, but I got to land this plane. All right, ladies and gentlemen, We're making our final approach. As we make our final approach, you guys are holding on to any bags. Please stow them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisle with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That is right here at the Trading Fraternity Terminal. Then we're going to be taking out promptly around 6 a.m., 6:10 out of sunny San Diego, California. As we make this final approach into San Diego International Airport, it's about 80 degrees and sunny. A little bit warm out there. Again, kind of cloudy here and there. You had some thunderstorms yesterday, but things should bounce back out of nowhere like the S&P 500. We are no longer under COVID guidelines, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate your guys' business. If you're interested in the Colt Rapid Rewards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully you have a wonderful evening. Let's go, baby. Bring it home. It's game time. 1 minute. Let's go, baby. Go, 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 go. Let's go. You got to wrap it up again. Stress test after hours. Finalize any bank plays. Consumer expectations tomorrow. FedEx earnings after the bell. We got to play. Oh, man. What is going to happen? What is going to happen? But you better find... wait, that's it. Did the bell ring? Oh, yeah, that's it. Ding, ding, ding. Ding, 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 ding. Oh, no. Let's go, baby. Let's go, baby. Oh, GG. Oh, all my real ones. Everybody, hold on. Hold on. I need the GGs in the chat. I don't care who you are. Do you believe in good sportsmanship? Are you really in the game? That's what matters. Are you really in the game? Let's go. Let's go, baby. GG. Oh, yes, let's go. I don't care if you made money or lost money, because I know you learned something. If you really in the game. Oh, if you came with a good attitude, GG. If you were negative, GG. If you were positive, GG. It don't matter. I got to forgive you for the sins, baby. Oh, let's go. Remember, if you drop a GG, you got to give a GG. Let's go. It's all love, baby. In the heat of the battle. There's people really working on their craft. There's people really in the game. Real Mo. They don't feel me, Chad. Let's go. God bless the real ones. God bless the people in the game. God bless the lurkers. God bless the active people, the positive people, and guess what? God bless the negative people. Oh yeah, they don't feel me. They don't feel me. It's blessings. It's GG, bro. It's GG. That's all I'm saying. It's GG. So I don't know if you got clapped today. What if I'm just GG? I love you. Let's go, baby. God bless the Colt. Amen. Amen. Amen.
Money on stocks, I can show you the top. Every bottom my pop, both the key and the lock. Don't believe me, just watch. Use my freedom a lot.
I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Did it, we made it, and the bitches had. We did it, we made it, baby. Chad, how do you feel? You did it. You made it. Through Friday, you... Oh, there it is. We did. Oh, my God. Oh, wait, another one? So, Chad, we did it. So, Chad, God bless you. That is the day. Thank you all again for being here. Wait, where's FedEx earnings? Did we get FedEx out yet? I don't know if FedEx came out. So before any of it comes out, we're going to see here a little bit. It should be exciting. But Chad, I love you and thank you guys again for being here, especially if you showed up with the good. Oh, FedEx, they guided up or no. Yeah, they guided up by $2. So look at that. No. They guided up. Hold on. And I love you. Thank you. Shout out to members. Shout out to non-members. Shout out to Stream Alerts. You are blessed. Hold on. No, they guided up adjusted EPS for the full year, $22.50 to $24.50. The estimate was $22.30. Let's see. Operating margin was 9.2. Estimate was 9.3. They got adjusted EPS was 687. Estimate was 687. Revenue was 24.4, but estimate was 24.5. So they came in below on this quarter, but their guidance was very, very good. So we're going to see how this one plays. I work with FedEx. I'd say we took a fat L. I mean, the guidance is good. I could accept the guidance. Again, it had a big pop. Right now, it's moving 4%. It was pricing in 8 or 9. So we're going to see any other updates, but pretty much everything missed. So revenue and EPS for this quarter missed, but then guidance for next quarter increased, and people like that. And I think that's the only update we have so far. Hold on. We did it. We made it. GG. 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 I'm going to use this opportunity to take a sip of water. Yeah, adjusted EPS forecast beat. Everything else missed. And that's it. Stress tests come out in like 20 more minutes. Or 27 minutes to be exact. 27 to be exact. So, before we get anything else and before it gets crazy, like I said, I love all of you. Thank y'all. 2.2. Let's go, baby. Oh, look at that. See, y'all like the video. I hope you know you didn't have to. You may have been pressured into it, but we love you. And that's what it's about. We got our own little culture. But for real, y'all didn't have to like the video. Thank you for showing out today. Again, I haven't even given my full thank you to every single person and everybody that I think really deserves it. But if you liked the video, you clicked on the video, you shared the stream, I hope you know you supported everything we got going on, and you made sure somebody else could get it, baby. So free news, fast news, whatever you want to call it, baby, we bringing that to you. So thank you for supporting and holding down the channel, baby. We would not be here without y'all. So God bless you. But before I get into that, can I just say thank you to the members? Because now I got to thank everybody. I don't have to. I just want to. Because, again, I'm telling you, on this membership drought that we've been experiencing because we're on a new channel, make sure you realize you're on a new channel. You have nothing to worry about. By next week, we'll be back on the other one. But I'm just saying, now that you realize it, look at, without all the membership badges, it used to be, you used to see it crazy. And I'm just saying, man, these are all the people that we have. These are all the people who could find us no matter where the channel goes or not. And that's what I'm saying, man. It's a commitment from the members. I just hope you guys know that we wouldn't be here without you, and we really appreciate everything you've done. You guys have supported the message. You supported the mission. Without you guys, I hope you know you have helped make sure it reaches a lot of people, okay? I sound like it's PBS advertising right now, but you know what I'm saying? This is brought to you by Public Service Advertising. You make sure your message has gone to... God bless the chat, baby. God bless. So members, again, thank you. We would not be here without y'all, for real. I love all of you, and thank you for your support over the years. Don't worry, the badge will come back, and I see y'all. It's good, though. It's good. It makes us, you know, it makes you not take it for granted. It makes you really see with what you surrounded with every day. So it's beautiful. Big shout out to the stream alerts. We make sure they don't miss it again. Some people today, I know you guys getting back to work and whatever it may be. We're going to make sure you don't miss anything. And we love y'all and appreciate your support as well, because we wouldn't be here without y'all either. So God bless you and thank you. And finally, last but definitely not least, they don't feel me. Everybody, the non-members who show up with a good attitude, baby. You know what I'm saying? The non-members who show up every day, the people who work on their craft, the people who come to make the most of this, understand that you have access to information. I'm always willing to help, but you have a lot of individual minds here in the chat every day, and you see it. You see their commitment every single day showing up. And I'm just saying, man, if you come in here every day with the right attitude to make the most of it, actually learn something, actually be a benefit, actually contribute, salute and hats off to you, because not everybody makes that decision, and that's what make the world and chat go round, baby. So God bless you, and thank you for holding it down, and shout out to the chat, baby. Oh, they don't feel me. They don't feel me. It's a different breed, bro. It's a different breed. You know what I'm saying? It's a different breed. It is a different breed, so I love the different breed. Y'all built different. Y'all really in the game when not everybody's in the game. You like on the narrow road type vibe. You know what I'm saying? Like harvest is plenty, the workers are few type. Oh, come on. I hope they feel me. So, Chad, that is the day. I love you. You have a wonderful, beautiful, glorious day. Make sure you check out the links. First link for the Scream Alerts Bootcamp and Real Estate course. Oh, God bless the free long-term alerts, too. It's free. Free 99, but check that out. Second link, all you got to do is click this channel, and you're going to get everything you need. You're going to get plays. You're going to get ideas, whatever else you want. And then you'll get to see my workout progress, because apparently that was the running conspiracy. You know that. Someone said, they're like, you're only posting these videos so that you could document your workout progress and hold yourself accountable. And I was like, I kind of, in a way, not really. I don't know. I think I get more made fun of for other things, but I feel you. I'm down with it, okay? But look it, okay? It's right here, man. We love y'all, so make sure we see you here. And it's good to get on there, and I hope I see you there, okay? That's every night. And shout out to the Watchlist gang. Shout out to the people who are paying attention. You got a gem on it yesterday. I'm going to focus in on it today, but we're going to have some good things to cover. So hopefully you guys have been holding it down, and shout out if you have, because I know it's paying them dividends. But God bless the Watchlist gang. We'll see you here tonight around 4 or 5 p.m. Pacific time. Third link for that membership badge. Fourth link for the merch. Oh, it's beautiful merchandise. It's very breathable. You may have heard about it. You may have heard about its elite tier breathability is what we call it, okay? So God bless you, and hopefully we see you on there. It's good for you, okay? Become a member. We already did that. Follow me on Instagram at the Trading Fraternity, okay? And if you follow me on Instagram, you will get followed by a fake Josh who's going to try to sell you some fake crypto. So if they ain't selling you breathable merchandise, you got the wrong one, okay? So just keep that in mind, but follow me on Instagram. I love you. And then finally, last but not least, I had to take out the other links. They weren't working for some reason. But we got the prayer request wall, ladies and gentlemen. So like I said, man, we're grateful for all the people who support what we got going on, the people who share the video, the people who like it, the people who keep this positive. Because again, man, we don't do anything here. It's all freemium. We don't charge anybody for anything. Again, if you talk a little smack, I guess we might hit you with an ad nowadays. That one worked very effectively today. But all in all, man, we here to work. We come here with the same mission year after year after year. We have never expected anything from anybody, not even a positive comment. That's why it's always so beautiful when you do see people be positive and you see the love and support that some of the members and non-members have showed, because it's like, dude, we don't expect anything. We ain't charged for anything that we wouldn't give out for free right here, man. And at the end of the day, the only thing we got in this description is that prayer request wall, baby. This is the only affiliate link we got, is an affiliate link for us to pray for you. That's it. Me and my mom like to pray for y'all. That's it. That's all it is. Okay? And I know the Chad does it. I know we got a lot of prayer warriors, baby. And shout out my prayer warriors. You know what I'm saying? So I'm excited about it, and God bless you. But this is what we believe in, man. It's just the attitude of supporting people. We want to put your jersey on our back and just hopefully, hopefully have you see what you want to see in this life and accomplish what it is and root for your goals. And we want to see you win, and we want everybody to be like that, because, again, if it can't flow through you, it ain't going to flow to you. Oh, they don't. I say it every day. They don't feel me. You know what I'm saying? Like, that's something, honestly, you could say every day and they won't feel you. Because a lot of people they fail to get this concept in life. And this is what keeps people down in their life, and they don't realize it. And this is what keeps people down and bitter their whole entire life. I swear to you, Chad. Okay? Honestly. And I don't want any of y'all to be bitter. And hell no, I don't want you to be down. You ain't going to be down. You ain't going to be mad about it. But I'm just saying, this is really what it comes down to. For real. Okay? If it can't flow through you, it won't flow to you. You got to be able to feel this vibe. This is why it's so important that we foster this mentality, okay? Oh, I hope they feel me. I hope they feel me, Chad. I hope they feel me, Chad. You know, I really hope. I really, really hope. But, hey, man, we praying for you. I hope you pray for everybody. Even if you don't fill it out, we going to pray for you. If you ever want to do anything for me, pray for me. And honestly, thank you if you have. I was going to say, it works every single day. I'm just telling you, it's just something different when you know you got people who got your back like that. I feel the prayers, man. It's just something different. I see it every morning. I see it every night in the chat. I see people always posting it. They're like, I'm praying for you. I'm praying for you. You saw Johnny in the chat today. He was like, I love all of y'all, man. I'm just saying, like, he's like, I got you in my prayers every day. And I'm just saying, it's something a little bit different, you know? A little bit different, you know? So it's beautiful. And I just think it's a blessing, man. So God bless all of you who have been praying for all of us. You are amazing and you are a blessing. And thank you for all of the positivity. And like I said, you ever want to do anything, pray for me. And we are praying for you too, baby. But that is the day, man. Okay? Go read the books, Richest Man in Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. Good books for you. And if I could just drop the philo on you, one little thing, man. Like, I don't know if you felt it the same way, but I hope you guys know anything worthwhile in this life, it is going to require that level of work from you, okay? If you want something less, if you want what everybody has, that is a wide road. That is not a narrow road. And I'm just saying the wide road is easy to attain. It is easy to get a lot of the basic things. And if you don't want to separate yourself or if you want something really special, I'm just saying it is going to come with the narrow road. It is going to come with work. And I hope all of you understand that a lot of consistent effort and a lot of consistent hard work is going to build something for you that you will be able to get less, where you'll have to work less to get more out of it. And that's the game plan, baby. So just don't forget it, all right? But, ladies and gentlemen, you are going to get mad at me. I'm not even going to play the song today. I'm going to have to get the train moving right now, and we're going to have to get going. So we're going to get you the watch list as well, too, so don't worry. But, ladies and gentlemen, that is the day. That is all we have here today. Don't worry, you are not alone, okay? You know what I'm saying? They told me it was impossible. I told them alone. You know, you ain't alone, okay? I told them alone. So you ain't alone, Chad, okay? But please, I need some energy today. I need energy for the rest of the day. I need 120%, 150. Even if you could do 105, that's good enough. Just put it in drive. Don't wake up in neutral tomorrow. Be excited. It's already Friday. I'm going to lose my voice before Friday. No way. Hold on. Let's go crazy. We could go crazy tomorrow. If you guys are down to go crazy, it depends on the workout that I get today, but I'd be down to go crazy. But listen, all I want you to do is finish the rest of your day with a little bit of energy and do something positive and focus on the hard work. And I want you to really understand you will reap what you sow. And think about the garden that you're building, Chad. And just remember, the hard work is always good. No matter where you go around this world, hard work will always take you far. Amen? Amen. They don't feel me. But Chad, I love you. Have a wonderful evening. Go do something positive and just know that you blessed and get ready for a good Friday, baby. And let's close out this week. It flew by, honestly. It flew by. And we got a couple catalysts on our hands, so we'll see. We will see. But ladies and gentlemen, that is it. I'll see you in the morning. Don't forget why we're here. Why we keep going, why we in the game, and why we work hard to stay on that narrow road, and why we know the road is narrow and that the other road is very, very broad, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. No, yeah, we're not going to see. FedEx was kind of a non-event. So, like, right now I'm down $6 per share on the short. I mean, we caught that 3% leading into it, so it's not bad. But their earnings were kind of in the middle. And then we're going to see the bank stress test. Just watch for the winners and losers. It'll be good. But I do have to get going. I love you. Oh, shit. Did I just close it? No, I didn't. No, we good. But I love you, okay? So have a wonderful day. I see you tonight, and I see you in the morning. Peace out. Oh, hey, wait, Josh. I want a stress test, pony. Yeah, in consumer confidence. Oh, wait. No, I told you, his voice got clapped. Wait, am I allowed to do this voice? Are they going to ban me for this voice? What do you mean? I told you I'm the best voice out there. I told them they don't want to hear it. So it's misinformation. I'll tell you what misinformation. You're misinformation. I'll tell you what's misinformation. They said it was $1 menu at McDonald's, and I spent $1.25. I said, what is this? We talk about this at the dinner table. I said, what do you mean? So we're going to do a holiday on the $1 menu tax, okay? Because I know it feels Americans, and Americans feel it. So don't worry, the $1 menu is going to be 99 again. We mean it. You're price gouging son of a McDonald. Okay. All right, I love you. Again, happy Hanukkah. Okay, you have a wonderful, beautiful sunset morning.